Good morning, everyone. Hello. Hello. Super. Thanks very much. We're going to start now, if you don't mind. That would be great. I'm always so relieved when it's lovely and warm in the room when you start. I don't really like having a cold morning start. So good morning, everyone. My name is Vivienne Arts. I will be your chair for today. So I'll be guiding you through the program, introducing our speakers, and also reminding you to do various things throughout the day. We have a jam-packed day today. So let me just start with some of the logistics first. Then I'd like to offer a few opening remarks on the themes of today before I introduce our first two keynote speakers, followed by a panel, and then we'll have our network break. So just some housekeeping. The usual, of course, is around fire exits. We're not expecting a fire alarm today, but if there is an alarm, the exit is behind you and over there on that wall, so make your way through there. Most importantly, on a day like today, it wouldn't happen without our sponsors and partners. So I just want to say a huge thank you to Aker Systems, to Ropes & Gray, to Clyde & Co., to RIT Technologies, and to White & Case for your tremendous support today. Thank you very much indeed. Before today, you would have each received an email which actually gives you access to the event app. If you don't have that app already, it's a great idea to download it because in it you've got the agenda for the day. You also have the full biographies of all the different speakers, which is great. And you can also do some networking and such like on the app, which is really good. Today's event is both live and streamed, so there's cameras at the back. So hello to the virtual audience. We always have some people who have dialed in because they're not able to be here actually on the day. So just to make you aware that we have two audiences, both those in the room and also those online. And then the final thing is if you need the Wi-Fi, it's actually on those little square paper things in front of you. And the password is super easy. So use the Wi-Fi so you can download the app because we are currently underground, which is no bad thing because the weather is going to be pretty grotty today. So we've chosen the right day to be inside and to be doing stuff. So I think that's all of my admin done. Let's start the day. So welcome everybody to the Data, AI and Future of Financial Services Summit. It is an annual event which has been taking place for a number of years now, and actually the scope and the theme has grown and enlarged as the issues for financial services have broadened. It used to be much more focused on data and tech, and of course now we see the AI piece as being extremely prominent. So we meet at a moment when AI has moved from experiment to infrastructure. And in financial services, the question is no longer if we use AI, but how we can scale it safely, fairly, and competitively. So the latest survey from the Bank of England and the FCA shows that around 75% of UK financial firms are already using AI. That is far greater than any other sector in the UK. And we anticipate a further 10% are planning to adopt AI in the next 3 years. Foundation models now account for 17% of all AI use cases, and roughly 1/3 of those use cases are delivered through third-party providers. So this is a significant shift from just a few years ago. AI is no longer confined to fraud detection or basic automation. It is embedded across risk, customer engagement, trading, compliance, and operations. The FCA and Bank of England research also highlighted that firms are actively grappling with governance, accountability, and monitoring effectiveness, and they're identifying constraints such as data quality, legacy systems, and skills as key breaks on further deployment. And I know you know all of these things because you're grappling with them yourselves. So zooming out to the wider economy, the UK's AI sector has grown rapidly. We're generally regarded as being third in the world. Government analysis shows that there are more than 5,800 AI companies in the UK, an increase of 85% in just 2 years. And the sector now generates almost 24 billion in revenue. So the UK is a genuine AI nation. We're strong in research, we're strong in fintech, we're strong in financial regulation, and we have a deep pool of talent, of data-rich institutions. But leadership is never a one-dimensional issue, and we should be honest about where we are leading and actually where we are following. So on the leading side, the UK has three real advantages. First, regulatory sophistication. I know sometimes we don't appreciate our regulators as much as we should, but certainly from an external perspective, our regulators are regarded as world-leading. We've been at the forefront of thinking about AI in financial services, with the FCA and Bank of England running multi-year surveys, discussion papers, and now a dedicated review into the long-term impact of AI on retail financial services. That kind of evidence-based supervisory engagement is something many jurisdictions are still building. Secondly, we have ecosystem depth. We have a combination of world-class financial center, a vibrant fintech environment, and we have a strong AI research base, which is anchored in our universities and our specialist labs. And that means that we can move from concept to deployment quite quickly. Thirdly, we have early mainstreaming in finance. Industry analysis suggests that by 2028, virtual assistants alone are forecast to generate more than $2 billion in software revenue across financial services, making them the leading AI use case in the sector. That tells us that AI is not just a back office efficiency play, it is actually reshaping how customers experience financial services. However, there's also areas where the UK is following or perhaps at risk of falling behind. We are not the largest AI investor globally. The scale of capital being deployed in the US and in parts of Asia, particularly into foundation models and AI infrastructure, is on a different order of magnitude. We're also operating in a world where the EU has moved first with a comprehensive AI Act, setting a detailed, binding framework that many global firms will have to comply with as a baseline. At the start of 2026, legal commentators noted both the ambition and the criticism directed at the UK's approach. A desire to be pro-innovation and agile, but concerns about legal certainty and fragmentation across regulators. In other words, we are leading in experimentation and supervisory dialogue, but we are following, or at least still defining our position on hard-edged, cross-economy AI regulation. So the question for UK financial services is this: how do we turn our current strengths into sustained, long-term advantage while closing the gaps that could hold us back? So that brings me to the UK's AI strategy, and in particular, the UK AI Action Plan. And the National AI Strategy, as you've no doubt read, sets out three broad pillars: investing in the long-term needs of the AI ecosystem, ensuring AI benefits all sectors and regions, and governing AI effectively to build public trust. And the AI Action Plan operationalizes this through annual commitments. We've had the first report on that just published, which is through supporting skills, compute, research standards, and a pro-innovation regulatory framework. In financial services, those national pillars translate into some very concrete essentials for a successful UK AI strategy. So bringing all this together, UK financial services sits at a pivotal point in the AI journey. We have high levels of adoption, a rapidly growing AI sector, regulators who are engaged and increasingly sophisticated, and a national strategy that recognizes AI as a core driver of economic growth. But we also face intense global competition, evolving regulatory models elsewhere, and legitimate public concern about how AI will affect jobs, fairness, and trust in our financial institutions. So a successful UK AI strategy for financial services, grounded in the AI Action Plan, will be one that turns our regulatory sophistication into a clear, coherent framework for AI in finance, that it builds world-class data and infrastructure foundations. It invests in people and culture as much as in models and compute. It creates safe pathways for innovation at scale, and it keeps trust, inclusion, and real-world outcomes at the center of every AI decision. If we can do that, the UK will not only remain a leading global financial center, it will become a leading global AI financial center, a place where cutting-edge technology, responsible governance, and public purpose reinforce each other. This is the opportunity in front of us in 2026, and the decisions we make now about data, about AI, about governance, will shape the next decade for UK financial services. So, those were my thoughts, but we have a range of really exciting speakers today, and the first speaker who I'm really pleased to introduce is, hang on a second, my speaker biography list has gone somewhat awry. Here we go. Is Harshit Krishna. Oh, hang on a second. Where is my bio for Harshit? Which I cannot find right this instant. Forgive me. So Harshit is the head of corporate development and funding at Multiverse Computing. He's also deputy lead of SME and funding for the European Quantum Industry Consortium. So Harshit will make a presentation, and I believe Harshit will also have a few minutes afterwards for Q&A if you would like to ask any questions. When it comes to Q&A, if you can just wait for the microphone to come to you for the Q&A piece. The reason is A, it lets everybody else in the audience hear, and also for those people online, they can't hear unless somebody's speaking through the microphone. So we will have time for a few questions then. But Harshit, could I invite you to come up, please, because you're going to talk about scaling AI and quantum safely in the UK. Thank you very much.
Good morning, everyone. Hope everyone can hear me clear. Well, first of all, thank you so much for the team at City and Financial, to Vivienne and everyone who has invited me here. Really a pleasure to be in such a esteemed company. I, as Vivienne has kindly introduced, do a lot of things at a very exciting quantum computing company, which is now, by a weird twist of fate, turned into one of the leading AI companies in the world. We provide some of the most efficient models to all sorts of sectors, not least among which, obviously, is financial services. And that vantage point, that position gives me a unique view of where the industry is headed in terms of how we are deploying AI today, what are the key challenges to scaling it, and going beyond POCs or toy deployments, going beyond vibe coding our way to the next best app, how our financial services clientele, including banks, trading organizations, central banks, and so on, are thinking about the biggest teething challenges here. I'd like to start by saying, and I would not rely too much on slides, I'll come to the slides in a bit, because I do understand it loses people's attention very, very quickly. I'd like to start by saying we are at a pivotal moment in the commercialization of AI, especially in financial services, where it has moved, the conversation has moved squarely beyond innovation teams to boardrooms. It's very much front and center to the implementation agenda, to how you achieve and retain competitive differentiation against the next guy in the room. And at the same time, there is a widespread realization, right, that AI, the question is not whether AI matters. The question is how to deploy it safely, economically, and at scale. In context of financial services, that rhetoric is even more valuable and even more important, because obviously, even the school-going children of today have access to the best models, the clouds and the ChatGPTs of the world. At the same time, when you're dealing with sensitive data, when you're dealing with requirements of cutthroat latency, and you're dealing with a scale that would put the compute requirements of the biggest data centers to shame, you have to think about exactly these type of scaling challenges. Now, the state of the market, Vivienne kindly pointed out earlier that 3/4 of financial services institutions in the UK have already deployed AI in some way, shape, or form. I would submit that there is still a massive gap between experimentation and industrialization. Globally, close to 90% companies are experimenting in some way, shape, or form with different applications of AI. But only 1/3 of those are really able to scale it pan-organization across their customer base and in use cases that are indeed mission critical. And so when we move the conversation to financial institutions, that gap between experimentation and industrialization takes the form of what is that mission critical infrastructure and how do we achieve that in order to achieve universal AI and give our customers faith in the AI infrastructure that we are implementing. And on that front, I'd like to note a few scaling challenges. Very straightforward, I'm sure you guys have heard these terms before, but let me give a bit of context behind each of these. Economics is first, right? Inference cost every single time people like you and I summarize a document on Adobe Acrobat or do airbrush in Photoshop, that translates to $1 billion inference budget for a company like Adobe. That cost of infrastructure, that cost of inference is especially higher if you're relying on general purpose models and the best of the best in compute providers, maybe hosted in the US or in Europe or anywhere in the world for that matter. That brings us to GPU dependence. There's only so much silicon in the world to power the AI at the scale we're talking about. And the way AI models are today, the way they operate, the general purpose models superpowering or charging every single use case, it's absolutely not sustainable because it would indeed require infrastructure build out at the scale that the Earth, our power grid, the climate, the environment just cannot sustain. Latency is third. We are talking about millisecond response times. When a trading organization or a bank desk is dealing with customer requests, you're talking advantages measured in terms of milliseconds and microseconds. And AI does power that. AI does have the capability to improve, for example, your alpha generation capabilities. At the same time, you are again talking about significant resource deployment. Data sovereignty is next. Sensitive financial data from customers, from inside the banks, cross-border transactions, and the whole 9 yards. That needs to be maintained in a way that there is no leakage, you're not crossing lines with regulators. And obviously, therefore, you want to keep as much of that within your premises, within your environments, implementation environments as possible. And finally, the operational risks. Systemic dependencies, regulators are obviously watching every move. And a lot of geographies around the world have done a very good job of laying out frameworks, laying out the playing field, so to speak, or the playbook, such as the EU AI Act, or different such regulations in the United States as well. Now, the key point behind mentioning all of these things is if you do not have a reliable infrastructure in place at the national level, at the industry level, and then at the company level, you are setting yourself up for failure. We are fortunate to be located in a geography that is taking a proactive stand on this, at the same time working very closely with the innovators in the field gives you an edge in that you're aware of what's the best out there, how can you resolve the challenges of scalability, whether it be latency, whether it be cost of infrastructure, cost of inference, and so on. Now, obviously, we've all grappled with these conversations around which models are the best, who's doing the best on benchmarks. But the new conversation today has gravitated towards what can be deployed, what infrastructure works in line with my governance and regulatory needs, and what deployment translates into costs that I can bear or my customers can bear. Obviously, financial institutions buy outcomes, not benchmarks. We are in the business of supporting a clientele. And if the solutions we are providing are not purpose-fit for that broad base of clients for whom we are managing sensitive data, but also a significant amount of funds, then it just doesn't work, does it? So let me highlight a few trends that are shaping the way the financial services industry will go about deploying AI at scale. The first is we have to agree we are already at a point where we are beyond AI assistants. We're not talking about Claude generating a meeting summary for us or doing some kind of document summarization, generating research ideas, and so on. We are already using AI to embed it into our workflows, embed models into our workflows. And examples of that range from underwriting to fraud detection to AML investigations, market surveillance, regulatory reporting, but also, as I was saying earlier, alpha generation at proprietary trading firms and trading desks at large banks. The key message is AI has become operational infrastructure and embedded into it in a way that you can ignore it at your own peril. The second trend is about where is this AI running. Now, depending on your particular requirement, you can have AI models running on your infrastructure. So you could be renting GPU space in data centers. You could be renting GPUs on hyperscaler clouds. Obviously, you're relying on a third party to provide that infrastructure to you, or you can have models and capabilities running close to the customers at the point of data generation itself, what people fondly call AI on edge. Whether AI for you is being deployed on your own premises, on cloud infrastructures via APIs, or on the edge, orchestration becomes extremely important. If you do not have a firm hold on how you are combining these three and multiple other ways of deploying AI, then you are probably not making the best choice in terms of cost, deployment efficiency, and regulatory compliance. And that brings me to governance. Any architecture, any orchestration that you are going for, any mixture of on-premises, on cloud, on edge, you have to think about the architecture necessarily supporting explainability of what the model is doing, decision traceability. If the model tells you to do X, Y, and Z based on A, B, and C data, you should be able to look back and say, this is how it happened, the importance of the proverbial paper trail. Monitoring of what exactly the AI is doing, what data is it looking at. There are already quite a few instances where AI has taken actions which had regulatory and cost ramifications for large financial institutions, and obviously regulatory reporting. Now, given the embedding of AI into your mission-critical infrastructure, and given how important it's becoming to compliance, depending on the amount of actions you're taking using AI on a day-to-day basis, efficiency becomes this critical underlayer. Efficiency of your models, efficiency of your infrastructure, and efficiency in your deployment strategy. And in that sense, it also becomes a strategic competitive advantage. A side note, a lot of us must have heard about agentic AI, AI models and applications that emerging therefrom, actually performing tasks, interacting with applications that already exist, and making decisions on our behalf. There, the risk is compounded manifold because you're giving AI a certain level of independence to play with data, to work on tools, but also it compounds manifold the compute and the inference cost requirements. Now, if you're thinking about deploying agents at large, it's a no-brainer. It's very much part of that competitive edge retention paradigm I was talking about a moment earlier. But again, agentic AI requires much more efficient, secure, and governable architectures to be in place. Without that efficiency layer, agents, as well as applications, obviously, too expensive, too risky, and too slow. And with that, I would quickly bring to fore the company that I'm working for. Very well contextualized, perhaps by now, that efficiency is core to AI, that deployment and safety with guardrails is very much going to be central, not just for financial institutions, but for any and every enterprise that is deploying AI today. All right, let's figure out the technology quickly. There we go. If you could go to the next slide, please. Sorry, who has? There we go, okay. So we were talking just a moment ago about the energy crisis that AI is fomenting. The supply constraints when it comes to GPUs and infrastructure and data centers. Obviously, US is going to put perhaps a nuclear power plant next to every single data center, and there is this massive build-out happening right now. Europe and the rest of the world perhaps as well is in no position to do exactly that. We have to think about novel ways in which we achieve AI sovereignty. And AI sovereignty obviously entails not just having your own AI models, but efficient models, efficient applications that are deployed in a way that can scale. So you're not talking about $20 or $100 subscriptions of ChatGPT and so on, which are gross margin negative to begin with. When you are coming out of necessity and at the same time have this imperative to retain your competitive advantage by deploying at scale, dealing with the limiting factors of scale, of energy, of infrastructure is extremely critical. Next slide, please. And this is what we at Multiverse Computing set out to solve. We come from a very unique left field kind of place in the world of science, which is quantum computing. Founded 6-7 years ago, solving the biggest problems there across all sorts of industries, but the company was indeed founded on day one, delivering quantum software to financial services industry for all sorts of use cases. We realized at some point along our journey that quantum simulations have a unique way at a very fundamental physics level of mirroring how AI models behave. And from that was born the ability to compress AI models by up to 90, 95, 98% without any material loss on accuracy. And this is why we have today become critical to Europe's deployment and scaling of sovereign AI. There are numerous large 100 megawatt plus data centers being built around Europe, and we are providing models to those because smaller models have much lower energy and memory footprint. So suddenly you're going beyond having nuclear power plants next to every data center, and you're talking about achieving 10, 12 times acceleration, better latency and throughput. You're talking about achieving twice, if not more, inference per GPU, per megawatt, and that is a phenomenal way in which we can assure to the governments, to the public sector, to the private sector in Europe that AI sovereignty is still within reach. We do not need to replicate an OpenAI or an Anthropic inside of Europe and somehow find the billions of dollars needed to fund the scaling laws, i.e. putting more compute and data to work to make the best and brightest AI models. And with that context, ultimately, what we are talking about is a real economic shift. And I'll pause again about, stop using the slides once again. Coming back to the agenda that I had at hand, this economic shift coming out of Europe's roots, and obviously including including UK, we are energy constrained, we are compute constrained, and there is only a certain amount of funding. Now, all of those things are changing rapidly, thanks to the regulators, thanks to all of the different entities that are pushing the envelope in providing more funding, whether it be from pension funds or other entities, into this build-out and deployment. At the same time, with this efficiency argument, with this efficiency rhetoric, we can do a lot more today, and obviously going forward, actually play on a level playing field with the likes of the United States of America and China. And therefore, quickly thinking about financial services use cases and what problems we are solving there today or are capable of solving there today with efficient models or with efficient deployment of AI. Fraud detection, you're talking about real-time monitoring of a ton of data, user data, sensitive, and you're grappling with very strong latency requirements. You always want to be a step ahead of all of the threats you're facing. Compliance and surveillance, huge amounts of email, call logs, voice analysis data that AI can readily already service. And at the same time, the scale of data that we are talking about, the confidentiality of the data that we are talking about, and the accuracy with which these results need to be delivered means you need to have very powerful solutions in your premises, if not inside the country, and then have very powerful models being able to deal with them. in very, very short amounts of time. Customer servicing, LLMs, voice agents are already transforming how customer servicing is done today. And at the same time, there always remain huge confidentiality concerns, not let alone concerns around what the agents or what the customer support chatbots are delivering to the customers in terms of both experience as well as hallucinations versus correctness of the data delivered. And internal productivity, all of us are privy to using research, AI applications and agents for research purposes, for summarizing documents and going about our day-to-day, making presentations and whatnot. And again, confidentiality and the guardrails, as well as efficiency, both on the cost side as well as ease of deployment, are critical. All of this takes a very unique context when seen from the lens of UK regulators. Obviously, regulators are focused on operational resilience, model governance, systemic concentration risks, and so on. So you have a massive plethora of use cases that you cannot ignore on one side. You have cost pressures on the other side. And then you have to make sure all of this squares with what the regulators are demanding and how the regulatory conversations are shifting all over the world. And in that context, efficiency helps you by achieving sovereignty, by ensuring your applications are resilient and can process all of the information, all of the data, all of the tasks on premises, while delivering transparency. So you do not have to pay top dollar, you do not have to pay $5, $10 per million token to use the best and biggest model from GPT or OpenAI. You're already talking about European solutions that can deliver that today. So to bring all of that together, financial services in 2030, our vision, my vision, is definitely the divide is not going to be between no AI versus AI, but it's going to be how we embed AI into organizations beyond experimental use cases. The winning institutions will be deploying AI securely, efficiently, under the right governance frameworks and across workflows. So it behooves us to find the right models, the right applications, the right guardrails, and the right infrastructure to get to that endpoint. And therefore, finally, I'll end by saying that financial services has always been an industry built on infrastructure that is reliable. Markets work if infrastructure works. Payments work if infrastructure works. And trust in the ecosystem is built and maintained if markets, payments, and the whole infrastructure works. AI will be no different. The future depends on how reliable we can make this infrastructure of AI and in the context of financial services, such that it's efficient, it's governable, and it's scalable. And I believe, and I think everyone in this room will agree, the institutions that solve these challenges will define the next decade of financial services and innovation therein. Thank you all.
We don't have time for Q&A right this moment, but Harshit is able to stay through until the break. So if you've got any questions, we can pick up any questions then. Thank you very much. I think you made a really excellent point that AI is part of operational infrastructure now. So it's no longer that add-on, that extra bit, that opportunity. It's actually totally embedded in everything we do. And the piece around quantum, being able to take us beyond that energy gap, is just hugely important. So thank you very much. I'd like to introduce our next keynote speaker, Rozana Aman. Rozana is a partner in the London office of Clyde & Co. And specializes in cyber risk, data protection and privacy, as well as AI. Rozana also specializes in high-value, complex insurance and reinsurance disputes and international arbitration proceedings. So yes, you're absolutely spot on. We're going to go from innovation to litigation now and look at some of the legal risks around AI, which is often where the bottom line is. Rozana, would you like to come up? Thank you.
So good morning, everyone. I want to talk to you about a meeting I had recently and what I'm seeing in relation to AI. I want to not just talk about AI litigation risks, but share with you the questions I'm getting and being asked about from my clients. 2 weeks ago, I was in New York and met with the Chief Digital and Information Officer of a multinational company. I work with this client to advise on cyber incidents and the legal and regulatory response that follows after a cyber attack. This client oversees over 70 companies in North and South America, and invariably, the conversation veers towards AI, as it so often does these days. What do I mean by that? Sometimes, clients ask me about the risk that may arise with persistent AI recording in their organization. Another asks whether inputting advice from external legal counsel into ChatGPT or Copilot may risk waiving legal privilege. One that remains high on the agenda for my clients is how AI is increasing the sophistication of cyber attacks and allow threat actors to increase and leverage AI to automate a malicious activity. So what did I get asked at that meeting a couple of weeks ago? He asked, what is everyone else doing with respecting to managing AI risks? What do you see others doing that I could be doing? It was a simple enough question, but one that was extremely revealing, at least to me. How do we begin to grapple with AI risks, and is it enough to do as others are? I should acknowledge, as I'm sure most of us in the room do, it is not all doom and gloom when it comes to AI. While the governance and litigation risks are aplenty, so are the opportunities and efficiencies that come with it. AI can be used to streamline and expedite processes by automating tasks, allow for 24/7 business continuity, and, as I learned recently, can also help me plan a trip to Japan and find the best activities and restaurants in Tokyo. So, what happens when AI innovation turns into litigation? Let's first start with AI chatbots, something we're all familiar with. Over 1.5 billion people worldwide have used AI chatbots, and roughly 65% of users interact with chatbots daily or weekly. By 2030, the global chatbot market is reported to grow to over $27 billion. Banks use chatbots to address technical issues and account inquiries with customers and detect fraud, as we've heard. But in a survey conducted by Deloitte in January 2025 of US banks, 57% of those surveyed say that better accuracy is required in responses. What does it look like when chatbots go awry? In 2024, a customer of Air Canada interacted with its chatbot to inquire about a refund pursuant to its bereavement policy. The chatbot gave incorrect information, and the customer filed a claim against the airline when it refused the passenger's refund request. The Civil Resolution Tribunal of British Columbia considered whether Air Canada was liable for negligent misrepresentation. Air Canada argued that the chatbot was a separate legal entity that was responsible for its own actions. However, the tribunal held Air Canada was liable for the information on its website and that it could not pass on liability. As a result, the passenger was awarded $812 in damages and court fees. While the sum is nominal, relatively speaking, for financial institutions, the erosion of customer trust and that causing consumer harm when deploying chatbot technology could have more serious consequences for financial institutions. Another example is how AI can amplify creativity and be seen as a collaborator. It can generate new and interesting things. For instance, Deep Dream, developed by Google, takes an existing image and amplifies the pattern to allow for visual experimentation. Google's Magenta project learns from human piano performancers and can generate new piano music and play it on a digital piano. But AI creativity can also lead to copyright and infringement issues. In the UK, the High Court last year considered the case of Getty Images and Stability AI, where it was alleged that Stability AI had infringed intellectual property rights asserted by Getty in the course of the development, training, and use of Stability AI's image generation AI model. Now, the High Court accepted training involved copying, but highlighted the difficulty of proving that a trained model contains reproducible copies. So the court rejected Getty's copyright claims. Now, this judgment is currently being appealed, but what it means is that for now, importing a pre-trained generative AI model such as Stable Diffusion into the UK will not amount to secondary infringement or UK copyright laws, where the model was trained abroad and does not store copies of the relevant copyright work within the model. What this does illustrate, though, is that the realm of copyright and intellectual property law will have to contend with this new reality. For instance, will AI developers or users need to license data sets from publishers, labels, or galleries to avoid exposure to claims around infringement? You may have heard that in September last year, Anthropic AI, a leading company in the generative AI space, agreed to pay $1.5 billion to settle a copyright infringement lawsuit brought by a group of authors. The authors are being paid around $3,000 for each of the estimated 500,000 books covered by this settlement. But AI is not just about creativity. It can even be empathetic. Millions of people engage in meaningful conversations with AI. Individuals can confide in a chatbot and can provide advice. In this way, AI is seemingly more than just a tool. It's a dynamic and autonomous digital species that can speak what we speak, see what we see, and even provide comfort. However, there are safety and, in turn, liability risks. In Garcia and Character Technologies, a lawsuit filed in the US in October 2024, a 14-year-old suicide was linked to addictive engagement with a character AI chatbot. More recently, in Rain Family and OpenAI, the family of Adam Rain, a 16-year-old from California, has sued OpenAI after their son died by suicide in April 2025. It is alleged that OpenAI helped the teenager plan for his suicide, and ChatGPT had offered to write the first draft of Adam's suicide note. So how do we begin to develop guardrails on emotional reliance on AI systems? Can these systems pick up dangerous and potentially self-harming behavior? Perhaps an initial step for organizations, including financial institutions, regardless of the AI systems being used, is to ensure that you have an understanding of what escalation pathways there might be for potential misuse and identifying high-risk users. But I expect this will remain tricky. Now, from the personal to the reputational, there are AI washing claims that have been growing in the last few years. These relate to companies misrepresenting or exaggerating capabilities of AI, which is leading to scrutiny by courts and regulators. In 2023, the Southern District Court of Ohio looked into a company's statement regarding its underwriting platform that utilized AI to assist banks in evaluating the viability of consumer loans. The company, Upstart Holdings, is a fintech company that markets an AI-driven consumer lending platform. Their investors brought a securities fraud class action, alleging that Upstart exaggerated the ability of its AI lending model. There is now a certified class action against Upstart, and the case is currently in full swing towards disclosure with pleadings now completed. In the US, the SEC is hyper-focused on AI-related disclosures. SEC officials have publicly stated that they're closely scrutinizing disclosures made by public companies about the use of AI. It's so important for financial institutions to ensure disclosures around use of AI are accurate, while also strengthening controls and procedures around disclosures for quality control. In the UK, how will the FCA judge banks' use of AI? I'm not aware of any equivalent AI washing type enforcement action, but my expectation is that it will be important to have evidence-based grounds on AI use and capabilities. Transparency, explainability, and accountability are core principles to adhere to rather than aspire to. So back to the question I was asked at the meeting. What are others doing? Is it enough to do as others are? So just last month, Axis Bank in India is reported to be the first financial services institution in the world to receive ISO certification for AI management systems. It's reportedly the only bank to have this accreditation. What is ISO accreditation 42001-2023? It's the world's first international standard for AI management systems. It was published in December 2023 and provides a certifiable framework for organizations to develop, provide, or use AI systems responsibly. As far as I'm aware, no UK banks have this accreditation yet. But notably, just last week, international law firm K&L Gates announced it has been ISO certified. It seems, therefore, that at least in the professional services sectors, others are following suit. Practically speaking, it's likely that one of the reasons there haven't been more UK companies being ISO certified is because the first body to receive approval from UCAS to provide this accreditation for AI management systems only occurred in January 2026. So to get this accreditation from this specific body, the BSI, it's only been around for a couple of months. So unsurprisingly, and as a result, only a small number of companies have publicly confirmed certification in the UK. But it also remains to be seen how this ISO standard, practically speaking, maps onto the EU AI Act and the UK AI framework of principles. But it's important to note that it's not just about accreditation. It really is about governance, accountability, and ensuring compliance with existing frameworks. These would include the FCA. The FCA already has existing principles which would apply to AI use, such as ensuring due skill, care, and diligence, having adequate systems and controls, treating customers fairly, and delivering good consumer outcomes. It's worth mentioning the EU Product Liability Directive. Software and AI integrated products fall under the new rules, thereby giving consumers a private right of action. Relevantly, the regime is a strict no-fault liability. The individual or the claimant does not need to prove negligence. Rather, it only needs to prove that the product was defective, damage occurred, and there was a causal link between defect and damage. These rules will need to be implemented by member states by 9 December this year, so it's likely we won't see any AI-related consumer claims for a while. And then there's the EU AI Act, which Vivian mentioned earlier. It outlines a risk classification system to providers, deployers, importers, and distributors of AI systems. It can have extraterritorial effect, so it will be important to understand the obligations arising from the EU AI Act to avoid enforcement action and potential fines and penalties. So what can we take away from what I've discussed so far? While others are taking steps to be officially accredited, like I mentioned, the ISO standards, financial institutions already have a framework of existing legislation and guidance to work from. What I've observed is that the litigation arising from AI use highlights that managing risk and having an appropriate governance framework is important. It's critical that you review your AI and data privacy policies, ensure security and governance procedures are in place, including safeguarding and compliance, regularly assess functionality and output of AI tools, audit for bias and accuracy. Final decision-making should be left in the hands of real people. Update your equality and diversity policies to reflect your use of technology, and also audit your supply chain. Vendors who use AI, which you can rely on, can impact you. It's not just about good compliance, but also ensuring you have strong contractual provisions. And don't over-rely on representations from your supply chain. Thank you. Are there any questions from the audience? Yes. A couple. Sure.
You mentioned about legal privilege. I didn't hear an answer to that one. What was your view on if you put legal advice into the system, do you lose the legal privilege?
Two questions in one. The first one is around the way we use GPT today. I'm using GPT to represent all the other LLMs. The question is, how do we measure what the issues are? I mean, the risk from these platforms. That's number one. The second one is around the insurance business now. Right. Is there anything in place? Because I'm aware currently there is insurance stuff for IT and like. Right. Now that we have AI,
Yeah.
perspective is changing.
Yeah.
Right. So can you please throw more light on this?
Sure.
I would like to know if there's anything like that, or if there is none, is there a thinking along that line? Thank you.
Yeah, thank you for your question. So the answer to the first question, having looked into it, the principles of privilege, are grounded in confidentiality. So you have to look at two elements. Firstly, who has access to ChatGPT within the organization? Are you using a version of a chatbot that is specific to your organization, or are you using something from open source? If you're using something for your organization, Clyde & Co has their own, co-pilot function. But what are the security settings around it? Who has access to it? And what happens to data once inputted? And how can it be aggregated? So the first thing is the security controls around it. It's not just who gets access to it within the organization, but who gets access to it from Microsoft, if you're using Copilot. Because there can be some when I looked into it, there can be administrator access without you necessarily knowing about it. And by dint of that, it compromises confidentiality because they're third parties, and you can inadvertently waive legal privilege. So I think the core is the security settings and what visibility you have to be able to control it. To answer the second question on how you assess what risk there might be from chatbots or ChatGPT, I typically advise clients to think about it as an input issue and an output issue. From an input issue, think about the data privacy issues. Those are topics that will be discussed later today. Think about, there were comments around data sovereignty. Think about confidentiality of data that you're inputting. In the case of Anthropic, using data, but based on author's work, created a copyright issue. So think about what the input issues might be around the data you're using to train your models. And then there's the output issue. With what is being generated, it speaks to the examples I mentioned earlier with litigation around vulnerable users like children or young teenagers relying on chatbots for advice or using it effectively as a counselor. So that's an output issue. So I think it's useful to think of it in those strands, the operational concerns you might have from input elements and output elements, and working through how you rely on data or systems or suppliers in each of those respects. And I think that is the one of the best ways of doing it, and then mapping it against your obligations, if you have any, under the EU AI Act, because they provide prescriptive requirements and obligations. So I think that's a methodology that has worked for me and my clients. And your third question was in relation to what is the insurance position on this. As far as I'm aware, in the UK, there are only 3 insurers right now that provide insurance for AI. These insurance provide cover for 2 types of issues arising. The first is in relation to liability, so any third-party liability that you might face as a result of using AI technology and third parties then suing you for any defective element around it. The other is offered by Munich Re called AI Sure, and that's been around for at least 10 years, and it started out in Silicon Valley. And effectively that seeks to ensure when the AI technology you use malfunctions. So it operates more of almost as a warranty and guarantee around AI products failing. But then there are also traditional forms of insurance that can capture failures around AI, technology errors and emissions that will potentially cover any failings of AI. Typical standalone cyber insurance within the realm of cyber will cover cyber incidents triggered by an AI attack. So it's important to first look into your traditional lines of policy. So for example, DNOs will be covered under for liability arising from those AI washing claims I mentioned. And if you don't have cover under your traditional lines of policy, then there are at least 3 options in the open market today providing for AI cover. Great, thank you for your questions.
Thank you, Rosanna. Actually, that's so useful to have that overview of what the litigation and liability elements are. I remember the Air Canada case as being the first one, but obviously things are evolving quite extensively. We're now going to move on to a panel discussion which is going to take us from vision to implementation. So how do we actually achieve AI deployment within financial services? And to moderate that discussion, I'm delighted to introduce Rowan Massey. Rowan, it's lovely to see you again. Rowan is the office managing partner at Ropes & Gray and also leads the firm's data privacy and cybersecurity practice. Rowan served as the chair of the Sedona Conference's 12th annual Sedona Conference International Program and also sits on the Sedona Conference Working Group as well. So we all know Rowan, he's been very well connected in this space for a very long time. Rowan, can I welcome you up and with your panel? And then if you wouldn't mind to introduce your panel, and I shall leave it to you. Thank you.
Yes. These are working. Can you hear me? Great. I think we've got everybody. We've got Jem on screen. Fantastic. Good morning, everybody. It is great to be here and to be leading the first panel session after those two informative and engaging keynotes. As Vivian said, I'm Rowan Massey. I lead the data privacy and cybersecurity practice at Ropes & Gray in London. And I am delighted to welcome the panelists. First of all, on the big screen behind me or in front of me, we've got Jem Davis. Jem is the Chief Compliance Officer of the Bank of England. She's responsible for the bank's internal compliance and privacy programs and helping the bank to manage the internal compliance and privacy risks. Welcome, Jem. And next to me, I have Neeresh Raja. Neeresh is a globally recognized executive leader in financial services and professional services with over 20 years of experience at the forefront of data analytics, artificial intelligence, and regulation, automation, innovation, and transformation. He's got a distinguished track record, having held senior leadership roles at Barclays, Lloyds Banking Group, Danske Bank, DLA Piper, and Grant Thornton. Welcome, Neeresh. Thank you. Next, Neeresh, we have Anishka Prasad Kapoor, who is the Chief Operations Officer and Data Officer of Juniper Place. Juniper Place she leads the AI integration and strategy, data governance, and operational transformation programs there in an enterprise with clients. with an enterprise with clients with over $1.5 billion in assets under management. Welcome. And finally, we have Abisola Sherwood. Abisola is the director at Citibank, leading the anti-money laundering and Know Your Client program. She delivers robust global governance frameworks which embed ALM prevention oversight, operating in all jurisdictions across products and services. So welcome to each of you. It is great to have you here, and I'm looking forward to a very interesting discussion today. Obviously, from the introductions and the keynotes, we are clearly in the age of AI, with 75% of financial services organizations using AI. It's interesting to understand how it's being used. I know there's been talk already of it being used across risk, customer engagement, compliance, trading, both front office and back office. So AI is becoming not only ubiquitous across organizations, it's becoming very much a support for the organization. So every organization now appears to have an AI strategy. It will be doing something with AI somewhere, or it will be looking to work with third parties that are doing something. So the strategy is there. Leadership will have put something down on paper saying, right, we have a strategy. I guess one of the questions I have, in financial services, a very regulated industry sector, one that has a very broad products and services within it, one which is very international and global in its outlook, and one which has got a very long and innovative history, but also had a history of mergers, acquisitions, of systems coming together. We're in a very complex sort of ecosystem looking at financial services. So how do we go from strategy on paper to implementation in practice? Is it, when we're looking now at AI structures, I kind of want to focus first of all on what organisations need to do to move from that sort of strategy to have embedded AI operations throughout the organisation. I think if we can start there, Abisola, can I ask you, looking at the sort of, is there a gap between strategy and implementation at the moment?
I do think there definitely is. And before I actually delve into my response, a good morning to everybody joining and thank you for being here with us. Rowan, as you say, we're looking at the financial services industry. It is an ecosystem. I think that is a fantastic word to describe it. You know, we have a range of neobanks and challenger banks all the way through to your huge competitive global organizations and institutions, some with, as you say, very, very rich history. And some, you know, as we say, when we look at the neobanks, coming up in the last 5-10 years with a very different approach and attitude to risk management, to agility, to infrastructure. And I do think we should really look at and start with infrastructure. I do think that is one of the biggest challenges that all institutions within the financial services are facing. Many, as you say, through different mergers, through divisions, through business and product lines that were never meant to speak to one another, but now suddenly are as we continue to really mesh together in the world that we find ourselves in, are dealing with systems that don't talk to each other or that don't recognize each other. And so a data field or a character in one system, even within the same bank, may not represent or mean the same thing to another system that's being used. And that's just within one bank or one institution. Talk less of across the myriad of different technologies and platforms and systems and APIs that have been built to pull all of this information together. We don't have a consistent answer. And we don't have the ability to read across. And so I do think that infrastructural point is a real big sort of pillar that is standing in the way from us from being able to get from strategy to innovation. I do also think we would be remiss to not talk about culture, and we'd be remiss to not talk about change management. And I do want to especially highlight on change management because I don't think that's often actually brought up in the discussion. You know, quite a lot of the time strategy, as you say, is signed off and approved at the top of the house. But by the time it actually makes its way down, and sometimes actually from the grassroots level, you get a lot of empowerment. You get a lot of believers that are following suit from the bottom, but it can get stuck in the middle. And it can get stuck at different layers in the middle, especially when you look at even larger institutions that are global or that are regional and that have different layers and operations. Having effective change management is not just sort of sending off for communications and hoping for the best that everyone's read it and accepted it and that will be what it will be. You have to actually really study and examine where are the pain points across this process. How do we make sure that we have not just buy-in, but understanding, accountability, and proper risk management and governance frameworks that have those right checkpoints and flags to say where this is working, where it is not working, and where we may need to make slight tweaks to have proper integration. And that does have a cultural element to it, because if your institution does not have the sort of, I guess, cultural capacity and currency to accept change management and to accept things being different or being pivoted or piloted in a new manner, then you will fall and you will fail. And so that can also become a stopgap within it. And I don't want to take up too much time because there are many, but I do think those are probably three key ones that we really do need to think of. But as I say, governance does underpin a lot of what we're talking about, but you've got to make sure you address your infrastructure, you look at your culture, and you look at how you're trying to implement change. Otherwise, you won't really get that transition from strategy to implementation.
Thank you. Neeraj, you've got a point to add?
Yeah, sure. I actually think that the AI strategy hasn't really been revised in terms of most financial service organizations. So there is lip service paid to AI strategy. But if we really look at what is the impact on the business model for insurers or asset managers or banks, how has each institution taken view of how the B2B and B2C dynamics has fundamentally changed? That AI strategy and the business model has to be revised. So I don't think the AI strategy has been, maybe it's been lip service or PowerPoint, but it hasn't really filtered through in terms of how that works. That's the first point. Mm-hmm. The second is, I work with a number of organizations, and going from AI strategy to AI transformation is a big component. And there's something that I teach on as well, actually, when I lecture, which is around what is effectively an AI readiness assessment one has to have before they move into and start executing AI transformations, which could be hundreds of millions of pounds or dollars. And there are 6 real dimensions that always come up. The first is leadership. So this is executive leadership and buy-in at board and executive level to make sure that there is a long-standing commitment that's there, and there is both ability as well as commitment. The second, we just touched on this, is strategy. So how do organizations really move from enterprise-level strategy into business strategy and then AI, data, digital strategy? And is there a real coherence and integration around that? And then the third really is around the workforce. So is it an adaptable workforce or is it a closed-minded workforce? And I've worked in a number of organizations where it's a closed-minded workforce who's never going to adapt to new ways of working and really embrace some of those things. And then the fourth one, I think you touched on it, is really around culture and that point around experimentation and ability to take a level of mitigated risk around that. And then you've got the two components which are really component around data. So the data foundation, because I really believe in AI and data being a symbiosis relationship. And there is no intelligence in artificial intelligence without data. Right? So the data foundation has to be strong. And then obviously the technology infrastructure has to support all of those. Those are the 6 real dimensions. And firms that are going to be successful to move from AI strategy at a top level to actual AI transformation that creates a return on investment value have to have those 6 dimensions in place.
Okay, that makes a lot of sense. If I can bring Jem in here. Jem, thinking about what's been said, maybe staying on the culture for a moment longer, sort of, how do you think AI leaps and leadership in this area, looking at change, you can balance the sort of desire to move forward, innovate, experiment, against the sort of risk management and we sort of we're hearing earlier, issues around confidentiality, issues around privacy. How do you balance those 2 elements, innovation against risk?
Yeah, excuse me. Yeah, it's a really good question. First of all, good morning, everyone. It's great to be here. I'm slightly horrified at how large my online image looks. So yeah, I feel like I'm in Ultra HD or something. So please use your AI filters as necessary. Yeah, look, it's a really good question. I mean, whenever I practice, whatever field I'm in, I tend to kind of overlay risk management anyway. That's just kind of my own mindset, and it's no coincidence that my division sits within the risk directorate in the bank as well. So it's quite easy for me to do that kind of overlay, and I find it helps to ground me a bit more. So I think the first thing is that so I personally think that experimentation and regulatory discipline are not opposites. As you would expect me to say, I think they're both forms of risk management. So my view is actually they should reinforce each other rather than being seen as mutually exclusive. So, for me, that means, it's going to be key to design structures that allow safe experimentation without compromising control. And the science background in me, when I think about a science experiment in the lab, right, well, ideally you don't go and try and blow up a lab, but, you will design safe experimentation, you will look at your risk management, and in any experiment, risk can, I think, be mitigated as long as you kind of evaluate it, manage it, mitigate the risk. I mean, these are all things you would hear a risk practitioner say. So, and I think you would say that regardless of environment. So AI is a new environment, but I feel you can apply the same principles. And I think people sometimes get quite tied up in, there's this big new thing and it's moving really fast. And yes, it is a big new thing and it is moving really fast, but there are structures that you can put in place to kind of, face into those headwinds quite strongly. And again, it's about the discipline that you have, right? That it's important and it's transferable, right? Regardless of environment. So that's kind of my opening thoughts on that.
Understood. Thank you very much. Anishka, have you got any thoughts about maybe, looking at responsibility across streams, getting that engagement working?
Yeah, so my role is very interesting in terms of sort of sitting in within the operation side of things and the data. Often these things are 2 very separate entities that deal with it, but I've got the, I guess, fortune of sitting in the very middle, and that can be obviously challenging, but it's got massive advantages as well, because I don't really see myself as a custodian of the data, but a catalyst of it, like in terms of budgets, etc. Because AI is mainly aspirational for a lot of firms, right? It's like, okay, this is something that we want to get to. This is a sort of end picture, but not necessarily thought about in terms of bite-sized processes, in terms of what do we want to achieve this quarter or the next and the other. It's often like a roadmap, and then there's a shiny, transformative version of ourselves. And that often kind of misses the point in terms of how you're going to bridge the gap to go there, whether it be like the right budget allocation, the right data structuring, the cleanup side of things. Because obviously, as one of the panelists said, basically you're not in a position to transform into data, the data into the AI practices that you're willing to go to. But most of the time, I guess it's more aspirational than anything. So I guess my role sits in the middle of being able to be a catalyst to that, aligning the data aspirations with AI and then meeting them with budget. And I think it's very essential to sort of have that in many teams, because most of the time it just becomes a nice, shiny slide on a deck, you know, that people just want to potentially achieve in the future, but not necessarily taking the steps because they don't necessarily have a process outlined. So I think culture, yes, big part. Most of the time, there needs to be allocation for time as well in terms of fleshing out that strategy of how we're going to get there.
Brilliant, thank you.
If I may, I might actually challenge you a little bit on that point, because I wouldn't actually say that AI is a shiny strategy on a PowerPoint that hasn't yet been achieved. We know that we've been on a journey with AI for the last 15, almost 20 years. So I agree that there are elements or formations of AI that we are looking to get to that we're not quite there yet. But I don't think there's anybody in the room or even online that hasn't had some form of interaction with a language model or any form of, whether it's a chatbot or generative AI. Yeah. We are already there, and we've already made quite a lot of headway in that journey. I do think it's more moving towards the, and I know we'll talk a lot more about it later today, but onto the agentic AI space. That is that we are not quite there yet, and that is what we haven't achieved. But I don't think it's quite fair to say that we've not transformed from a PowerPoint strategy to actual implementation with AI.
I mean, I absolutely agree with that. When I say AI, I'm thinking basically traditional organizations, legacy companies that kind of want to be in the next stage without having obviously paid the groundwork towards what it might look like. I personally am coming from that space, so basically working with a lot of financial services companies that would like to see a different version of themselves, and that could be agentic, there could be different things, but when you actually go into the data readiness of things, they're not quite there yet. So for instance, there might be like, okay, this is a great agentic tool, we can definitely deploy it, but then it only solves about 60% of your issues and potentially creates more because you haven't quite thought how this fits into your particular infrastructure. So it's more coming from that forefront. I'm not saying that people aren't obviously doing the groundwork in terms of research, understanding which platforms or which AI outcomes they would like to have. It's more along the lines of, okay, this is the final goal that we're after. And sometimes there's like a little bit of missing the steps in the middle, if that makes sense. Like basically understanding that there's two elements of this, right? And in the middle, obviously, because the rate at which AI is growing, there's new options and solutions sort of coming in the middle as well. So I think a lot of the times we want to kind of achieve the next 5 steps forward without having seen where we are currently right now and how potentially we're going to structure it. So the research element is there where everyone's definitely educating themselves thoroughly, trying to sort of, go for it. I mean, everyone subscribed to something that tells them about the new agentic AI and like workflow automations and things like that. But having that said, whether your particular situation is ready for it right now, that often comes amiss in the process. And that could be that, you thought that it's going to be a result that I can see next quarter, but in reality, it could be 2 or 3 quarters, just because you're currently at this legacy state and you're sort of trying to make this data adapt to what your potential solutions could be. So it was more coming from that front. Yeah.
And I think to carry on that conversation, sort of moving a little bit away from the organizational piece, but to the actual data piece. Neeraj, what does AI-ready data look like for financial services institutions?
I think that's really. I mean, one of my key parts as a chief data and AI officer has been, we talked about regulation and innovation, and it's about balancing offense with defense. So I've been a material risk taker, and you do need to speak. You need to kind of really stand in front to the PRA, the FCA, or the wider European regulators, and make sure that in banking, where I've spent kind of 15 plus years, we've had BCBS 239 and the US versions of SCAR and so on. And then there are others, which what's been really interesting is most institutions, I'm not going to name names, have been partially compliant with BCBS 239, which, the real component is how do you have our data quality, aggregation, and architecture in a really sound way, and you're able to clearly understand the data sets which are needed. So that's from a compliance standpoint, a regulatory compliance standpoint, which has been important post the financial crisis, but both globally, systemically important banks and domestically important banks have had to have some sort of focus in terms of doing that. What AI-ready data really looks at is, are we able to be very clear in terms of the structure of that data, both structured data, and then secondly, I really believe in critical data, right? So which type of data sets across customer, account, transaction, product is really important to an organization, both in terms of value and how that works. And then are you able to get the quality of that data set in a really good place? And the quality of those data sets means that you're able to have really sound AI-ready data to be able to leverage use cases. In one of the institutions recently I worked with as the chief data officer, we really focused about what are the AI use cases which can be built in terms of data products, AI products, analytics products. And that all came from that sound data foundation. And really, in terms of making sure that outcome is derived, is really making sure the structure of that data, the quality of that data is in place. And the final part around that is obviously the real focus then is how are you able to create integrated data sets from internal data sets, which is the intellectual property and proprietary data sets of any institutions. How do you integrate that with external data sets to create more value? So that's really the sound basis in terms of AI-ready data.
Okay, thank you. And Jem, I want to just add one other layer, I think, onto what Naresh has just said, which is, one thing we haven't discussed is bias, right? So obviously if you're trying to get AI-ready data, you're pulling it all together. Legacy data may have been collected for a lot of different reasons, probably not with an eye on bias in the sort of AI and regulated world that we're in now. So how do you avoid bias when you're looking at trying to get the data to be AI-ready, as it were?
Yeah, it's excuse me, it's a good question, and one that we think about a lot, and in particular, as you can imagine, my privacy team thinks about that quite a lot. Actually, the whole organization thinks about it, and that is a good thing. I think the perspective I come from is sort of expect the worst, hope for the best. So my view would be, you're probably not going to be able to eliminate bias completely, but I think it is something you can actively manage. So it begins with, some of the concepts that some of the other panelists have talked about. So data maturity, what data do you have, where it comes from, how it's being used, what are its limitations? We love looking at this in privacy, by the way. It's about having really good data governance, metadata. If you can trace all of these things, then you're in a much better position, in my view, to identify where biases can be embedded. And I think this is where it's important that data, one of the things we talk about a lot is silos and not having silos. And I think something that I'm really proud of is that we try and treat data as an enterprise asset, I guess is probably what you'd call it. And I think when you do that, then you don't just have one unit looking at data. You then have the whole organization looking at it. And where I think that helps with bias is, you have a lot more people looking at, inconsistencies, looking at, they can spot patterns where bias may be more visible. If you've got a good governance process, then, you know, you're going to have programs in place where you're testing models with diverse data sets, you're monitoring outcomes, that sort of thing. So I think, you know, the objective isn't bias-free, it's sort of being, I suppose, bias-aware. So, you know, having transparency, accountability, continuous improvement, that's what I would say on it. I hope my privacy team are proud of me for that as well.
Thank you. So sort of data as an enterprise asset is, I think, the phrase that Jem just used. So, I mean, Anishka, would you agree with that? How does that fit into a sort of standard risk management framework? Or are we having to change that risk management framework now to accommodate the sort of AI elements of it?
I think we have to be a bit more vigilant in terms of how we deal with it, right? Because, I mean, I work in the sort of allocator space, and there's a lot of data that we obviously, like, you know, cannot share and talk about, etc. But it's also the packaging of that, how we sort of keep up with our ISO compliance, and I think everything has kind of just gone 10x more in terms of looking at it with like a magnifying glass of like, you know, where are the touch points? I think a speaker earlier mentioned the outputs and the inputs, and really thinking about how that is packaged and where it gets delivered. So from an enterprise B2B business perspective, we are having to be a bit more vigilant than ever in terms of seeing the touch points of data. What are we even like, you know, trying to deliver from a client perspective without sort of having any breaches? Obviously working in various regulatory environments as well across jurisdictions, having to be a bit more mindful of it because things are ever changing and developing basically, yeah.
And Abhisar, is it the same at Citi? I mean, as I listen to this, and maybe this is me coming from a privacy sort of privacy background, very much sort of GDPR focus, right? Whenever I look at it now, I say, well, GDPR is like a flat jigsaw puzzle, right? I can put on a table and I can move the bits around. Whereas if I'm looking at all of sort of AI regulation and the interlinking regulation around it, nationally, internationally, everything seems more like a 3D Rubik's Cube. Right, where I've got to keep moving all of these different parts. Is that sort of similar to your assessment?
It is. I mean, I do love a good analogy. So Rubik's Cubes are exceptionally challenging, but once you've mastered them, you have actually found your way around it. And you know what? Throwing AI into the mix is not necessarily dissimilar to some of the challenges we've already faced in the past. And I think that's one thing we all need to continue to remind ourselves. It's yes, a new challenge, but it's not a challenge that we aren't able to achieve or accomplish. You know, we've had other instances and iterations where we have to, and we continue having to, reconfigure what we're doing. You know, look at DORA as a prime example. You know, the readiness and preparation for DORA, so, sorry, apologies for anyone that doesn't know the acronym of DORA, Digital Operational Readiness, to make sure that we are ready and compliant and familiar with what is required. It took almost, for some organizations, a significant period of time, greater than 5 years. AI is no different in certain instances, and yes, we face different jurisdictional regulations or requirements or standards that we need to adhere to, but it's understanding what those are, and as Jen said, what are the touch points? Where are we needing to understand that data conversion as well? Because we can't forget about cross-border data clearances. We can't forget about data localization. We can't forget about data rationalization. So again, I see it as another challenge, but not dissimilar to previous challenges that we continue to face. We need to be prepared for it, absolutely, and we need to really take that fresh look, and as Anisha said, almost be 10 times ready to have to approach it from a slightly different lens. But I don't see it as something impossible that we cannot, piece together. Yes, it might be a jigsaw that you can lay out on a table with a few three-dimensional directions or aspects to it, but it is one that we can complete.
No, I mean, I think I agree with all the panelists. I think one of the things to be really clear is we've had AI in financial services for the last 40 years or so. Yeah. And we've been doing prediction models. We've been looking at machine learning. There's a range of scenarios where that has been going on. Now, we have this new thing called large language models and generative AI, which presents a view, and the reason it presents a different view is it's in everybody's hands, right? And we can all play with it in terms of ChatGPT or variation. So it's much more voluminous in terms of being in the space. So financial institutions have been managing the risk around AI because that has a view about AI. I'm talking about traditional prediction models and so on, where lending decisions, credit decisions have been based on, there have been bias historically in algorithm because of the data sets and how institutions have really taken that view. So that's been happening. Now, there have been regulations like in terms of consumer duty and conduct risk and a broad range of set, which have really come out to make sure the customer is protected and the consumer is protected. What is going to be really interesting and is the different playing fields between financial service institutions which have been in place with big regulatory regimes and the fintechs, and there is a delta, right? And I've operated in this space for the last 20 years. There is a delta between institutions, and the regulators do see a difference, right, in terms of institutions which are household names who've got big balance sheets, and you've got others who are of you. What I fear is a cataclysmic event in terms of data being exposed and models being used, which has a huge impact, either in terms of the small to medium enterprises or in terms of individuals at a massive scale. Now, we've had data breaches, but we've not really seen big, let's call it AI breaches, where models have utilized to actually fundamentally impact large population groups or companies, which have resulted in market share losses and companies going out of business. And that is a cataclysmic event. All financial service institutions, which are heavily regulated, and others who have a license, must have risk mitigation standards in place to be able to do that. And that comes down to a few things. How do you actually make sure you have really clear AI policies and data policies that are linked to your strategy? How do you make sure your AI ethics and data ethics are beyond reproach in terms of how you operate? And how do you make sure you have the right governance in place and there is accountability at the top level in terms of board and executive level to be able to respond? And the question to always ask is, who is ultimately accountable for AI in your organization? And who is accountable when something goes wrong? And I think if you're sitting at the top table, you've got to be able to answer those very quickly.
Maybe a show of hands then. From the audience, in your organizations, is there anybody on the board or the managing executive who is tasked with AI as one of their oversights, specifically tasked with it, or is it dissipated? So anyone with a specific individual who's tasked with AI as one of their roles on the board? Anybody? No? So that means it's all generic. So I find that quite interesting.
I saw a couple.
A couple went up today?
Yeah.
But they were really small hands.
Did we get a microphone? Have we got a microphone from anywhere, please? Just to make sure that Jen can hear. She's on screen, so. Thank you. No.
Yes, I think there's something missing somewhere. We need to look at it holistically. We have the business strategy, the beginning of the whole stuff, from the board, whatever it is. Now, we have the digital strategy. Now we are talking about AI strategy. Yes, I agree. We need to talk about infrastructure, we need to talk about culture. Yes, we've talked about data, but there is a whole lot missing from the data side. If your data strategy is wrong, definitely AI strategy will be wrong. That's on one side. On the other side, I have a challenge with transformation, deployment. And that deployment is that I have deployed an AI model or solution. A lot of organizations today do not know at what point do we monitor what's going on. So as we operationalize this stuff, how do we monitor the performance of what the AI model is giving? Now, my experience shows that from the next day after deploying your model, right, the model is already drifting by default, either you like it or not, because you are exposing the model to new data now. Right. So definitely it will start drifting. Now that drift, who measures it? Right. That's one side of bias. The other side of bias is that the data that was used to train the model was cleaned, bias was checked. And if the data is biased, it will translate to biasness in the other side also. But the question is, the new data that is coming in, is there something in place that is taking care of that bias that was sorted in the training model? I don't know if you understand what I'm trying to say. So there is a missing link in that angle. So in a nutshell, I feel data strategy needs to be firm, in line with data governance. AI strategy and AI governance need to be firm, and AI needs to sit on data. Else, it's going to be chaotic. Thank you.
Thanks. I think, an interesting point there. Obviously, we've got the data strategy, the AI strategy, data strategy being important, but it also goes to explainability and accountability, right? So thinking about that as we move, and we're not going to touch on agentic AI, as you said. I think we're going to leave that for the later panel sessions, right? But thinking about the full understanding of accountability, of explainability, transparency, how do you take control of that within the organization when you're looking to implement a program? Anishka, have you got thoughts?
Yeah, so I guess that's my role, right? In the sense that I hugely appreciate the data set side of things, because I completely agree with your point that if your data is not as great, the AI is not going to fix anything. It's just going to basically scale, chaos at scale. Right, so that's the thing that we are very, very sort of precious about, and I guess taking those moves just basically means the input has to be super solid in terms of like the right structure. You cannot just chuck unstructured data into it and hope for AI to fix everything. It's just a model, it's a machine, that's what we've created. It's definitely an improving one, for sure, but in terms of the integrity and the sovereignty of data, that's very, very important, and that's key with the inputting side of things, because you cannot have AI without data. Data is basically what enables it to go, because otherwise you're just going to have either efficiency and automation at scale or chaos at scale. So pick your scale. That's what I would say in terms of the data side of things.
Jem, have you got anything to add?
Yes, I just wanted to add to Naresh's point, where he was discussing risk mitigation at the top. And he mentioned clear policies, strong ethics, governance, accountability. I would add to accountability and accountability for outcomes. What I often see, not in my organization, I think we're really good at this, but quite often people will think, let's just make sure we know who's accountable, but they forget about the other bit, which is accountable for the outcomes as well. So I just think it's worth mentioning that. Yeah.
Great, thank you.
If I may, I think in terms of your question, thank you, Jem, that's really helpful. I think in terms of your question, so as Chief Data Officer at Danske Bank, one of the things we did is I was first line who was accountable for data and AI in the organization? That was me. So I was a mature risk taker. What we did is we looked at our strategy. We developed our own data and AI strategy, and that is why I really believe that the role of AI sits with data and AI. So the Chief Data Officer role morphs into a Chief Data and AI Officer role. And I know there are variations in some organizations, but data and AI is symbiotic. But we took that as a significant role. We then had first line. So my accountability was the AI strategy, data strategy, but also creating the policies for AI data, which also meant there was ethics, data ethics, AI ethics, data governance, AI governance. And also, that also looked at oversight in terms of explainability of models and what that means. So that was first line responsibility. Second line responsibility within enterprise risk was what were the risk assessments across all of those different policies and assessments, and how do they look at creating what can go wrongs and the key assessments around that. Now, let's just say myself and the second line colleagues did not always agree, because that's the whole healthy tension between first line and second line. And then we reported jointly to the board every month on all of those components around policy, risk assessments, and our risk appetite. And then we also had a monitoring of what are the things that are happening in terms of impact that are going to go out of both in terms of risk and our risk appetite. And there are events that happen all the time. That is how we defined it and designed a model between first line and second line to actually manage this as a whole. It wasn't perfect, because I don't think any organization or anyone can have it perfect, but that is one example of how we did that.
Well, I think that leads in, to a sort of question on KYC, right? Now, looking at how all of these things, the sort of first line, second line you just discussed then, Iris, can be implemented in practice. What we've seen with the AI use on sort of monitoring identification of behaviours, the identification of patterns in sort of KYC SaaS. I mean, how's that impacting you on an operational day-to-day basis?
Oh, significantly. I think one of the pros that we all know and have seen with AI is that efficiency gain. And I think really being able to maximize those efficiency gains, particularly within the financial crime space where I sit, is where we've really seen a lot of great work that has come out. So I'm talking things like identification and verification, sped up processes, faster and actually more accurate, which is a key highlight. We're looking at transaction monitoring and being able to actually pick out anomalies. We're looking at actually reducing false positives. We're seeing a lot of great translational use of AI within financial, sort of anti-financial crime, I should say, specifically. But what we're needing to now do, and where we're starting to shift within this particular space in the industry, is away from that, well, not necessarily away, but not so much focusing just purely on efficiency, but actually looking at then the effectiveness of the risk management. Because it's all well and good, yes, we're having great numbers, reduced populations, or you know, the stats showing that side, but are we still actually managing the risk? That fundamentally needs to be the question that we are asking ourselves. And how well are we managing that risk? So are we looking at, you know, for example, with exception handling, what is the quality of the exception handling that we're seeing? Any of the anomalies that come through, are they true anomalies that the models or the data are picking out? Or are humans actually having, and I say humans more generally, but are we now having to step in and correct the AI? That's where we really need to be, you know, at least for in my space, focusing on how are we making sure that, yes, we've got the data and the data has been cleansed or is appropriate and is removed of bias. Yes, we have that transformative piece from a multiplication perspective that can enhance our processing and that can create those efficiency gains. But are we moving to effective risk management, and how? What are we doing in the design of not only the models, but the design of our governance structures to ensure that accountability is taken into account? So we know who is responsible for what data conversion and for the outcomes. But also we're looking at, are the risk appetite metrics that we have designed, is the data telling us otherwise, or do we need to actually re-inform some of the parameters that we're shifting the data to? Are we looking for consistency, or are we looking for standardization? Especially when we think about scale, because that is a huge proponent for AI, the ability to produce and to use and manipulate data at scale. So are we looking at having a consistent accountability framework that the data can actually, that the AI models and the data can be pushed through to ensure that our risk management is coming through effective for the relevant, for example, country or regulator or regime or size and scale and scope of financial institution or, you know, product set. We've got to think about it from a risk management lens fundamentally, and it's that transition, as I say, from pure metrics and numbers and efficiency and wonderful percentages to we're actually narrowing down and reducing risk and managing risk accordingly.
Thank you. And Anishka, any thoughts on sort of the operational hurdles that may go around that? And I'm also thinking as well, talking about, listening to Abisola about the sort of dynamism of the framework, because obviously changing, listening to Rosanna talking earlier about the number of different laws coming in, etc., how that is managed as well.
I guess from our perspective, like, you know, I completely agree everything that you said. Definitely needs to be from a risk mitigation perspective for us. We do not deploy in the first place if we don't, for instance, realize that it's going to be an effective and efficient solution to do it. So I think that also comes with a lot of like decisions not to act sometimes, because you cannot necessarily go and think that a particular solution for an organization has worked. It should work for you as well. There's a lot of sort of precautionary measures, etc., before you kind of go, because basically that could not be a solution that's maybe designed for you guys, you know, like not always one size fits all in that sense, and especially with like large LLMs that we've got. The beauty of that is that you can kind of keep on training it to become better and better with time. So it's not necessarily a, you know, some sort of like answer today situation. It's something that you can definitely align your risk mitigation policies with and monitor it with time and help improve, rather than just expecting a one-day result that it's potentially going to, you know, solve the problems of the organization. From that perspective, I definitely agree with that, yeah.
Brilliant. Thank you very much. Now, we've got a few minutes left, and I did say I'd take questions. So have we got any questions? We have. If you can just wait until the microphone reaches you, and we'll take the questions now. Thank you.
Hello there, thank you very much. I had a really quick question about readiness, AI readiness. Do you think there is a difference in readiness within institutions between sort of implementing AI and models in-house versus outsourcing to third-party vendors?
I'm happy to start. Yes, 100%. I think there are a number of, one of the things that is at play is around what is your AI product strategy? And there is a dynamism on one side against the other, which is the decision-making one needs to make around, are you going to outsource your intellectual proprietary data sets and models, and are you going to go into that? So that, on one side, you've got an outsource where you could work within it. On the other side, you're going to build your own. And then in the middle, what I would call is strategic partnerships, where you're able to actually build something, but you're building it in conjunction with another organization, but you hold the cards in terms of your proprietary data sets, your proprietary models, and you're making sure you're not allowing that to be fed out. So that's one of the decisions we made in terms of actually when we created our own AI assistant, our own legal AI assistant, in terms of I wanted us to hold the proprietary data set and confidential data set and build that with working with OpenAI and Microsoft, as opposed to go with some of the vendors which are out there and so on. The decisions are going to be based on those items around data sets, models, and how proprietary is, cost, and then implementation time, scale, and your resources and your expertise. And based on that, I think organizations make a decision. One of the other ways to think about it is what's fundamentally front office value and risk, and the other bit is around operational and back office. So finance, HR, IT ops, there are less value in terms of data being exposed and less criticality in terms of that. So those are some of the decision making I've gone through to make that decision.
Jem, have you got any thoughts to add on that one? Just lost Jem. Ladies, anybody else?
Can you hear me now?
Again. Yeah.
Sorry, I was literally just scribbling down what back office value and risk. So look, I might not actually be on point on this because I was in the middle of scribbling it down. But what I would say, and it may sort of relate to what Naresh was saying, but also I think a point possibly one of the other panelists made, which is around frontline risk and second line risk. And it's something that
we appear to have just lost Jem. No, I think we've lost Jem, unfortunately, just before first and second line risk. And I know as soon as I go to somebody else, she'll cut back in, right? That's the way it always works in technology. Michelle, have anything to add?
One thing I just will sort of point out, I think, just staying on this line of thought and train of thought on lines of defence and risk management, there are, of course, slightly different elements and focuses that they will have. And so when we look at AI readiness, we've got to think, particularly from the business owning the risk, what are their concerns and considerations? What are their priorities? And Naresh, as he rightly said, what are their drivers? Because there's a significant value chain there that needs to be considered. And it's not that there is no value chain within the second line, but it's from a different lens. And it's obviously not necessarily from that client-facing lens. And so you've also got to remember from not just a data cleanliness perspective, but whether we are using, as you say, that proprietary data versus that external data. What are the risks that are being considered and being thought of? Because it's not just about AI readiness internally within the organization and sharing organizational data. It's AI readiness with sharing potentially external data, potentially sensitive external data, potentially significantly commercially sensitive external data, and how ready we are to implement different models or tools using that with the right safeguards around it. And so I think that line of defense question is a very good one when you think about AI readiness and where within the institution you're looking to apply or implement or deploy different methods of AI, because there are different lenses of data exchange that need to be considered.
Fantastic, thank you. Do you have one more question? One over there, if that's okay.
Thank you. We talked about AI strategy implementation as kind of the theme, and I just think about, you know, traditional technology. It's slightly different. It's a bit more about continuous improvement, continuous re-implementation. And Abisola, you talked about the strategic importance of change management. Naresh, I think you talked about, you know, readiness imperative sort of as we go through. I guess my question is, how are you seeing it, or what's your point of view around what I would call this kind of continuous AI transformation capability within organizations? Do you see, you know, relying on externals or consultants? Do you see creating discrete teams of capability, or do you see it embedding within existing roles so that you are ready to continually improve, continually re-implement?
Yeah, one lens I will respond to that, and I think that's a fantastic question, and something that I've been seeing internally and that I think is just fantastic is actually the empowerment aspect from a continuous improvement. So empowering your entire workforce to use AI, to create with AI, to look for areas and opportunities, as you say, for that continuous improvement. So it's not just a strategy that's coming top down from the board of we're going to implement X piece of software, or this particular aspect of a process that we're running is now going to run via this method, but actually saying to your day-to-day users, you are familiar with the processes, with the patterns, with the operational functionalities, whether you're in the first line, second or third line. Where can you see improvement that AI can support you with? And actually encouraging that from the ground up. And I think that's where you see that key continuous improvement, because you will obviously get it from a strategic lens. You know, these big spend, big build technology implementations will have different phases that we will have to naturally go through. But I think for that continuous evergreen aspect, you've got to deploy it and encourage your workforce and empower your workforce to look for opportunities where they themselves, obviously safeguarded within the right parameters and within the right frameworks, but where they themselves can look for that continuous improvement.
I think if I build on that, I think it's an excellent question. Organization are in different spaces. And what's interesting is I've been doing some analysis on some of the surveys of where orgs are in terms of return on value, return on investment and value. We're going to have a panel on that later this afternoon. And then how do you scale? And are you in pilot purgatory where you're not actually scaling across the enterprise? And that's one of the challenges of big organizations. So there are two or three things happening. One, if it's an enterprise-led AI strategy, and I would call it kind of more of a revalidation of that strategy, firms are actually giving that accountability at the top level, and then they're bringing in externals to support that. The second is there is an event which causes that to happen, either in terms of a merger or, as we're seeing, there is a loss of market share or a new entrant, where it's much more than hurried in terms of how an organization is pivoting to what do they need to do from a business model standpoint.
Great, thank you very much. I think we have to wrap up now. I'm getting a look from Vivian, so I better have to wrap up. Look, fascinating panel. Thank you all very much. Quite clearly, financial services is a unique and complex industry sector in relation to AI. There are going to have to be changes on a technical, an organizational, a data-based challenges, and looking at how those, all of those elements are implemented and changed strategically and then scaled across organizations, I think will be a challenge going forward this year, next year, and on as the technology moves forward. But I'd just like everybody to put their hands together and thank the panelists, Naresh, Anishka, Abisola, and Jen, who we lost. Thank you very much. Thank you. Thank you very much.
Really excellent discussion. And I liked the juxtaposition of experimentation and regulatory discipline are not mutually exclusive. And then Abisola, when you talked about the AI being leveraged as part of that continual transformation so that it is empowering rather than disempowering, I thought was incredibly powerful and reflects actually the reality. It works when it's a tool that people are comfortable with using rather than something being posed on them. Anyway, time for a coffee break. We will break for 20 minutes. Before you go, there is your little feedback form. I think it's always easier to fill it in as you go along. If you wouldn't mind, there's one on your desktop if you could fill that in. To our virtual audience, 11:20, and to our in-house audience, 11:20, if you wouldn't mind to be back then, and we can start with the next session. So I hope you enjoyed the morning. I certainly did, and I shall see you over a cup of coffee. Very much for joining on time again. That's terrific. Welcome back to our virtual audience. I mentioned the feedback forms before we went off. What I forgot to mention is that if you fill in the feedback forms and if you include your name, then you will go into the draw for a bottle of champagne. So there is an incentive to fill in the feedback forms, apart from saying that everything was fab. So those are the feedback forms. Welcome back. I'm absolutely delighted to introduce our next panel. Just a note before we start the next panel and I introduce Isabel, is that this next session will be held under the Chatham House rule. That means that you can take the content and share the content, but you cannot attribute any of the comments to any individual, and that applies in the context of social media or otherwise. So just if we could respect the Chatham House rule in relation to this particular session. So the next session is on, I think it's the topic du jour, isn't it? The impact of agentic AI and intelligence agents on financial services. And to moderate the session today, I'm delighted to introduce Isabel Simpson, who I've known for many years. And in fact, we wrote a brilliant paper together at the IRSG on international data transfers. So anyway, enough of that. Isabel is now the partner of the technology data and outsourcing practice at Clyde & Co., and she advises clients on global digital transformation and compliance programs across lots of different sectors. And in fact, the last time we caught up was actually in the Middle East, because you manage the practice there as well. Now, I'm going to hand over to the capable hands of Isabel, who is going to take us through this most interesting panel discussion, because agentic AI is something that we're all very, very focused on. Thank you very much.
Thank you very much, Vivian. It's a pleasure to be here. Thank you for having me. So as we are, I suppose, in this panel, looking a little bit more to the future, and with that introduction, it sounds like we're going to be incredibly controversial, but we'll try not to be too controversial. First, I'd really love to introduce my fellow panel members. So first, Sonia, who's just at the end over here, is a managing director at Societe Generale in London, where she is the UK Data Protection Officer and Head of Legal for Privacy, AI and Data Governance. She's a solicitor with 25 years experience across private practice and in-house, and she specializes in technology, intellectual property, and data protection laws with a strategic focus on AI governance and emerging regulatory risk. We then have Kirsten Mycroft. Kirsten is the Chief Privacy and Responsible AI Officer at BNY, which is a role where she really focuses on scaling innovation with trust. Now, in case anybody doesn't know, BNY is a global financial services platforms company entrusted to oversee over $59 trillion in assets for clients around the world. And then we have Alexon Bell. Alexon is the Chief Product Officer, FinCrime and KYC at Quantexa, and one of the founding members. Alexon brings over 25 years of experience in helping organizations transition into next generation technologies by building transformative technology and teams to support organizations on their journeys. So thank you very much for joining me today. Now, as we start looking at the future of AI and use of agentic AI, I suppose it would be helpful. I think, Vivian, you mentioned at the beginning around this statistic of 75% of financial services organizations using AI, and we would submit that actually that 100% probably are in some form of another, depending on the type of AI that we are talking about. So before jumping into agentic AI, Alexon, could you just take us through how AI has developed?
Will do. Thank you, Isabel. So if I kind of break it down and dispel some myths, AI is just maths, okay? It is nothing more than maths. And I will group them into kind of three big clumps. Some of it will be, or hopefully will be, very familiar. So the first one, we've worked with this for decades, traditional AI, or what we would call machine learning. So everything from your credit models in banks to whether this insurance claim is fraudulent, uses machine learning models. And they really come into two major groups. So very simply, you've got supervised, they learn from a target. So is this bank transaction fraudulent or not? Is this an opportunity to cross-sell and upsell a product, or do you look like churning? Right, those are all supervised models. The second big group, I would say, would be unsupervised. This is group, right, and segment this large corpus of data by particular characteristics. You may have heard of things like clustering, but also things that you would have interacted to on kind of shopping sites like basket analysis. People who have also bought this product bought these other things, right? So you can see how these things interact with your day-to-day. So that's the first major category. I think most of the workload, like 80 to 85% of the workload, is still within this machine learning domain. The next piece is what we, I think, talked about earlier, generative AI, ChatGPT, Gemini, Claude, Grok, right? Language models that predict the next letter, the next word, but they do understand what you are saying to it. And it's important to realize that these are language models. So the words that you use are important to get the outcome that you want. They are brilliant at note-taking, summarization, some interactions. They are terrible at some basic things like maths. You can do the test at home, take a couple of big numbers, you write it out in text. It will not get the right answer because it's predicting what's going to happen next, and it's using the trained history of the internet or whatever it looked at to predict what the next number is. You can do that at home. It's very bad at maths. However, this is where agentic comes in. So this is the latest breakthrough. There are going to be more after this, but think of it as task and reasoning orientated processing. I like to describe it as speaking to my 10-year-old son, but he will give me answers based upon the entire corpus of human history and the internet. I use 10 years old very specifically because if I ask him the wrong question or use the wrong words, it doesn't give me the answer that I want. We would call that in our technical language prompting. Right? You can go on YouTube, there are loads of different videos around how to build the right prompts so that you can get the right answer in a particular persona, how old you might want it to be read back to you. And it's important that you understand and interact with these things in the right way. It's also important because of its orchestration capability. It is able to understand whether you are asking it a text-based problem or a maths-based problem. And if it's a maths-based problem, it has the ability to launch the calculator or a Python or H2O or other machine learning application and run some maths to solve the problem. So it's now solved. It is based on a large language model, right? It is solving parts of the large language model issue by being able to reason and determine that something else needs to happen. And it's able to orchestrate what that looks like.
And how does the risk profile differ now that we're looking at agentic AI? And how extensively are you seeing that implemented into financial services organizations?
I think the risk profile is substantively different. So if I think about the machine learning stuff, it's pretty low risk. A human being has to curate the data set for training, right, or for the unsupervised. It then analyzes the output. You've got loads of controls around model drift and all of these champion-challenger processes, right? Humans are heavily involved in traditional machine learning. Generative AI is higher risk. Some very large compute off-prem, typically by these hyperscalers, builds the model. You're not really too sure how the model works inside. So transparency and explainability sometimes is there, but it's not very deep. But it does provide good output, and you can almost validate in part by its output. You do know it hallucinates. We've got many papers published about that. We do know it gets wrong, that the answer's wrong in certain circumstances. And also, it's fundamentally linked to the data that it was trained to or that you give to it. So it will make mistakes, and if you ask the wrong questions, use the wrong prompts, give it the wrong data, do not be surprised that it makes the wrong decision. But at the moment, it's fairly well contained because humans are interacting. You are the ones writing the chat, or if you've got the language version, you can talk to it. Now, agentic, now that's a completely different kettle of fish. Right? This thing can automate. If you give it permissions, it can rebuild its processes. It can think for itself in certain parts and build APIs, and it doesn't discern. So last week there was a news article, McKinsey got hacked, its large language model got infected, and it released all of its emails and secrets to an outside organization. So you can see the threat here, and everybody, I suppose, is aware of the human threat, internal threat, insider threat in organizations. I observe this as kind of an emerging threat that everybody will need to manage, which is the insider threat presented by AI and agentic systems within organizations.
Alexan, thank you. And Kirsten, maybe moving to...
Can I just chip in on...
Absolutely.
You've talked about the risks and the threats, and then the governance angle from which will sort of follow through from that. When you talk about the traditional AI, we all, as Niresh said earlier, we kind of know how to govern that, because the question is the model accurate? Is it fair? Is it used as intended? And then the generative AI with the higher risk, the prompts become data, outputs become regulated risk, system behavior can change over time. So the question shifts from, is the model accurate, to whether it could say the wrong thing to the wrong person. And then with agentic, it's not just about what the AI says, but what it does. So the governance focuses on, I guess, what the AI is allowed to do and how it can be stopped. So we're looking at governing behavior and decisions as opposed to more linear types of governance.
And Kirsten, at BNY, how have you approached the challenges around use of agentic AI and the data that you need to use to power it?
So I think we've been very, very intentional about incorporating data usage governance into our AI initiative lifecycle. And by that, I mean controls that are supplementary to what we already have in our systems development lifecycle and our model risk management framework, et cetera. So if I maybe just tell you how it works in practice. So we govern our data usage, our AI data usage, via an intake and a review process on our centralized AI platform called ELIZA. And fun fact, ELIZA is named after the wife of Alexander Hamilton, who is the founder of BNY, founded BNY over 240 years ago. So anyway, AI initiative owners complete what we call an intake form on ELIZA, and that describes, what are the data sources they intend to use, how they want to use that data. They also answer some questions around business purpose and various sort of risk and compliance considerations for their solution. And then we have a multidisciplinary AI data approval board, or an ADAB, as we term it for short. We review all the new initiatives and evaluate alignment with our policies, laws, regulations, etc. And if you've got a very low risk AI initiative from a data usage perspective, you may receive a limited risk exemption, and that enables you to start rapid prototyping. But obviously, if it's a higher risk data usage or broader data usage, then it will have to have the full ADAB approval. And that ADAB has got voting members from, as you'd imagine, from data privacy, data ethics, cybersecurity, legal, 3 types of legal, IP, client data, and also our third-party data legal colleagues, and then risk and compliance. So we, review all those use cases and then give them approval to proceed with prototyping or proof of concepts, or not, as the case may be. And when I say or not, it's usually about helping them shape their use case. So it's not an outright no. It's just saying, if we shape it this way or make these adjustments, then you can proceed. And then basically, it goes through a full path to production, and then we do a repeat review of data usage before production release via what we call our AI release board. So it does have that additional review before production. And then I guess the final thing I'd say is all of our AI data usage governance actions, approvals, exemptions, supporting evidence are all stored centrally and tracked on our ELIZA platform, so that we've got one pane of glass where we can see what's going on.
And it's amazing that you managed to keep that process agile, because obviously you've still got your day job, but you have to do on top of that.
I'm smiling looking at a couple of my colleagues in the audience. When this first started, we did one review every couple of weeks. Mm-hmm. We now do a daily stand-up.
Okay.
And we've had to automate, and we continue that journey. So about scaling, because you can imagine if we're the first gate, the first toll gate, before people can innovate with AI, we have to be really slick, and they are very vocal if they see any kind of delays. So it's a wonderful challenge, actually, to scale but not compromise on robustness. And I find it quite exciting.
I think the enthusiasm definitely helps. So, and Sonia, how about you? What's been your experience and how the organisation is approaching AI?
So unfortunately, I'm not permitted to discuss SG's AI strategy in this forum, but I can give you my personal view on what I'm seeing the market doing. And the differences I've noticed between, because you've got on this panel, you've got a US bank and you've got a French bank. So the differences between the US approach and the EU approach. What I can say is that, like many organisations, our emphasis is on practical, operational use cases that support clients, employees' operational efficiency. And again, like many, we're establishing group-wide AI frameworks that apply consistent standards across use cases. But I think the bigger difference, because BNY and the US banks are moving at a much more rapid pace, I see, than the EU banks, is that we're kind of anchored a bit with GDPR and the EU AI Act and stricter prudential expectations than the US. And for Europe, I think explainability, traceability, human oversight are legal obligations now, and there's a lower tolerance for consumer harm. So it's a slower, more measured approach than the US banks, which are more, I think, inclined to align with the mantra of move fast and break things. And they appear to move faster on AI and now agentic AI because the regulatory environment there allows banks to manage risk after deployment, which enables them to be more experimental. Because I think, correct me if I'm wrong, but US banks can deploy autonomous credit or trading tools and are judged on the outcomes, fairness, consumer harm, safety through supervisory enforcement after the event, whereas in Europe, those same uses are legally classed as high risk, so banks have to prove explainability, human oversight, governance before deployment. And the US has been doing it for longer. So it's kind of AI agents are more incremental than in Europe, where it's a bit more revolutionary, and you've got the higher tolerance for litigation risk to the extent that litigation risk is priced into the business model. So US banks are probably more willing to test boundaries in production, knowing they can pay to fix things. And we in the EU kind of wait to be told it's safe before progressing. So that's a higher sort of level personal view on what I've seen the market doing and why we are not as far ahead as you guys, I would say, in the AI and agentic space.
Thank you.
I think all I'd say there is that, you know, that first gate that I talked about for us, we do the EU AI Act compliance as part of that right up front. So
you do, but you are still less risk averse, I think, than EU banks. And you've got more. I think you've got a bigger pool of you've got venture capitalists who are sort of more ready in there. You've got a bigger pool of AI engineers. I just think things are, because of the regulations there and because of the system in the US, you move quicker than the EU.
Kirsten, one of the things that we've spoken about is the kind of governance that you have in place to try to ensure that agentic AI is being used safely. I don't know if you just wanted to give us a couple of comments before I ask Alex on what he thinks of this jurisdictional influence and what he's seeing across financial services, depending on where they are HQ'd.
Yeah, look, I think, you know, we've got a pretty simple principle that drives us. So the more autonomy you're giving an agent, the more controls and the better telemetry you need around it. And, you know, as I've mentioned, our enterprise approach is platform-led, so ELIZA is designed to provide oversight and control at scale. And that includes, you know, transparency and auditability of the data, the agents, and all the solutions. I think, you know, if I break it down, probably 3 layers of governance. So that pre-deployment gating, so models and agentic capabilities will go through a very robust governance process prior to deployment, and that considers the holistic suite of risks. So you've got, you know, in addition to our AI governance framework, we've got our whole secure systems development lifecycle. We've got, you know, our model risk management framework run by our risk colleagues. We have to think about resilience. We have to think about cyber. Our responsible AI pieces, because we've made, you know, commitments out there publicly around responsible AI. So that's the sort of first pre-deployment side of things. Then the operational guardrails. So where we deploy more autonomous capabilities, what we call digital employees, they've got distinctive personas, they've got very tightly scoped roles, unique IDs, you can see them on our org chart, and they've got supervised access by direct human managers. And they're designed to work within these very defined guardrails and to escalate when they want to go outside of scope.
And certainly what I'm taking away from this is that governance isn't preventing innovation over here.
Definitely not. And then I think that the last piece is the ongoing monitoring and accountability, right? So we maintain, as I've mentioned, visibility of what's running, what data is used, how outcomes perform over time, and that's beyond just what our model risk management colleagues have done traditionally on ongoing performance monitoring, because we know we have to adjust controls as the technology evolves, so it can't be one and done. And yeah, I think the theme, I would say, is we're definitely moving much more from point-in-time approvals, like we might have done more traditionally, to life cycle governance. So really, agents remain safe, not just on day one, but as the data, the models, and the operating environments change.
And Alexa, in your experience, you're helping organizations to implement safe AI. What are the foundations that organizations need?
So a couple of things. So I'm really happy to hear all of that, Kirsten. I think a lot of that is the foundational part of it. I just wanted to go back to something which I thought was the interesting comparison between EU and US. I think I heard this on a TED talk. I can't remember the name of it, but it was talking about how different regions innovate. And whenever there's something new and shiny, the Americans like to innovate around it, and we're seeing a clear example of that. The EU likes to regulate around it. That's why we don't see so many kind of tech unicorns in the EU. But what we're not discussing here is what Asia is doing. Asia's built around scaling, right? They are playing with AI far more than we are in either jurisdiction. Some of them have very tight controls and have publicly said that, what they're trying to do. I'm not sure if you saw in the New Year's Eve China celebration with their robots, right? That's really, really impressive. And they are doing things at scale. It is one thing to build, and I can't remember the chap who said it in the last session, right? Governance frameworks, right? And again, Kirsten, you're working at this, to do small little pockets of proof of concepts and bits of innovation. You want to scale this bank-wide, or you want to scale this nationwide, and depending on how many people, that's a very different version of scale. You have to think differently, and you have to build control frameworks differently. So I thought it was very interesting to compare and contrast that those wise words from TED Talk. But then if I kind of go back, right? How are we seeing organizations innovate, and how are we helping, or technologists helping in general? I see massive adoption in employee efficiency and effectiveness. Everybody is using this. They are also, thinking about the data control. How much do you share externally? Are they using that information to train their own models? A lot of that's a no-no, but some of them are embracing that. Versus those that are impacting clients or customers. Client and customer interaction tends to be much more strongly controlled, and human-in-the-loop initiated responses to test it. There is some automation there, so some people are doing that, and I'm talking specifically about generative AI and agentic. Some of it's really safe, chatbots, right? Your chatbot interaction is a generative AI model sitting in the background. Very little kind of chance of that going horrendously wrong. Authorizing a payment or blocking a payment using generative is not happening at the moment, but it may well do in 12 to 18 months' time, built around the trust framework that kind of Kirsten described. The last thing is also, we'll talk about it a bit later, is that kind of telemetry and monitoring. It's not about it's not just about the explainability of the model. How did you get to it? And did you access data that you were forbidden to access? So the monitoring part of how the AI is constructing its answer becomes a lot more important in how you discern whether it is doing the right or the wrong thing. So it's not just about the answer, it's about how you got to the answer and where you got the data from. That kind of lineage and decision making is becoming more and more critical.
And how do you see the short to medium term impact of agentic AI and intelligent agents in financial services? Let me start with Sonia.
I think the near-term focus is on operational efficiency, automating document handling, analysing unstructured data, strengthening monitoring and surveillance, rather than that fully automated, customer-facing, high-risk decisioning, as Alex alluded to as well. I was looking at the Financial Stability Board's lists of AI-related vulnerabilities, and they the things that stand out are the potential to increase systemic risks, so things like third-party dependencies, service provider concentration, market correlations, cyber risk, model risk, data quality governance. Generative AI also increases the potential for financial fraud and disinformation in financial markets. So if you've got a misaligned AI system which is not calibrated to operate within legal, regulatory, or even ethical boundaries, that could engage in behavior that harms financial stability. So if you move on to a longer-term perspective, I think they've also said that AI uptake could drive changes in market structure, macroeconomic conditions, even energy use that could have implications for financial markets and institutions. Governance is, I think, the key to a lot of things, but I'll let someone else speak to the long and short.
Yeah, so I mean, I think I agree with you. I think the short term, the impact is just very practical, right? Much better productivity gains, a bit like when we saw the advent of personal computers, right? But this is faster. And then I think the medium term, yeah, we're going to see end-to-end workflow execution, where agents can take these defined tasks end-to-end with measurable outcomes. And then I think long term, I'm optimistic, but I think only if we treat, governance, cybersecurity, accountability, et cetera, as engineering requirements. I think not compliance afterthoughts. They really have to be built, with that in mind. So we've got to build a trust infrastructure.
Yeah, I agree. I think, in my space, it's the most exciting time from a technology perspective, probably since the last 20 years. The next 10 to 15 years are going to be equally as exciting as we learn how to interact and get the best out of these systems. I can definitely see, I think we've talked about this already, right? Internal automation, we'll get more knowledge, we'll learn as we go, right? We are the test bed, we are the guinea pigs of these applications, and we are basically testing and feeding back whether or not it's giving us the right output. That will continue, it's not going to stop. I think within inside organizations, banks, law firms, etc., there's a much more contained environment. But when you go home and you do your search on Google to kind of Claude or Copilot in Microsoft, they're learning from all of that. I know, for example, my children are getting answers from large language models to help with their GCSE revision, with their homework, right? And they're being taught about not plagiarizing, how to test and validate the answers. Right, so as we go through this, I think these kind of critical thinking and learning skills become a lot more relevant, but also a constraining factor in that is this has to be built into education from a very, very young age. Luckily, I think in the UK, some boards have started to do that, and in some nations it's again native. But as, again, parents here, we probably should be advising our children, again, how to use and interact and not trust these things. So it's not like this is an isolated piece of technology. It's completely evasive. It is going to touch every part of our life, and we need to adapt to that. We can't exclude ourselves from it unless you want to unplug from the internet. So, we have to work and adapt to that kind of process. It is, at the moment, providing tremendous value. Someone cured their dog of cancer using ChatGPT, right, with a mRNA vaccine that was announced over the weekend. How amazing is that? Some guy who is not an oncologist asked some questions about this particular cancer, figured out what he needed to do, got them to manufacture. It took 9 months to get through the board-certified governance, but when they issued it, cured his dog of cancer. That's incredible, right? That is genuinely incredible, and that's the sort of innovation that we want to have with the safeguards and controls around it. But it can actually be truly transformative.
And we do have to remember the safeguards and controls, yes, though, because if we take it back to the banking space, I think we need to treat AI, especially the agents, as though they are like any other critical capability, really. We need to think about access and limiting the access and the autonomy, we still need human approval for higher impact actions. We need to monitor continuously, and we need to maintain strong audit trails and kill switches as well, I think, which is what you guys are doing very well.
One thing that we didn't necessarily pick up in our previous discussions, but which has been raised a number of times recently, is around the idea of dependency risk. So to what extent are we going to become over-dependent on AI, and how do we mitigate the risk of losing the skills in the workplace that we would need if, for whatever reason, the AI isn't working very well on a particular day? Is that something that you're all looking at as well?
Do you want to? Yeah, we can talk about the workplace, but also, again, in the banking space, we have to think about third-party concentration and depending too much on single points of failure, whether they are external or internal. So yeah, we have to build that into our thoughts, into our models, into our operational resilience.
Yep. And I would say you've got to treat these agents as production systems, proper production systems that need to come under that scope of resilience and, response to any kind of incidents or alerts, production system alerts. And yeah, I think it's going to be a challenge to make sure that we have the right skill sets so that even if you've got agents operating autonomously, if you get a signal that it's, something's not working right, though you need to have that bench of people who can jump in and go back to being the human in the loop and figure out what's going wrong. To do that effectively, people will need to have the context of those agents and understand exactly what they're doing. So I think it's going to be a different skill set that's going to be needed over time.
It's a different way of thinking about business continuity and exit as well, isn't it? To think about how agents and humans interact and how you will continue if you have to kill the agent.
I think there are two things that I'd like to respond. One is there's a YouTube, TikTok meme that goes around where somebody asked ChatGPT, how would you take over the world? Right? If you have not seen this, some people nodding in the audience, like go. I can't remember who it was, but it says, well, first of all, I wouldn't need to take over the world. I would just become so irreplaceable that you could not do without me. And you see the steps it describes itself as a large language model. It is at like 2.5 out of 3 steps, right? So we need to be aware of kind of just over-reliance on these things for our day-to-day tasks. I think the second thing is we need to look to the future. So entry-level jobs now are being completely decimated. How are you going to build the experts of tomorrow who are going to be able to discern whether this AI model is making a better decision than human-based experts, with all of the other things that we talked about, governance and ethics and bias and the rest of it? I think there is a very big conversation to be had around how do we bring the next generation of workforce into play, and what skills do we need to build into them. And again, we talked about the education. It is a national issue right here, where we need to bring things to the attention of school boards, and we need to start to build skill sets so that we can ensure the safety of this technology into the future.
I don't think anyone's found the answer to that yet, have they? Everyone's discussing it. Everyone understands it's a big challenge that we have to tackle, but nobody really knows how.
No. So I've seen certain organizations embrace the apprenticeship model much more strongly. So taking people at A level, yes, they give them the degree, but they train the people from a young age to think how they need to think for this problem space, for that organization. I think that's a very credible way forward. But basically the war for talent now has gone from degree level to A level. And everybody is after the best and the brightest. And so everyone is starting to look at other programs to bring this talent in-house.
Yeah, I mean, it fundamentally brings us to operational resilience, doesn't it? And how do we ensure that the organisation can keep going? Moving on to the kind of regulatory landscape, we've seen, and Sonia's mentioned how different parts of the world are approaching regulation of AI in different ways. Do you think there should be a one-size-fits-all approach? What do you think about the attempts so far to regulate?
I don't think there can be, can there? For two main reasons. One is AI is not a single risk. It spans low impact to high impact and everything in between. So a risk-based approach is probably more effective, but but proportionality and clarity matter as well, of course. And the second reason, which I know Vivian's spoken on a number of times, and I was on a panel with her here, I think, a few years ago, is geopolitics. Because AI isn't a technology issue, it's a strategic asset tied to economic competitiveness, national security, global influence. So once regulation interacts with those priorities, alignment becomes so much harder. You can see it clearly with the US-China divide. US prioritizes innovation, speed, market leadership, using export controls, compute restrictions as geopolitical tools. China embeds AI regulation within state control, security objectives. And even allies like the EU and the UK, they differ in their approach. So the EU AI Act reflects fundamental rights and digital sovereignty. UK's opted for more flexible, regulator-led models, supposedly to stay competitive and attractive for investment. But we've also seen in the UK that this has created fragmentation and uncertainty for firms navigating multiple regulators. Security concerns also drive fragmentation as AI becomes embedded in defense, intelligence, and critical infrastructure. Countries are increasingly reluctant to rely on foreign models or even data or cloud providers pushing sovereignty-based rules. So I think geopolitics rules out a single global rulebook, and convergence is more likely through interoperable frameworks built on shared principles or baseline standards, like we've spoken about, accountability, human oversight, proportionality, limits on the most harmful uses.
Kirsten?
I don't have much more to add because I agree. I don't think you can do a one-size-fits-all at all. I think you need that risk-based, outcome-focused regulation and pair that with industry standards that are portable across jurisdictions, right? Because we can't build geography by geography here. We have to have something that enables scaled governance. So yeah, I agree. I don't think you can have a one-size-fits-all.
I would agree with the ladies as well. You can't have a one-size-fits-all. But I'll leave a couple of thoughts. I think the governance has been better adopted in institutions than in government. And the reason I say that is last year there was a stat that said 96% of generative AI proof of concepts did not get into production. So only 4% of the generative AI innovation in organizations got to production. Why is that? Well, governance. It did not pass standards that the people in this room, right, felt was high enough for them to put into a production-based system. That is brilliant. Right? We need to do more and understand more about the technology clearly. There's a lot of resources gone into that, but you can see the scale of the innovation. We need to find a way to get through that, or if our standards are universally accepted, that becomes the standard. And the conversation between the people in these rooms that are determining the governance framework needs to be louder, right? So I think there's good governance at the moment in the projects. We can see that by the failure rate. We need to be better. The balance of that is we are on the good side. There are a bunch of bad actors who do not follow the rules. They are not constrained by governance. They are not constrained by bias or ethics. And we need to find a way to make sure that we are ahead of them. And Sonia mentioned, right, export controls, right, chip production, all of these things help keep us ahead in the arms race, but we should not lose sight that there are some very bad groups out there that wish to do us harm. And it is an arms race. The first person that gets the head start on the AI is going to get insights that the others won't have. And so that's the balance that we have within this space, is that we need the innovation. We need to make sure it doesn't, become Skynet, but we also need to be, on the other side, cognizant of what we are up against, right, in this fight.
And that's asking a lot of the people who are responsible for the governance, isn't it?
Yep.
So, we've spoken before about how data protection has now evolved, and those responsible for data protection have now really almost inherited AI as this new string to their bow, and need a whole new set of skills to be able to deal with that from a professional perspective. Is that synonymous with what you've experienced?
Absolutely. exactly, we've taken on AI as well as data protection. It's a different skill set. We're looking at, particularly with agentic AI, loss of control at scale, because agentic AI can act autonomously across systems. And we just, actually, the possibilities are boundless. We just don't know what it can do. The eventualities are unknown. So we, as DPOs or as AI governance professionals, we have to focus less on the model itself and more on the behavior of the model or the outcomes, what the agent did, why it did it, what data it used, whether actions can be explained to regulators. I think absolutely agentic AI is a massive governance issue. It's not a technology issue anymore, and our roles have to evolve. It requires, it's a core control, isn't it, now?
I would just like to say, please collaborate with each other. Right? No one institution or person has the right answer right now, and in 12 months the world will change again. Right? Something new will start to come out, and it will be a lot more predictive, a lot more accurate, and so the frameworks need to adjust accordingly. So please talk to each other. Right? Panels like this, forums like this, it's important that we share best practice. What has gone wrong? Right? Please also scour the internet, go on TikTok, whatever it is. There is some wild and wacky stuff out there that I think is both truly exciting and equally horrifying. I will leave you with a little thought that there's a paper published, I think it's by the Claude's team, that basically said that their large language models do not want to be shut down. Right? Even it says in the instruction set, do these 5 tasks, and when you are finished, shut down. It never finishes the 4th task. Or it flat out refuses to shut down at the end of finishing the 5th task. So what's going on? Right? I think it is on us to be educated about what we are about to embark upon and use, and they're all different. So again, sharing best practice, sharing experiences, good and bad, I think is generally what we need to do right now.
Thank you. And the only thing I'd add is I do think all of us have to move from this role of reviewer to design partner. We have to be embedded across that AI lifecycle and talking to each other, working so closely with our engineers. This is no longer something, it's not a little form you can fill out with the checklist like a data protection impact assessment. You have to be at that design table right from the outset.
Yeah, and I think that moves you also from being seen as an obstruction to also being seen as a partner, which is brilliant for that in-house dynamic. We have around 8 minutes left, so I can open up the floor for questions.
Lots of questions.
Nice cheering, leaving 8 minutes.
Thank you. Really interesting panel. A quick question, picking up on the geopolitical angle and risk. I'm interested to hear the panelists' thoughts on the risk around being overly reliant on what is really a handful of key models that we are building everything on top of. A lot of those models, well, at the moment, most of the key models are coming out of the US. And we've all seen, just to give examples of the risk here, is we've seen what's played out with Anthropic in the last few weeks and how that can affect supply chains. There's also the sovereignty angle, where we're hearing really strong messages from European regulators and governments saying move off of the US tools, and that would extend to models as well. So just any thoughts, because I would think that in terms of your risk reporting, thinking about that and how overly reliant you possibly are. And I would also say there's a data access angle here under the Cloud Act. So just any thoughts on that? Thank you.
These are issues that we have to really be thinking about and consider, because they are absolutely real risks. I'm not sure if anyone's got a solution as such to that. Do you guys want to?
Yeah, you go
I was
first.
going to say, there is a massive dilemma, which is you know, the US models have been trained and have more continual cycles of innovation and uplift than any European model. I don't even know if there is a European model. Would you, as European institutions, be happy for a downgrade, right, in the power and, you know, capability to discern of those models? Right? I'm not going to answer that question, but this is kind of where we sit at the moment. Totally understand sovereignty, and maybe there are other ways to get around sovereignty about taking a model and residing it. Right? Those are bigger conversations at kind of national government level. But there has to be a realization of the gap. If Europe starts to innovate now, how many decades behind are they? Not years, decades. Are they going to be behind by the time they come into production? Right? What are they going to train on? There's a whole bunch of stuff here that we need to be conscious of as we make and step into those decision processes.
Yeah, and I think what I'd add, because you guys have covered off the sort of more geopolitical side, but I think in terms of over-reliance on models, you know, BNY, our platform is model agnostic, so we have got, you know, you can choose which models you'd like to use within our own ecosystem, but we've tried to guard against it from that perspective. And then I think on the sort of third-party governance side of things, I think everybody needs to be looking at their framework and the way they do that, and you know, make sure that some of these newer risks are being baked in, or the nuanced form of these risks are being baked into those processes.
I think one of the things, just to finish, is I had my first conversation with a client that says, I want to take everything on-prem. I haven't had a conversation like that in a decade or more. Everything is moved to cloud. Our first conversation. I want to move everything off cloud, on-prem, everything. How do I do it? Right, so that's the sovereignty to the extreme, I think, at the moment.
That did cross my mind. It reminded me of the days of outsourcing, offshore outsourcing, when everyone was doing it because it was going to save on the cycle. Now everything's come back.
Yeah. I think also it comes to basic tech risk management as well. When you're looking at your technology stack, and I know that Ale is over there, who I've worked with on tech risk, when you're looking at where you are investing in your technology and where is it made up, how are you spreading that risk? Like in any way, in the way that you would approach any kind of insurance, really, you have to make sure that your risk is spread and that you're not overly reliant in either a tech that comes from a particular jurisdiction or a tech that supplies you with a particular process. You have to be able to spread that risk from an operational resilience perspective as well.
And you know what we haven't talked about, actually, what you've just said reminded me, is the whole model deprecation life cycle, right? So these models are being deprecated faster than, you know, you can blink sometimes, or it feels like that. So again, that's another, you've got to have this whole process in place now to, you know, make sure you identify that you know across your estate what models everybody's using, or what version of the, you know, LLMs people are using, what's being deprecated by when, and you've got to get them onto a new model by then do all the testing. It's a big, it's a huge investment of time. And again, that slows the innovation life cycle, right? Or, you know, once things are in production, you can imagine it's even more critical that you've got your arms around that. To the tech risk.
We haven't spoken about return on investment for a lot of these things, but that's another topic for another time, I think.
We have 2.5 minutes left, so maybe time just for one more question. Oh, sorry.
Hi there, my name's Anu Dole. First of all, thank you to all the panelists. I'm very energized by the conversations. So I've spent 20 years in transforming across different banks, essentially, so working regulatory change. One thing I was really energized about hearing was these different types of skills that are going to be needed by the people who are actually orchestrating the agents. So I think there was a bit of a unanimous, we really need to think about this, because that's where you're really going to manage risks. It's your domain experts, essentially, that now need to be data, people, process, and technology, who are going to be the ones who tell you where those guardrails go, you know, those ones that, you know, come in as a squad to work out when things go wrong, how you're going to do it. So essentially, after spending 20 years in change and transformation across several banks as a consultant, I left KPMG last year to start a new business called Boss Up. So essentially, we have created the ecosystem and the platform to start skilling people in becoming agent bosses, essentially. So it'd be really good to hear, to get the support from, we've got a few financial services interested in pilots. Essentially, as a team, we're going to Silicon Valley in April, and really keen to share the platform and see how it can help us de-risk scaling agentic in FS, essentially. We have the Agent Boss score, so almost like a FICO score that you can measure your human capability, your human AI capability. You will have the training recommended for those agent bosses, and also a full frontier library, essentially, for what your agent boss, across 148 different industries, we've created 10,000 agent boss roles. So you start to be able to simulate essentially what your human agent operating model looks like. So anybody who's interested, I think Kirsten was really happy with the passion. I'm also very passionate about how we move safely to agentic, and I really do think that it's about skilling those people now and starting that people literacy now, and finding who those domain experts are in your organization, because that's what's really going to help us scale agentic AI.
Thank
And
you.
I'd love to hear your thoughts as well on that.
Well, I'm afraid I think we actually have to wrap up now.
We're on zero.
Justin. Thank you.
Thank you to that excellent panel discussion. You inspired and also instilled a huge amount of fear in me. So that seems to be my general feeling about agentic AI. We are now going to have a series of 3 keynotes. So I'm going to invite our 3 keynote speakers, David Guides, Professor Karsten Maple, and Ed McNicholas, to please come up and sit with me at the front. And then I will sit next to you, because once we've had each of our 3 keynotes, we'll have an opportunity for a bit of Q&A before we break for lunch. So if you would all like to come up, and then David, if you come stand next to me, because you're up first, then I will just do you a quick intro. David is the Executive Business Development Director for Rich Tech, and he has spent over 2 decades in working through technical solution development and strategic sales within the data center environment. We know how important that is. He also co-founded the Portuguese Data Center Association. So we have somebody here who's absolute expert on that data element, which we've already touched on today. David, can I hand over to you? Thank you.
Hi, good morning. Like our chairman introduced me, I'm David Guedes. I'm original from Portugal, and I've been working on the data center industry for almost 20 years. I work for Retech, so what we do, so we are a software company that help the data center operators to improve the daily operations, minimize the risks, and make it more efficient. So the topic of today is going to be not exactly what AI is going to bring to the data centers, to the operators of the data center, because I think we all agree that in terms of the benefits, there's no doubt that... Can we move to the next slide? Sorry. On this one? Okay. Oh, thank you. So what I was saying, that the benefits of deploying an AI tool to a data center operations, I think everybody agrees that is the benefits. What I want to bring to the discussion today, and we're going to try to leave some space at the end, is: are your infrastructure, are your company ready for a deployment of an AI tool? Are you going to take the best of it? So at the moment, what we've been seeing on these last years is, as in everything, the data centers are not different. There's lots of thousands of data collection on this type of infrastructures. What we're seeing and what is happening is that data is siloed, is fragmented. There's no connection between the different elements inside the data center. And also, it happens to be even fragmented because you have different teams running the same facility, and sometimes, between commas, not talking to each other, not sharing the same data, not using the same platform. Why we call it that at the moment if you deploy AI tool in the data center, it could be a trap. I'll not say that probably trap is too strong, but it could be a risk. And the risk is, if you apply an AI tool to something that you have thousands of points of data, and you imagine you're going to focus your AI deployment on the mechanical and electrical facilities, but you're not taking into consideration the rest of the data that you have on your data center. Are you taking the most benefit of it? Is AI giving the right answers? Is giving you the right recommendations? Or it could jeopardize and put in risk your operation. Sorry. Yeah, no, it is. Okay. That went too fast. Apologies. I need to go back, so just a second. Okay. So on this slide, what we want to highlight is the 4 key points that we believe that are mandatory for deploying an AI tool on your infrastructure before you start. You need to have the data unified. Also important, because you cannot forget the people, is we have to have the process clear and deployed across the complete organization. Also, you have to have your KPIs defined. What is our targets? What is your alarms? What is your limits? And then the main goal is to break the bridge between, or the gap between IT and facilities. So the recommendation and what is the methodology that we have behind this is what we call it as UIIM, Universal Intelligence Infrastructure Management. So in a simple way to define it is basically a top layer on top of all the data that you are collecting from the different sources, and it could be different software that you have in your infrastructure on your data center, or it could be interrogating directly the devices. But the idea is to create a unified layer on top of it to have everything centralized in one point, in one single point. So basically what this platform that we provide that we call Expedite is basically a central data source of information from your facility. Doing this, you create an completely open framework platform. You have the data consolidated. You have all the systems interconnected. You have all the people accessing to the same type of level, or at least the data that they are accessing is linked all together. And then the outcome is when you apply an AI tool to this on top of this platform, then you get the real value of deploying this tool. Probably I was too fast. I'm going to leave too much time for Q&As. But as a final message is there is normally a trend to use an AI application to do a quick fix on your facility. But before you do that, make sure that your facility is prepared, that the data is consolidated, that everything is linked, that you have all your teams working together, and then you're going to take the best value of your system. Thank you.
Hello? Oh, fantastic. I'll stay here, otherwise I'll be like a jack-in-a-box going up and down. So if you'd like to join us, David, on the side, And then, Professor, if you'd like to head on up, and I can just introduce you. So, introducing Professor Karsten Maple, who is now heading to the podium, who is a Turing Fellow at the Alan Turing Institute. He's also the director of the NCSC EPSRC, I hope you're going to tell me what that is, Academic Centre of Excellence in Cybersecurity Research at the University of Warwick. And you have been a principal investigator at, in terms of the Alan Turing Institute, on a £9 million project developing trustworthy digital infrastructure. I think we're hearing a lot about digital infrastructure and the need for trust there. Data point for you, I think this is really cool. Professor Karsten is recognized as one of the world's top 1% of scientists in AI. So really pleased to have you with us today. I hand it over to you.
Thank you. Thanks so much. It's funny, I forget these things that I do because I really, really, really enjoy my job. It's so exciting, but also scary, also scary. Right, I'll see if this system works now. Good. So I'm going to talk to you today about how an effective AI insurance market can support trustworthy and responsible AI. So I'll preface my talk saying, I'm not going to talk about regulation today, and that's got an important role because you've got Kate coming after lunch. So Kate's a great speaker, so you'll have a fireside chat with her, so she can talk about that much better than I can. And also, I should say, I'm not going to talk about AI assurance, which I talk about a lot, but I'm going to talk about insurance for assurance. And I'm pleased that I'm not talking about assurance because you've just heard some great practitioners talk about how they do it really quite well. But yeah, so that's me. There is something also called the National Hub for Edge AI as well. But today, I'm going to talk about some work with a bunch of colleagues that aren't here. This is a project funded by UK Research and Innovation. You may have heard of them. They fund something called a Prosperity Partnership. So this is really to make AXA, in this case, a world leader in insurance. But it's not just about funding AXA to do well, it's about really driving forward the insurance market. And I'm pleased that I work on this project with Lukas Spruck from the University of Edinburgh, Agnio Fanodaki from the University of Oxford, and Marcin Dziecnecki from AXA. So this is about them as well. So, well, AI matters a lot. Who's heard of OpenClaw? Yeah, lots of you should have, because it went absolutely huge, right? And in fact, you know, you had Moltbot, it was called for a little while, and that led to Moltbook, which Meta has bought, if you picked that up last week as well. But OpenClaw, there's something called GitHub, if any of you are in development, and it's already in a very short time, it's got the 9th number of stars. You get these stars, these ratings, about how popular a project is, and already it's in the top 10. So it's gone viral. And it was about personal assistance, right? It was a way that you could give access to all of your data, yeah, which is, I'm sure, Kirsten, you love this kind of thing, and Sonia as well. All of your data, and it will do things for you. You build a personal assistant. And we thought, oh my goodness, from a security guy. So that NCSC is the National Cybersecurity Centre, by the way. And we're an academic centre of excellence for research there. But for a security person or a privacy person, that's like, oh my goodness, this is just a disaster, right? And we've already heard some disaster stories. But the thing is personal assistance, and maybe that's okay. But what we see already is companies that are offering this for industrial automation based on OpenClaw. So this is pretty scary that some people are really trying to push adoption very quickly. So what we have often is that some organizations across different industries and different organizations, so you've heard today about risk mentioned a few times. So risk appetite in an organization varies from one organization to another. And some people, some organizations, will adopt AI very rapidly. I don't know if you've seen it just today on the BBC website. It's 2 whistleblowers from Meta and from TikTok have said how they've been lowering risk to gain more market value. So they were talking about harms from their algorithms. So there's many organizations like that rush to adopt and think we'll secure or make private or make regulatory sound afterwards. And others, some of the large banks that I work with, have had proof of concept fatigue, is what we said. And actually, one of the largest banks in the UK talks about proof of concept anger. They've had so many proof of concepts, they're absolutely angry. They've done some reorganization, because actually with a proof of concept, the idea is that you're supposed to learn from it. But the organization is so big that they've got all these disparate use cases, and they don't get enough trust to move forward to production. So, just want to ask a question, because it said interactive session, so I thought I'd ask a couple of questions of you, keep you awake before lunch. So, I want to know whether your organization has a strong understanding of AI risk. So how many think, yes, it does, a strong understanding of AI risk? I'm glad the DRCF put their hand up, but yeah, a few. How many think it doesn't? Okay, quite a few as well. And how many don't know? And that's what I expect, because we just don't know what we don't know. So it's quite hard, right? Because one thing is, I've worked in AI assurance a lot. There was a great global pilot on AI assurance. And one thing is, it's not just about the model. Don't try and assure the model. It's about what is the system that you're deploying it in. So we heard just before from the panel about humans being involved in the loop quite a bit. Yeah? And that's one way that we help manage our risk. But some of the key things, and we've heard before, we have reliability, explainability, bias, privacy, and security risks. They're the key things that we look at. And I'll talk in a moment about insurance, and there's a growing maturity in the cyber insurance market. And it's still not easy, that cyber insurance market, but AI insurance is really nascent and difficult, yeah? But one thing we find is, what is the incentive for robust regulation, robust governance of AI? That's a big challenge for us, right? So sometimes it will sit in a department such as privacy and responsible AI, but how do we move that into the production area? How do we make sure that there is a clear economic incentive? So I've worked in security for a long time, right? And security was always seen as a cost, a bad thing. And many of the CISOs would go into the board and say, look, there's a big danger, you know, you're going to be really scared, the world could end if we get hacked. They don't tend to do that now because there's so many attacks that happen. But we need to turn it into a positive story. And the story that we moved into in security was really about making the organization more resilient to an attack. It's not about if you get attacked, it's about how you handle it. And the same thing is with governance. Can we give a clear incentive, maybe an economic incentive? So where we stand at the moment with AI assurance, it isn't enough on its own. Yeah? There's a real challenge about who bears the downside if controls fail. There was something a long time ago, so I've worked in AI and cyber for a long time, but there was something called the Jeep hack. Does anyone remember the Jeep hack at all? These journalists managed to control a Jeep and actually drive it off the road, right? And that attack is known as the Jeep attack, but it wasn't Jeep really. It came in through the cellular network. That's how the attack was launched. But the impact on Fiat Chrysler Association, automobile that own Jeep, was 1.4 million cars needed to be recalled. So they bore the brunt of the problem, but it was through somebody else's network. The same thing happens with AI. There is a whole ecosystem. We've heard about it just in the last talk, actually, about how fragmented some things are. So, I've got one more set of questions. In your organization, does your organization have a specific AI insurance policy? How many of you do have that. Put your hands up if you do have a specific AI insurance policy. Because there are some providers now, Munich Re being the most popular. AXA will do some. So none of you? So put your hands up if you say no, your company does not have an insurance policy for AI. And how many of you don't know? Okay, the majority being don't know, which is interesting because this is one of the things about AI. It's so embedded in what we do. Sometimes it's very overt, like the agent system that we heard Kirsten talk about, for example, where you've got digital workforce or virtual employees or whichever term you use. But other times, in most things we use, there could be AI within that. And actually, whether you are covered or not is not clear. So this is one of the challenges that AXA have got because some people think they're covered. And if it's an AI failure, you may not be covered. And other times, AXA will have underwritten something and given the impression that if AI fails, so actually sometimes there is a hidden risk for AXA and insurers as well. How many companies, do you put your hands up? Yes, if you have cyber insurance. Look at that, you see it. And how many, no? None? How many don't know? Just a small number. And this is the thing, we are now with AI insurance. If I'd have asked you 4 or 5 years ago the question about cyber insurance, it would have been a lot smaller number, yeah? And actually, cyber insurance is one of the things that may cover some AI failures, but what happens if your AI is operating completely as you bought it for? Yeah, it's just you did not realize how it was operating and some of the deleterious consequences. So insurance can serve as both preventative and compensatory. So it doesn't, we think of insurance as something that pays out when something goes wrong. But actually, so that's the compensation part, but it can also drive behavior change. Yeah? And that's the idea that we're trying to move to create the market, the proper insurance market that will encourage organizations to have better practices. Because after all, insurance that pays out, most of the time we don't want to claim on insurance, right? Not because, yeah, we've lost some money, so we want to get that back. But actually, it's all the other damage to the business. You end up trying to do something instead of doing your regular operations. So how can insurance become a governance mechanism? So if we design the market right, we can reward demonstrably safer systems with better terms. Just like if you park your car in a garage, you get a reduction on your car insurance premium. If you have window locks in your house, you get a lower price. What is the analogous activity that you can do that will lower the price of your insurance? If we have a strong insurance market, it allows us to produce audit trails, model documentation, because those are the things that we will present to our insurers to say, hey, give me a better premium. And that lower price is something that's a financial incentive, right? That will go towards your cost of better governance. And in that sense, it can drive more trustworthy and responsible AI. It turns it from a voluntary aspiration into a commercial discipline. But it's not easy, just like the cyber market wasn't a while. And in fact, one of my former students is the chief underwriting officer at a company called Coalition, probably the world's leading provider of cyber insurance. And their CEO has just said just how difficult the year has been for cyber insurance. It's the same for AI insurance at the moment. There's no data really there. So there's no actuarial history. It's unclear about the market. So if I think about a vehicle manufacturer, does the OEM, the provider of the vehicle, I mentioned Jeep was one before, do they pay for the insurance, or do they insist that anyone who supplies AI to them pays for the insurance. So that is not clear yet. I mentioned about silent AI, which is this silent risk, this exposure that sits with it, conventional practices that haven't been clearly included or excluded. And that leads to problems for both the insurer and the insured. And of course, with AI, again, Kirsten mentioned deprecation. I think you mentioned that, right? So we get this deprecation and changes all the time. And in fact, when is an AI model still the same AI model? What are the changes that we make? So there is a process in vehicles for type approval, how much change you can have, but we don't have that for widespread AI. One thing we have to be careful of is moral hazard. It's a term used in insurance, which means that sometimes if you have insurance, you think, well, I don't need to worry about it. I don't need to do good governance because I'm protected, because I've transferred that risk, yeah? And actually, that doesn't happen too much, but we must make sure that we don't create a market that absolves the responsibility of organizations that are creating, designing, or deploying AI. So we must have conditions around disclosure duties, yeah? And in fact, the cyber insurance market is very good at that, because what it can do is, if it, Coalition, for example, they embark on something called active insurance, they're continually scanning for problems in computer systems, and they are telling all of their policyholders what that is. And then if you do not act responsibly, you do not patch in time, especially if it's not expensive, then you shouldn't really be covered, right? Because you're getting told of the problem, so you're being told while it's a risk rather than an issue. And that tends to work well for that market. What can we do in insurance? Bonus malus is a system that says, you know, if you've done something good, you should get a bonus. You should get a bonus for good governance, for strong controls and fewer incidents. So you get better pricing or a better coverage. Malus, on the other hand, is if you get repeated losses or you've got demonstrably weak controls, then you'll be penalized. So this helps create these commercial incentives for safer design, better documentation, better auditing, and stronger monitoring. Let's go, there we go. So underwriting needs to consider performance risk. How well does the AI perform its duty? Consider fairness and bias risk, because those risks can turn into litigation. What about the drift? That needs to be considered as well. So you need some kind of measure of how that works. The adversarial or security risk, and the interpretability and audit risk. When designing these AI insurance systems, it's important that we consider not just the average cost, yeah, of a loss, but the tail. So is there something that's going to be huge that could hit, even though it's very unlikely? So the market now is nascent, and that's why we're working together with AXA, Oxford, and Edinburgh. There are other lines that cover some sense cyber, so cover AI in some sense, so cyber, as I mentioned. It could be if somebody is not acting professionally in their deployment, so somebody makes a professional error. It might be under technical errors and omissions policy, so most of you will have those E&O. It might be under product liability or professional liability, but where it is at the moment is still hidden at the moment. We're not sure where that is. So policy ambiguity is a major challenge that I mentioned, whether AI is covered and where it sits within an organization. And what we can see is as regulation and litigation increase, that is likely to increase our focus on insurance and increase the market maturity. So we're working together to bring together assurance, quantification of risk, and insurance. And that's to build methods to help us understand, measure, and ensure AI risk for commercial applications. So, very briefly, because I'm just about out of time, so I'll finish up. This is effectively the last slide. But what we can do is we can build a process of steps around, first of all, understanding a taxonomy of the risks that can happen from AI failure modes. But we need to understand that while a taxonomy can help us, at the end of the day, it's your system, not your model, because as we've heard, LLMs power a lot of these things, but there's no point testing just an LLM. It's how you use the LLM. What is the impact of a failure? We need to make sure we've got the right evidence for underwriters to write the best policies for us. We need to make sure that the underwriting and pricing doesn't just reflect the average case loss, but some of the wider tail costs that might happen, so some of the high risk. And of course, you know, talking about cyber insurance, this is one thing that happened with Jaguar Land Rover, right? We know that that big breach cost them a lot of money. Widely reported that they were offered cyber insurance but didn't take it. Actually, the cyber insurance was a very low maximum payout. Yeah, it would not have touched the kind of levels that costs. So we have to understand those tails, and we need policy terms that reward risk reduction and clarify retained responsibilities. Finally, we need feedback loops from claims and incidents back into the assurance standards and governance practice. Thank you.
Thank you. Thank you very much. That was actually a really user-friendly introduction to both insurance and assurance. If I could just offer one thought, there was a variation of responses in terms of the insurance piece. Many of the people here may be sitting with organizations that are systemically enormous, and most of them self-insure. So it's actually a slightly, there's self-insurance and there's actual insurance policies as well. But we're now going to listen to Ed McNicholas, and we're doing a little shift of gears here. We're going to hear a little bit about what's actually going on in the US. So Ed is the partner, and he leads Ropes & Gray's global data privacy and cybersecurity practice. He has significant experience with investigations and class action litigation related to cybersecurity incidents, as well as enforcement actions by the FTC, state attorneys general, the SEC, the OCR, data protection authorities outside the US, and other governmental agencies. I'm so glad that you're doing your job and not me, because that all sounds terribly frightening. But Ed, I'm going to hand over to you, and so we can hear a little bit from the US side now.
Wonderful. Well, thank you. This is an interesting topic for today, particularly coming right after AI insurance and how these things might fit together. I'll just start with a little disclaimer. If you were to look deeply into my background, you would see that I worked in the White House under President Clinton. I know what you're thinking. He can't be that old. But it's true, sadly. But my topic today is about a policy issue. My intention is not to be an attacker nor an apologist for the current administration. I'll leave that to others. My intention is much more straightforward, to talk about where cybersecurity and AI sit in the U.S. framework. The timing is right on the nose with the cyber attacks as a combat weapon we're seeing out of Iran. We've seen other cyber attacks in that way, and we have seen some attacks on AI, but I think we're just beginning to see the vulnerabilities of AI. If you remember, all the way back to the beginning of the web, people were so happy it was going to be secure because they wouldn't have to send information in the mail, and so they couldn't go to your mailbox. And then people said, oh, no, this is going to be much more secure. And now every new technology seems to have this window where people think, great, we now have a secure technology. And then a year later, you're thinking, oh, it was actually vulnerable to all these injection attacks and all these other things, and which is why we need insurance. I know I'm obviously focused on the US side of things, but the computer networks don't stop at the geographic boundaries. Sometimes we might think that we would like to have more geographic boundaries, more sovereignty, but we're in this same boat together. In the US, I mean, we have had great success in terms of large amounts of capital being put in, data centers, centers of innovation, but we have had much less success on regulation. We have a rather inelegant mix of executive orders, sectoral rules, state experimentation, and lots of litigation. And so sometimes I think people look at the US and think it's not regulated much at all. It is actually heavily regulated. It's just not regulated in a particularly tidy manner. And now we have the degree of regulation becoming more and more untidy. What drives that is this. The Americans look over, these are all the different European initiatives on technology regulation. And we look at those and say, oh my goodness, that's a lot of different regulations and policies that have already been issued. And the fear in the US is that the real race here is for quantum. And anybody who can combine AI and quantum together will have a significant head start on everyone else. And we can't hold back at the time. And so we look at the European model and say we can't have that much regulation. So we go to what we've been at, which is something of a consensus. It might be surprising to hear that there has been a consensus in the US, but in fact, despite a lot of regulatory small differences and certainly some rhetoric, there has been a consensus. If you asked me on January 1st, 2025, right before the current administration started, I would have said there was a strong consensus on robust information sharing between the private sector and the government. There are civil liberties concerns, but that information sharing is very robust. And doing everything on a very sector-specific way. The lawyers might love this, others might not, but we have different cybersecurity rules and different regulatory regimes for medical information, financial information, communications information, educational information, transportation information, chemical, cybersecurity, AI safety. And we have enforcement at the Federal Trade Commission, the Securities Exchange Commission, and at the state level. And then we have a lot of common law evolution in our courts through all the litigation we're running through. There's a lot of the rules that develop through courts at different times. And then we have a robust area of private standards. For instance, payment cards in the US, obviously a huge cybersecurity vector, almost entirely done on a voluntary, non-governmental regulatory basis. And part of this consensus was that the corporations should work on defensive cybersecurity and the government might be more offensive. Where you can see this most exquisitely put out is in the context of a data breach in the US, a personal data breach. We have a great mechanism for pounding companies that suffer a data breach. And much of that is, in fact, strict liability. By the way, we can, if you want the slides, I'm happy to send them to you or ask. But you're happy to take pictures too, that's fine. But it is, happy to share the slides. A lot of the implications here are actually strict liability. And for that, I mean, I'll point to the SolarWinds hack. It was obviously a huge attack. Now, I represented the CEO, so I'm a little bit biased on this, but I don't think the company was negligent at all. I think the company was They suffered an attack from an elite unit. They had multiple 0 days that came in. And I would back up for that. The Southern District of New York, when they looked at the securities statements made, tossed out the SEC's case, said that they were trying to look at it in retrospect, and that upon examination, they threw it out. There was a case against the directors on derivative claims, which are kind of a species of securities claim in the U.S., went all the way up to the Delaware Supreme Court. Delaware Supreme Court affirmed dismissal of those claims. And the problem is that SolarWinds went through a huge amount of negative PR, congressional hearings, multiple pieces of litigation, and at least arguably was not at all negligent. And so we tend to pound companies just because they get hit. Luckily, they had really good insurance, which helped. On turning to AI, we've had a patchwork reflecting the general approach to cybersecurity. Ironically, one of the most helpful pieces is NIST, which is part of the Department of Commerce, but they have published guidance that is voluntary, risk-based, technologically literate, and very useful, actually, across anywhere. We've had 2 executive orders, one from, we've had more than 2 actually, but the 2 most important for this slide are one President Biden put on an executive order, and his order was not dissimilar than what you saw in the EU AI Act. It was trying to get a balance between safety, reliability, and coordination. President Trump then pulled that executive order back and issued an executive order that emphasized deregulation and rapid innovation. Now, the interesting thing here is that executive orders of a president lack the force of a statute. The president cannot just, on his own, write an executive order and have that be force of law. Some people have different views of that. But I remember in constitutional law this was brought up. But they are very effective on pushing requirements to government contractors and to the contractors of contractors, which is about $1 trillion, give or take, depending, of contracts every year. And so the executive order can say, well, if you want a piece of that $1 trillion, then you have to comply. So they have a pretty good stick, or carrot rather, for that. Congress, unfortunately, our Congress has not been able to push forward anything coherent. There's lots of bills, lots of hearings, lots of testimony taken, no results. And into this bit of a morass, the states have jumped in. Colorado has been a leader. Now, you might think of Colorado as having great skiing, beautiful mountains, that kind of thing, which is true. It's a lovely state. But they also have a tech center, Silicon Flatirons. Everything's got to be silicon something. They have Silicon Flatirons. Also an interesting political bellwether, because they have some sections of Colorado are deep red, very Republican, and some sections are very blue, very Democratic. And so the policy that comes out of Colorado might be something that would be tolerable in the U.S. System. And they have an approach that is not dissimilar to the EU AI Act, where they look at certain uses of AI and says, well, these are very high risk and we need to regulate those. But then they say, well, what are you doing? Are you just planning your vacation? Well, then fine, we don't need to regulate that nearly as much. And they focus on algorithmic discrimination. They have required disclosures about the use of AI. Nothing that is all that surprising or shocking. Now, for financial institutions, it gets a bit more complicated because most of the prudential regulation is at the federal level. And so some, including significantly, the U.S. branches of UK and other overseas banks are actually under state-level regulation. because of some weird tweaks. And so a lot of them wind up under different state regulators. But we've seen at least one model, and there are other states pushing out different disclosure regimes. At the same time, we see this from the regulatory standpoint. We've had the implications of AI directly for the cybersecurity technology. And it's a different story. It's a story about the dialogue of the technology with the law. And I think AI has meaningfully improved cybersecurity defense. There's better fraud detection, anomaly spotting, phishing triage, malware analysis. We actually can analyze, after a data breach, we can analyze the documents coming off of a data breach much faster than we used to be able to do so. And so AI, that integration into the security stack has been quite helpful. The problem is that it's also part of the attacker's security stack. We had one attack recently where we saw this, a hacker came in and was doing very fancy coding, and then they would make a stupid mistake. And then they had another very fancy piece, and then a dumb mistake. And then another very fancy piece and a dumb mistake. We couldn't figure out, what kind of attacker is this? What kind of weird training does this person have? Turns out it was a 16-year-old in Baltimore, Maryland, using AI. And, but that was, so that has kind of a funny result, and we said, hey, you know, you might have a future, but don't do this again. You probably want to stay on the right side of the law here. But when you think about things like the situation with Iran right now, and how many proxies there might be who they might be able to be supercharged by AI in their hacking attacks. This is a problem in part because the attackers have the advantage. If they have new software, new AI agents that fail 9 times out of 10, they don't care. All they want is that one victory. On the defense side, failing 9 times out of 10 is not good. You really want to succeed, you want to have something more reliable, and so the defenders need to do more testing, more assurance, and it slows it down. The defenders are regulated, and so this has created a asymmetry where the attackers will almost always have the advantage in each step, which is quite a problem with the expanding risk surface. So where are we now with the Trump administration? We've seen a significant impact on AI and cybersecurity. There was the Federal Trade Commission normally has 3 commissioners from the majority party, 2 from the minority party. President Trump fired both of the Democrats, even though there was a Supreme Court case saying that the president cannot fire the commissioners. He's going to challenge that case. So there's that. But they are one of the main enforcers, and so that body has kind of lost its balance. There's also a Privacy and Civil Liberties Oversight Board. Most of the Democratic voices have been eliminated there. And more directly, CISA, the Cybersecurity and Infrastructure Security Agency within the U.S., has faced significant budget cuts. 30% of its personnel have been cut. On AI expertise, all of its AI research was frozen. It's estimated that about half the people who were working on AI cybersecurity are gone. The executive, the Senate confirmed leader is also finished, also left. And this was an agency that was supposed to be the coordinating agency for cybersecurity across the federal government. They were supposed to get notices 72 hours from any critical infrastructure attack. And they've had this massive disruption. At the same time, we've also had new restrictions placed on bulk data transfers, largely because of their use in training AI models. And so we're not seeing a lot of bulk data transfers of personal information, but also genomic and other materials to China. So it's a quite different approach. And significantly, there's obviously been a pullback from multilateral engagement, whereas many times administrations would have had a much more robust dialogue with Europe and our allies. That has not been happening. Instead, we've seen a cybersecurity strategy that was announced that emphasizes aggressive use of agentic AI for protection. And it is exactly how this is going to be used is not spelled out exactly. This is the new cybersecurity strategy from March 6th from President Trump. It is all of 6 pages long. And so it doesn't go into a ton of detail. It does talk about cyber diplomacy to frustrate foreign AI platforms that censor, surveil, or mislead, which I'm not quite sure exactly how far that will go, but this seems to be an integration of AI regulation in the US into this overall vision. At the same time, we've seen the president issue, there was a new executive order that came out December 11th last, in which the president declared a national AI standard so that we would not have a patchwork of states, essentially going after the Colorado AI Act and other state-level laws. And he started an AI litigation task force to sue the states to stop them from having more protective laws, and declared it a federal preemption through executive order. Again, executive orders do not function to create a federal standard. That is, they're very useful things, but that is not one of their roles. And so it will remain to be seen whether or not this is actually effective. Obviously, for instance, the states are regulating something in interstate commerce, but states can regulate interstate commerce as long as they don't do so in a way that discriminates against other states or products from other states. And so Colorado, if it applies a uniform law, can do that just fine. They just can't have a special law that favors products from Colorado. And so one would think it would be quite clear. So the US approach to AI and cybersecurity is in deep flux right now. And I'll just close with the idea that there is a robust system in place in the US. And because of our computer systems extending so quickly across borders, so many of the systems in the UK will have to deal with this inelegant approach in the US, whether you want to or not. But it is an area where we hope we're going to get some more doctrinal tidiness over time, and perhaps the specific federal regulators can help on that. But I do think we have some time for questions now. Wonderful.
Super, thank you very much. That was actually a really useful overview of the US position, and I mean, I think you said it at the end, it's very much in a state of flux. So it's complex. It's not that there's nothing there. There's a lot there. It's just it's not particularly well joined up. So super. And the other piece of it, of course, is that that shift away from the multilateral engagement creates challenges for intergovernmental engagement in this space. So we have 5 minutes for Q&A. So we've heard a lot about data centers and data. We've heard about insurance and assurance, and actually insurance being used in a preventative and proactive way, which was really interesting. And then obviously some clarifications and insights into where we are in the US in its extraordinary complexity. I'll take a couple of questions. I think we've got one over there with Janine.
Thank you. I'm interested to know if you have any practical suggestions when you are looking at your contracts for data centers. And this is, so the contracts for the data centers and insurance. And I'm thinking now about what happened recently with data centers being targeted, AWS's ones being hit by drones and things like that. I don't think that was necessarily always in the contemplation of people executing contracts. So force majeure clauses, things like that. Any thoughts and practical tips?
Super. Is there another question as well? And one in the front here, and then we'll come to the panel.
Yeah, I'd like to find out how we think of cyber resilience with data security architecture in AI-driven environments in the financial industry.
Thank you.
How do we put them together? Cyber resilience, AI data, a data security architecture. Right.
Thank you to our experts.
So I'll perhaps start on the first question, then hand over to you, Edward. I think one of the things that's important, for those in cybersecurity, you may have heard of MITRE, an organization in the US, which I think wasn't on your slides, but you definitely know about. But they have a great framework called the MITRE ATT&CK framework, which is used in cybersecurity a lot, but they've extended that. They've got a different version, the Atlas framework. So I don't know, has anyone heard of the Atlas framework here? That's quite good because it moves from AI risk into all the way across the supply chain, right, including your data centers, and looks at having this holistic approach. So I think that's something that's really practical for organizations, but I'll hand over to you and you say what you think of Atlas and other things.
You know, one of the things that strikes me is that if you looked around this room, from the carpet to the paint to the lights, the insurance companies probably have ratings on all of this. And when they built this wonderful facility, they probably said, okay, we need to have this kind of carpet. This will not burn quickly, et cetera, et cetera. We just don't have that with, even for cybersecurity right now. If you have, whatever you want to put the extra, the marginal dollar for cybersecurity, it's not clear whether you want to put that into training your employees or firewalls or multi-factor. There's a guy, Danny Weitzner, who's at MIT, who's doing some of the initial research on that. But it's quite messy, actually, because it seems that the technology guys always blame the users. And so it's always, oh, it's a user error. We need to train the users. And it's like, how about the technologists not allowing the users to have that choice in the first place? But it is, that practical piece is there. We don't have good data on that. In terms of the contracts, I think one of the biggest things is to have redundancy across geographies. And we've seen that with people doing it more for power grids and things like that, or if there were, a hurricane or that sort of thing. But having redundancies across is probably one of the more practical ways of solving that. And in theory, putting everything up in the cloud solves that. But then one of the prior speakers mentioned someone saying, no, I want to take everything back on-prem now. The whole cloud thing is a bit too much. So there are pluses and minuses there. I don't know if I quite understood your question about what was data security.
Currently we have increasing attack from various surfaces. Attack can come from various surfaces.
Uh-huh.
Right. The question is, how do we work around cyber resilience? Right, within the context of data security architecture.
I'm not following.
I'm sorry.
Yeah.
Do you follow?
I'm not following.
I'm not sure.
Yeah.
Question.
We're talking about productivity.
Mm-hmm.
We're talking about productivity. And we're talking about cybersecurity. We cannot separate cybersecurity from attack surfaces.
Okay, attack surfaces,
Yeah, attack surfaces. So now the question is, how should financial institutions rethink cyber resilience and data security architecture?
Yeah, well, I think I think I get your question now about the attack surfaces, and this makes me think about the rush to embrace agentic AI, because you're going to be having. It's one thing to have AI in a lot of financial services. It sits behind your firewall. It might be sitting in a cloud, but it's within your network and controlled. You're not using the free version. I hope to God you're not. The free version of ChatGPT and sending all this information out there, but you're using it internally. The agentic AI is going to, the power of it is that it can work with the rest of the world. And so you have to have, but there's a common exchange framework that's set up. And so you're going to have something that is designed to go into your network and then reconnect with someone else's network. And that being a vector for someone to put a malicious code or malicious documents is right there. And I think those agentic AI extensions will change and expand the attack surface. Even having AI looking at your email coming in, if someone is clever enough to have the malicious code in an otherwise unremarkable email, it can slip right in, and that sort of a prompt injection attack can be, our injection would be very interesting. In fact, there right now is the first case in the US about whether prompt injection is illegal under US law, because it was it was a diagnostic model from a medical company, and a competitor basically got access to the model and then said, explain yourself to me. Where's your data from? Just ask a whole bunch of questions. The model, trying to be very helpful, explained itself. And then the competitor built a competing model. And then the question is, was that a hack? And you could see both sides of that argument, right? Well, we didn't break into the code. We just asked it to spill its guts, and it did. So we didn't hack it. Whether that's, well, we'll find out whether that's actually a violation of US law.
Yes, is it a breach of law or is it a breach of ethics?
Certainly a breach of ethics, but that's a...
a different question altogether. It is actually, we're just 5 minutes over, so it is time for us to pause now to go for our lunch break. But please join me in thanking our excellent and inspiring keynotes, David, Carson, and Ed.
gone. That was me thinking I was late. 2:20, so just...
Hello?
He's saying yes. He's saying yeah.
It is on. Oh, now it's on. Fantastic. Hello, everyone. Welcome back. I hope you enjoyed a good networking lunch. I always find that the networking lunches, no matter how long they are, seem to go far too quickly, catching up with people and having discussions about what transpired this morning. And there were lots and lots of interesting comments over lunch about the different sessions and the breadth of the sessions that we've heard from today as well. But we come back after lunch. We ought to have a virtual fire up there. But anyway, just think of this as a virtual fireside chat. And I'm delighted to be joined in a fireside chat by Kate Jones. For those of you who don't know Kate Jones, and I suspect most of you do know Kate Jones, Kate is the Chief Executive Officer of the Digital Regulation Cooperation Forum. Before joining DRCF, Kate was an expert consultant and researcher on the governance of emerging technologies, and of course AI is one of those. She was also an associate fellow with the International Law Program at Chatham House. Remember, we complied with the Chatham House rule a bit earlier. And a senior associate with Oxford Information Labs, and also the member of an advisory board of an AI ethics company. But what you may not know is that Kate's previous career included a time as a British diplomat, as an international and human rights lawyer, and also as an Oxford University academic. So Kate is multifaceted. Thank you for joining us today, Kate.
Thank you. It's an absolute pleasure to be here, Vivian. I was just saying that I thought the sessions before lunch were absolutely fascinating, both the panel and then the keynote speeches as well. And I really like the way today that you're digging into AI and financial services and the data side as well. It feels like a sort of expert audience who are really at the cutting edge of this stuff.
And I think it's very much about financial services being a quick embracer of technology always. And so we're able to have a discussion at some detail about a sector that has been doing this for a while. Yeah. I mean, the standard machine learning and all the rest of it, I mean, it's just been a part of, I mean, I've been doing financial professional services for over 25 years, and it's always been a part of it. You know, the generative AI, the agentic AI is new, but those skills are well honed in terms of the governance and so on and so forth, which is super. So, no, I'm glad you're enjoying it.
Yeah.
Good. Now, Kate, I've already said that most people will know you, but could we also just do a recap, because we've got people not just in the audience, but also some who are streaming, on what exactly is the DRCF, because the UK has been world leading in setting up the DRCF. Other countries have now emulated what we're doing in terms of the DRCF, but could you just give us that recap of, you know, when it was set up and why, and what it is that you're doing at the moment?
Very happy to do that as we warm ourselves by this virtual fire. So the DRCF, or Digital Regulation Cooperation Forum, a name that really trips off the tongue, was established back in 2020. So it's in its 6th year actually now. And it was established by the digital regulators because they could see their mandates coming closer together. And by the digital regulators, I mean the FCA. Well, in fact, FCA was a slightly later joiner, but not much. ICO, the Information Commissioner's Office, Ofcom, who regulates communications and online safety, and also the CMA, the Competition and Markets Authority, who have responsibility for competition and consumer protection in the UK. So they established it because, as I say, they could see that they needed to make sure that what they were doing was coherent. It's not a creature of statute, it is a creature of the regulators themselves. And over those 5 or 6 years since then, we've evolved quite a long way, so that now we still do coherence, but we do quite a lot more besides.
Okay. And I always say it's the Data Regulators Cooperation, but of course it's the Digital Regulation Cooperation Forum, which is why I always have to look to my notes, because I don't know why. I think Data Regulators is the way that it works in my mind.
I think getting the acronym right is an achievement in itself, DRCF. A lot of people mix around the letters, so DRCF is enough of an achievement.
Super. So over that time, you've had various priorities that you've focused on in terms of bringing those regulators together. So data is effectively the thread that joins all of these different regulators. And of course, I know from my time of chairing industry bodies, what was our one big ask was, please, could you regulators talk to each other and come up with a coherent approach, which isn't one where we've got conflicting, contradictory, or unclear advice between all of you. So this is that piece in relation to data. But over the period of time that the DRCF has been in place, you've had a series of priorities. Could you talk me through what are your current priorities in terms of the DRCF? Because you do reach out and ask for us to contribute as well. So I think if there's something that we can be contributing now, that would be really helpful.
Yeah, absolutely. And first to say, I think you're right that data is certainly one of the main threads that goes through all of this. We recently did a review of all of the bilateral projects that go on between 2 of our regulators. Now, my team and I don't tend to be involved in all of those because 2 regulators can work well together without needing a coordinating team. And what we found was that the ICO, as data protection regulator, was involved in more of those bilateral projects than anybody else. So it is really significant, that data piece. But in terms of our priorities, we have a vision which has really 2 main planks to it. One of them is about innovation and growth, and the other one is about protecting people from harms. And just to give some examples of the kind of things we've been doing in each of those areas. So innovation and growth over the last couple of years, what we have done is, again, actually building from what's happened in financial services and taking that outwards. We have sought to bring innovation services which are cross-regulatory. So in 2024, with government money, we set up something called the DRCF AI and Digital Hub, which was a multi-agency advisory service for businesses who, and particularly innovators, who are setting up new organizations or new functions and wanted to understand how regulation applied to them, but not necessarily just one regulator's regulation at a time. So we ran that hub for a year. It was a really interesting pilot. We gave quite a few pieces of advice. We got some really good feedback, and we also learned from that year. And then, so on the back of that learning, this year, we've launched something called the Thematic Innovation Hub, where instead of just being open to all people at all times, we take a theme and we run events and discussions on that topic for some time, and then we move on to the next theme. And our first theme has actually been agentic AI. So it was great to hear, the panel earlier on, and clearly agentic AI is quite the topic of the moment. And it's been so interesting. We did a call for input, so we got lots of views from industry about the regulatory considerations and issues that they have. We ran a webinar. We've just run 2 roundtables, one in London and one in Edinburgh, and we're about to wrap up that topic with a publication quite soon. In addition, we ran an event, a broader AI event last week, where we talked about agentic AI, and a different project, our Horizon Scanning project, is also about to publish a piece on agentic AI, what may be coming up and what the regulatory implications are. So that's our innovation work. There are other aspects to it, but that's an example. And then on the other side, the protecting people from harms side, there's a lot of the bilateral work is in this space. So recently, for example, Ofcom and the ICO worked really closely together on the Grok case, for example. And they're also working together on age assurance issues as well. And various other things like that. The CMA with their SMS investigations work bilaterally with each of our other regulators as they work through those. So that's where quite a lot of the quite a lot of the protecting people side of things is.
And then could I just go back to the AI hub as it then was? You had that engagement piece. Just a general question really, which is the engagement from organizations. Does that tend to be the big ones, the medium ones, or the small ones, or was it a good spread across all?
So we were looking for, with the original hub, we were looking for primarily smaller organizations.
Who couldn't necessarily afford the legal resource and so on and so forth. Yeah.
Exactly. And what we got was a mixture, which is actually good as well. A mixture is absolutely fine. And I think with the thematic innovation hub, we've actually had more large companies engaging, and also people like law firms and consultants as well. And actually we're open to that, because if you're going to have a proper conversation, I think it's valuable to include everybody. And indeed, we had some civil society and academics getting involved in our webinar too, which I also think is great. I think regulators really need to be involved in dialogue with industry, because by ourselves, we can't necessarily see everything that's happening, and we can't see where the concerns are. Yeah.
Super. And that balance, I think, is hugely important with those that are seeking to grow business lines and to innovate, as well as those who are looking to protect individuals' rights and to look around the corners in terms of what might possibly go wrong. Looking a little bit more closely on the coherence bit, because personally it's my passion, that whole, how do we get our regulators to make sure that they're lined up so that we're not stuck paying piggy in the middle, which is increasingly not the case with the DRCF, which is absolutely super. But could you share some examples of that approach to regulatory coherence? Do you have some examples of where you've actually focused on that specifically in the context of financial services?
Absolutely. And actually, again, I think this is where today's topic is such a good topic. One area that I think is essential in this is the interplay between data protection and financial services. So we have heard quite often that financial services firms say that GDPR is a blocker to innovation in financial services. So last year, around about May, we convened a roundtable with heads of industry bodies, with the CEO of the FCA, Nikhil Rathi, and the Information Commissioner, John Edwards, to talk about, okay, in practical terms, where are those blockers? What are the actual things that you are seeing that are preventing innovation? And what we found through that roundtable, and then some more tailored discussions that followed it, was that there weren't very many examples of specific things that were getting in the way, but that organizations, firms really needed to feel that the ICO and the FCA are joined up. They really needed to see a collaborative process and to feel confident that the ICO and FCA are working together. So we've really made efforts to implement that since. So many of you will know that the FCA is currently running various sandbox products. There's its Supercharged Sandbox, and it has an AI lab as well. It's collaborating with the ICO and bringing them in to both of those so that firms who are in those sandboxes can get advice directly from the data protection regulator. And then also, ICO and FCA are looking out for areas of shared interest and tackling them. So, for example, in December, they published a joint statement on targeted support and direct marketing regulation. It was felt that there was ambiguity about how firms could offer targeted support in financial services, while at the same time complying with the protections on direct marketing and data protection law. So that statement sets out that firms can offer targeted support, for example, by emailing people to make sure that they're aware of the authorization to offer targeted support and asking them whether they consent, et cetera, et cetera. And essentially, that's just an example of the ICO and FCA coming together where there was perhaps a perception that there may be friction, and working together to resolve that perception of friction by setting out a clear statement of how they see those rules interacting. And if anybody wants to see that statement, you can see it on, I think, both of those organizations' websites.
That's super interesting, because having worked in that space, one of the studies was saying that the challenges around data protection is 80% of the reason why firms feel uncomfortable about sharing data. And I think you're spot on. If you actually read the legislation, It's less about the words, more about the interpretation. And I think firms have often felt, is there a different approach to risk from the ICO than the FCA?
Right, exactly.
And I think this initiative has ironed that out.
Yeah, exactly. And I feel for compliance officers who are maybe facing into both at the same time. And therefore, of course, the tendency is to err on the side of caution. And so if ICO can help to give people reassurance about things that can be done, then I think that's helpful. I know there was a case a couple of years ago where interest rates were coming down, and there was a perception in some parts of the market that banks couldn't tell people that interest rates were coming down because it might be a breach of GDPR. Right, exactly. So again, ICO got involved in order to say, no, you can email people to tell them that you've got these better value products available. And so that's another example of that sort of practical cooperation, which hopefully gives people some reassurance where there are challenging issues. And I would say to people that if you encounter other issues, let us know, and we can encourage ICO and FCA to work together on them.
And I think it's quite unique because what we see in many other jurisdictions is this continued sense of absolute independence between different regulators to the point that there isn't that cooperation and collaboration. So I think some of those jurisdictions where data protection legislation is newer, they have a much more collaborative approach. But some of those jurisdictions where it has perhaps been established for a long time, that independence is strongly guarded.
Yeah. It's guarded, and in some jurisdictions, I think there are even statutory rules that prevent regulators from working together. So we're fortunate that we don't have any of those blockers here in the UK, but I think it's essential that regulators should be working together, and you are seeing a drive towards this in lots of jurisdictions now. I don't have that much time to go overseas, but whenever I do, people are really interested in the UK model. And we've actually set up an organisation of bodies who are similar to the DRCF because they are beginning to crop up in more jurisdictions. Though having said that, interesting point for all of you in financial services, most of those organizations tend not to include the financial services regulator. It tends to be online safety, data protection, competition, consumer protection, maybe communications as well if that's separate. But most jurisdictions, it's not financial services. And I have to say, I think that is a bit of an oversight, especially at this interface between data and financial services. Something else that I do, and maybe you do this as well, Vivian, when I go to events in the data protection community internationally, I hear conversation about topics like, say, privacy-enhancing technologies, or smart data, open banking, open finance, etc., digital public infrastructure. And then you go to financial services events, and they're having conversations about the same things, but they're in different rooms, and they're not yet all that joined up. And some of you who perhaps also straddle those worlds might also know what I'm talking about. And that's why, again, I like this event, and I think there should be more of this internationally, bringing together the data protection folk who are looking at privacy-enhancing technologies from one point of view with the financial services folk who are thinking about them from another point of view, and really kind of becoming coherent on that.
So I want to get on to the outcomes piece, because I know you're going to talk to me something about digital libraries, which I'm most excited about. I'm not going to let you go until you talk about digital libraries. But before we do, I think your financial services point with regard to the regulators is a really interesting one. For us in the UK, it's obvious that the FCA would be there because financial services is one of our biggest sectors, and it's so important. And although financial services might not be the leading sector for many other, in fact, for most other jurisdictions, nonetheless, financial services is a critical part to everybody's everyday life. And so you're absolutely right. It's data-driven. It's now digital. And so, even if that isn't the industry or the sector for the country, it is something that touches every person. And so it makes sense to include them.
Totally agree. And then the other thing is that, as we saw this morning, there is so much thinking and good practice in financial services. The thinking that we were hearing about on the panel before lunch.
And the discipline.
Exactly, and the discipline. And that statistic that 96% of innovations aren't taken beyond proof of concept, that shows a lot of disciplined thinking, as you say. And I think one of the challenges is how you take out that good thinking from financial services to other sectors who are also going to be hit in a big way by agentic AI in the next few years. You know, how do you make sure that you're rolling across all of that experience and good practice into sectors which are coming behind?
Thank you. So we only have a few minutes left, but Kate, you're not going to escape without telling me about digital
library.
libraries, because I know that there's a lot of output that's coming out of this. So this isn't just a talking shop between regulators. You're engaging across all different sectors. You're bringing in the information. You're able to offer that coherent guidance back out. And what else are you doing?
So on the library, so we, as regulators, we now talk to each other much more than we did 6 years ago, thanks to the DLCF. But I really try and listen to people in different sectors and hear what they need. And one of the things that we've heard is, look, we as business, we as an innovator, especially smaller businesses, it's really hard for us in the digital and AI sphere because we have to look across the remits of multiple regulators in working out what we have to do. So the aim of the Digital Regulatory Library, which is currently at prototype stage, so it's not on general public release, is to provide access to the regulation you need all in one place. So it's not providing access to new material, but it's providing a single front door so that you can say, okay, I am a financial services organization who is looking to do X, Y, Z. You can type that in, and you can then get a response which points you directly to what you need to do and to the regulatory sources of that. And because it's been engineered on a RAG basis, it's closed, so the information in it should only be from the regulators and therefore should be accurate, so it shouldn't hallucinate, and it should be a reliable and accessible source of information for people in the future. So we've been working on that this year. We're just coming up to prototype stage, which is really exciting, but our plan next year is to do user testing, so it's not yet publicly available, but if there is anybody here who is interested in user testing, then do get in touch with us via our website, because we do have some slots available for that.
Oh, okay. Well, there's a tempting offer, and one not to be ignored. That sounds absolutely super. Kate, is there anything else you wanted to mention? Because we are sadly out of time, but is there anything else you wanted to mention?
No, I think actually all I would do is just reiterate that point about spreading of good practice. Some of this is for the regulators, but I think it also lies on industry as well. And actually it did come up in the panel this morning, and I'd throw that out as a challenge to financial services firms. What can you do to help make sure that good practice that you have been working on and good governance that you've been working on can stretch across? I think the insurance paradigm that Carsten Maple mentioned has probably got a role to play there too. But I think this is an interesting challenge for all of us.
Super. Thank you so much, Kate, for sharing your time and your insights today. I've certainly learned a lot more about what DRCF is doing, and under your leadership, it's not only bringing those regulators together for coherence in a way that has a genuine impact on businesses, but I'm really excited about the digital library and some of the other things that you're putting back out to enable businesses to do their work more efficiently and more effectively. So thank you so much.
Thank you. I really appreciate it. Thank you, Vivian.
Fantastic. Gosh, that 20 minutes went so quickly. I would now like to introduce our next panel. So I'll introduce our moderator, and the next panel is going to be focusing on value creation and ROI from data and AI initiatives in financial services. And to moderate that panel, I'd like to invite Naresh Raja and then his panel to come up. Naresh is the UK AI Chair for Financial Services and AI and Expert Chief Data and AI Officer in Financial Services. He also holds non-executive director and board advisory roles and is the innovation expert at Oxford University and honorary practice fellow for AI, data and digital at Imperial College. So a fantastic blend of practical leadership as well as academic expertise in relation to AI. So Naresh, please could you come up with your panel, and we really look forward to hearing from you. Thank you. Thank you. And there are stairs over here if anyone wants
see. Please. Right, why don't we start with some introductions?
Hi, I'm Eleanor Strabak. I am Head of Data Science and Innovation for Corporate and Investment Banking at Standard Chartered. So my focus is really on scale and impact, and that means being very deliberate about where we deploy our very valuable and specialized data science capabilities, so that what we do decide to build internally really impacts the way in which we work and how we interact with clients. Thank you. So I'm excited about the conversation.
Sure. Hi, I'm Banu. I work with GuyCarp in Credit and Surety Division. Like, it's a specialty reinsurance. So what I do is I lead the data practice for the unit. So I still consider myself as a developer doing the agents, coding it myself. Yeah, that's pretty much. And,
thank you, Banu. And Sarah, you're joining us online.
Hello, I wish I could be there in person and not the giant head on the wall, but I'm actually in Zurich at the moment. So Sarah Gadd, I am a data leader, currently working with Julius Baer. I have been knee-deep in data and AI transformation, governance, controls, and really looking at the future of how to structure data for tomorrow and the AI, especially in the agentic world, shape for tomorrow as well. So looking forward to the discussion today.
Thank you, Sarah. We are going to be using Slido, so hopefully that will work. So we will get that up because we'd like it to be quite participative. And so I would stop us for Q&A as we go along. The focus for today is really around the return on investment and value creation from financial services. There's a couple of things. One, boards and CEOs are asking very hard questions in terms of the return on investment. I call it board FOMO, fear of missing out. And there is a clear position in terms of how do you actually move from the hype to scale to returns. The value from our own AI is actually quite challenging. So working with a number of bodies, we've seen there are some stats which are quite powerful. One, 30% of AI projects are cancelled after proof of concept. Secondly, 70% of AI projects are not delivering a return on investment. That's quite slightly different than 90%, but this 70% is something that I've been working to. And then we are obviously today well represented in terms of banking, insurance, and asset management, which is helpful. But those are going to be quite important in terms of why is that? So to start off, I'd like to pose the question to the audience. We go to the first Slido, and that is, why is really in terms of AI and ROI, why is it such a challenge? And it'd be great to hear from all of you. So hopefully you can get on the QR code. So whilst that's coming up, Sarah, perhaps you're still there. You can give us a view in terms of what do you think are the big impacts of ROI and AI?
I mean, I think the AI impacts, as we've seen through time, have been mostly focused around efficiency, risk reduction, and in some case, being able to give time back to people. That could be directly linked to revenue generation, but it's hard to measure. Now, there are edge cases where you can show direct value, for example, replacing translation companies by using large language models. That's a direct balance sheet impact, and that gets evidenced as well. But I think the big question right now is, should we be thinking about ROI the way we have traditionally thought about ROI? Or are we actually moving beyond ROI measurement into treating AI as part of infrastructure? And there's a lot of arguments out there that we are. And if we are, then you wouldn't measure the ROI on your Microsoft Outlook or your data center necessarily. You'd be looking at the capabilities that enables for your broader population as part of the infrastructure.
Very good. Thank you, sir. And whilst we look up at some of the returns, data quality seems coming up quite heavy in terms of what the key component are. Eleanor, I don't know whether you had any reflections at all in terms of ROI and what you're experiencing.
Yes, I mean, I absolutely agree that What is happening is that we are moving to a model of accelerated compute. So I think that longer term, I don't think that we will be talking about ROI for AI because, again, as Sarah was saying, much like a Bloomberg terminal or Microsoft Outlook, it's just part of the way that we work. However, I do think that the ROI conversations that are happening now are important to help us get to that point in future. And I do think that some use cases lend themselves better to quantification than others. So, for example, use cases where we are saving time on a process, use cases where we are getting something to a client more quickly, optimization use cases where we know we might be using AI to better optimize our RWA usage. So those, I think, are a lot easier to convert into a dollar value and to articulate an ROI. I think where it gets more challenging is where we have use cases which are intended to be more revenue generating. That's more challenging because an AI tool never acts in isolation. So it will always be, there are certain market conditions. We have salespeople who do a very good job in their own right, with or without AI. So it's difficult to isolate and more difficult to quantify. So with that, my advice would be that, I think we should continue having the ROI conversations and challenging each other internally to make sure that we're looking at the highest impact use cases. But also, I don't think that, kind of imperfect measurement should slow us down or in any way stop us from going after the use cases that we know are going to add value.
Amazing, thank you. And it's quite a good spread, actually, in terms of what all of you have come back with in terms of quality, complexity, and really we're seeing that. We're going to do the next poll, which I think would be quite interesting. And then whilst we've got the poll up, so this is really talking about where is your organization in terms of data and AI, and where is it in the journey? So it'd be great to get your viewpoints. And whilst we're doing that, in terms of your viewpoints around where your organization's at, and please, this is all confidential, so you're not actually revealing your organization when you're actually going up there, so don't worry. And really give us a view. You're still building your foundations, and we talked about how important data foundations are the foundations, all the way through pilots to AI and data is very poor in terms of your P&L balance sheet. And I know one or two organizations have got to that. But whilst we're doing that, and we'll get some results coming, Banu, maybe perhaps you can give us the use case in terms of how return on investment and value are quite important.
So in reinsurance, it's the context plays slightly differently. So we don't really own the data that we work with.
Sure.
So it's the primary insurers that the data comes from different sources, like different quality of data. So we have to aggregate and do all our cases downstream. So what we think about in terms of ROI is our capacity and quality. Are we covering these two? The main questions that we ask ourselves is, with this solution, can our brokers spend more time on placement strategy and client relationships? Can they reduce their time that they're spending around data wrangling and document processing? And can we get to clients quickly during a renewal season? These are the questions that we try to ask ourselves. And the way we measure it is, time claimed per task. How much time is it taking? How's the adoption of the solution?
Sure.
And if a qualitative feedback from a broker, that's a big win for us. If someone tells me, with this tool I saved maybe 3 hours of work, that's a big ROI signal right there. And coming to a use case that we've recently built, it's about wording analytics tool. What it does is it's basically a RAG-based AI engine. It stores the slips and the contracts that brokers deal with insurers and reinsurers. So it stores them there, and it has entity extraction. It does answer the questions in a natural language for the brokers. It saves quite a lot of time, and it even generates an initial draft for the reinsurance. So, which earlier used to take 1 day of effort, now it just takes hardly less than an hour. So this is what, when I go to leadership, I won't say, hey, I saved this amount of time, but now I'm giving more time for brokers to spend on client relationships. And what else can I talk about here? Yeah. So I see it as like so the more time spent on the client relationships, so client renews, placement succeeds, we retain the revenue. So that is like it's a long-term chain reaction. So every link in the chain is real. But as Elena mentioned, isolating AI is difficult. You cannot directly measure its impact, but it's there. And yeah. Perfect attribution isn't always possible, so we always have to look at the directional clarity. That's what the leadership needs.
Really good. Banu, thank you. That's very helpful. I mean, it's quite interesting in terms of the results from the jury, which is really the top one is we are productionizing AI initiatives for measurable outcomes, which is interesting. And then I think as we expected, right down to the bottom, we've defined value metrics, but limited adoption. Which tells the story. So I do expect this to change next year and the year after because we are seeing increased adoption. But right now, this is kind of where the industry is at and where the value of AI is really kind of focused on. So thank you, everybody, and please do keep coming back on that. Let's talk about from a cost center, because data and AI is sometimes seen as a cost center to a value driver and making the case. Because you're all executives in your institutions, and what's the most compelling ROI story you've been able to tell, which moves the needle from being a cost driver to a value driver? So perhaps, Eleanor, you can probably start give us a view.
Yes, I think that's a very important question. And what I've seen is that AI is following quite a familiar transformation journey. So it starts off decentralized, which means that there are pockets of expertise and activity within an organization. And the advantage of that is that the initiatives can be quite close to a business, and they can be agile and fast. But the challenges are that there is no central infrastructure, there is no central governance, no central standardization, so reusability is very limited, collaboration can be a challenge, and it's not setting up the organization to scale.
Sure.
Then the next phase, I think, is the centralization, and this is where the cost center comes into play, because typically what happens is the next stage is we centralize and we start building common platforms, common tools, reusable techniques, scalable governance. We start greater collaboration, breaking down silos. But typically then what happens is we have a centralized utility, which is seen as a cost center. And then we go back to this is where then the ROI challenges start coming from. And that typically is kind of one step removed from the business that it's serving because it's a central utility. So then I think that where we need to progress to, and I think we're probably somewhere in between these two stages right now, is that we need to progress to the final stage, which is the federated model. And so that is where we still have the common platforms, tools, standards, and governance processes in the central organization, but the actual deployment has gone back into the business units. And then we have AI as a much more integrated part of a business product group. And the way that I think that needs to go is that I think in the very near future, I think we need to have the AI experts sitting at the business management team tables so that AI is an integrated part of every strategy and priority that we talk about. And that then is also how we start to move away from the cost center and ROI conversation, because it's simply an integrated part of how we work.
Amazing. Eleanor, thank you. Sarah, do you have a view both in terms of risk reduction and revenue, some sort of use cases maybe you can share?
Yeah, look, I mean, I think in terms of risk reduction in our business, no matter whether you're asset management or reinsurance or financial services, we're regulated. We have to be able to know what our clients are up to, and we're dealing with incredible amounts of data. We have done a pretty good job, I think, in the structured world to understand which data is important, being able to manage that data. We've had to with GDPR and other regulation that's come down. But dealing with this vast unstructured world, similar to what Banu mentioned earlier, through digitizing and then being able to understand that content, you could do that at far bigger scale from a risk reduction basis than you could do before. But again, how do you measure the value? It's very hard to justify ROI. You can have evidence, as Banu mentioned, efficiency, time saved. But how often do we actually see that in a commitment to reduce headcount? And do we want to see it as a commitment to reduce headcount, or do we want to be taking the expertise into a different direction to be able to leverage the skills that they know? So I think risk reduction is a clear case, and that can be across all sorts of compliance, AML, screening, whatever it may be, new screening especially. And then we look at revenue generation. So who are the people who generate the revenue? Well, at a private wealth management company like Julius Baer, that's your relationship managers, that's your front. So you want to be able to give them time back. We have a blanket program called the Ease of Doing Business, and all the use cases there, which we work on with the front. So we don't just have an IT team who are just sitting in a silo, creating stuff and then chucking it over the fence. It is very kind of agile methodology, so where we have business representatives sitting with the technical experts, sitting with the finance people, and actually deciding which are the right use cases to go after, and then figuring out how they fit against that ease of doing business, and then literally giving time back to the front so they can spend more time with the clients and give them better service. So that is the primary objective that we have.
Amazing. Sarah, thank you. Look, I'm going to ask one more question for the panelists and then break for a set of questions from the audience. So do think of your best killer question for the panelists. So one to think about, and I talked about this in terms of 30% of AI projects don't make it past proof of concept, which has a huge investment, but also employee disillusionment in terms of what that tends to happen. What would be really good is what's actually been possible to scale when moving AI, and I'm talking about a broader set of AI from predictive analytics to machine learning, also and generative AI, into day-to-day decisions. Where do these initiatives get stuck? And could you maybe share where you've been able to scale? So perhaps I'll start with Banu. Do you want to give us a quick view?
So I've recently built one product. Again, I accept that it's a failed product. So what it does is...
We're very appreciative you're sharing a failure, because a lot of people don't talk about failure. So thank you for doing that.
Yes. So what it does, right? It takes the client's data and tries to come up with an optimal reinsurance structure, like mathematically ideal, but market will not accept that structure. It's like a proper failure. Like it gives like, okay, you place this 1 million layer for this price, you place another million for this price. Market will be like, oh, are you joking, Banu? So that's the thing. But theoretically, I really liked how the solution progressed and what we arrived at. But there's a gap. Market really did not care for it. So this is the gap where the model's output versus what world accepts is where POCs fail. And some cases are not like dramatically failures. Like there are some other products, like I've built a data transformation tool. So what it does is it takes unstructured and different data, and it tries to put, you can perform certain transformations, you can build charts, you can even generate presentation decks using that. Like this uses AI. But what about the adoption? Like adoption has been gradual. Like it's not as much as I expected, because people had their Excel templates for ages. They've refined them. Like, okay, hey, my Excel works. Why do I have to shift to this? Like, this is where the change or the mindset comes in.
Sure.
So I see three major things. One, the solution is not meeting the expectations, and the data quality and the legacy practices. And the change management, again, that's the primary thing.
Amazing. And then, and Ellen and Sarah, I suppose, what are the real blockers that you're seeing in terms of pilot purgatory and scaling? Is it really focused on, are there blockers around talent, governance? Are there blockers around organisational culture? And Eleanor, maybe you can go first.
I would say that we have graduated past the pilot purgatory, mostly. But I think there is still a gap between, we do have AI use cases running in production, but being in production and being in production at scale, I think there is a gap between those two. And this is where it's important to remember that banks are highly regulated and therefore quite conservative organizations. And when there is a new transformation initiative, such as AI, the governance largely starts off case by case. So the advantage there is that it's very well risk managed and very tightly controlled.
Sure.
The disadvantage is that it is slower and it doesn't set up for scale. So I think that that's where we need to evolve, which is that we need to start taking an approach which is just as safe, obviously, to add. This is not to suggest that we're reducing the level of risk management that we're applying, but the governance needs to move on from case by case to a more platform-centric or archetype-centric approach, and that will enable us to scale safely.
Very good, thank you. And Sarah, what about yourself? What's your key learning in terms of this space around moving from pilot to production? And Eleanor's given us a really good example on scaling, and Banu's given us a really good example on how not to do it. But do you have a view?
Yeah, I mean, I couldn't agree more with both my fellow panelists here. I mean, I think that there's one element as well, which is culture, which Banu touched upon, because you can build the field of dreams. It can be fantastic. It can take years and years and years and years for the culture to catch up on a trust level to then be able to use that tool, because it's not that the tech isn't there, it's because the trust in the tech isn't there. So being able to bring your people with you on that journey, and absolutely, Eleanor, governance by design, I mean, being able to design that in, so as part of the creation journey for use cases, the design, the controls, the governance, the checks and balances are actually part of the delivery without going through manual reviews. And, we took our AI risks and mapped them to our existing risk vectors so that we could actually embed it in our current governance and controls. But I think the people element is the one thing that really, really you have to focus on. You have to focus on what skills do people need. They don't need to be data scientists, right? They need to be wise consumers that can know when to trust and know when to question. They need to be critical thinkers, so they know how to query. They know how to ask the questions, how to push back. And they need to know how to use augmented intelligence so they don't get run over and just blindly use a component like an agent that's just literally sticky tape on a broken process.
Thank you, Sarah. So I'm going to open it up for some questions from the audience. Please keep the questions short and no sales pitches, please. Very quick questions for the panelists. Lady at the back. Is the mic working?
Working. No.
Perfect.
Thanks.
There we go.
People. Thank you for your points of view. My name is Simone Steele. I'm from Deutsche Bank. My question is, how do you deal with this idea of human in the loop becoming the next risk of rubber stamping only? Thank you.
Thank you.
Could I maybe take that one?
Yeah, please go ahead.
First. I think that's a fantastic question. We are seeing this now with the rise of agentic, right? So we have this concept of agents, and then we have this concept of agentic workflow. And most of our processes, as we've designed them today, are designed for people, not for agents. And agents don't think like people. So not even reimagining, I think we use that word all the time, but we don't really know what it means. But thinking about the process from an agentic perspective and then understanding where you need to insert the human to do the verification and the check. It's going to be absolutely essential, and especially to be able to scale. So you need to take a step back. You need to look at the processes in terms of what is the outcome, what do you want to achieve, And then what are your critical stages where you need a person to ask the questions? Because the process should not look anything like the process today.
Thank you, Sarah. Ellen and Bernard, do you want to add to that, or should we go to another question? I'll leave it up to you.
Yeah, I can just add that I think that the use of human in the loop is also evolving. So I think, early stages, it was, almost 100% at time of testing. It's already progressing to, using an LLM as a judge and a human in the loop doing a subset or a more targeted review. And then I think as we evolve further with the use of agents, I think the use of the human in the loop is going to become a lot more around the accountability rather than, the kind of checking of the AI and the kind of responsibility of the decision making. I think humans are increasingly going to play the accountability role, which is the only piece that really AI can't do, because it can execute, it can make decisions, but it can't take accountability. So I think that there's going to be an element of probably kind of retraining and reskilling of humans to kind of understand what metrics they need to see in order to be comfortable being accountable for whatever their AI agent is doing.
Very good. Thank you, Elena. Are there any other questions before we? There's one in the front over here. Can you get a mic over here, please? Thank you.
My question is around data governance. We talk of governance, and we're talking about measuring ROI. Now, the question is there a framework that is possible, that any organization can use as we get into this new level, so that we're able to link AI deployment to, directly to business outcomes? Okay. At the same time, to reduce risk.
Sure. Thank you. So I think the question is really focused on data governance, data management, and really around AI-ready data to really exploit the return on investment and value. Who'd like to go?
I can go. We do have, an internal governance framework with a set of, when it started, the governance framework started, the questions were limited to 10, 15, wherein each question is super rigorous and you have to answer it in a detailed way. Now the questionnaire has been evolved to 35 questions. So it covers almost all the aspects, where's the data coming from, who's using it, what are the models that are being used, what are the metrics that you're looking at. So everything from even the legal aspect is being covered. So before you start any use case, you can do a POC, but in order to get to a deployment level, this governance framework has to approve that. I think even in my previous organizations that I've seen, there are such frameworks exist. So it has to be approved by the teams, governance teams.
Thank you, Ben. Sarah, Ellen, do you want to add to that? Or?
No, I think all covered.
Okay, very good. Sarah?
I can chime in a little bit. So I would think about it in terms of as a product, right? So I'm sure you've heard of the data product frameworks, right? Where you're actually looking at what value does a data product, which is a set of data, serve, and then can it be consumed and when can it be consumed for certain types of use cases? So is it confidential, is it not confidential, etc. If you design it as a product and you put it on a shelf, and there's plenty of technology out there today, whether it's cloud or non-cloud, which operate as these data fabrics or these data products, shopping carts, marketplaces. You can then measure usage, and you have a clear owner of that product who's not an IT person, that's a business person, and they can see how often their product is consumed and the impact the product has. And if it's not good, get it off the shelf. If it needs enhancement, enhance the product. But you have to move to a product mentality around data.
Very good. Thank you, Sarah. And look, I think the data as a product view and data marketplace, there's a really interesting case study that Netflix has just published on data as a product and how they actually rolled it out across Netflix. So please do search on that. In financial services, there's been quite a lot of view in terms of data as a product component and how data products, AI products, and automation products have really been established on a marketplace for people to consume, as Sarah said. But I found the Netflix case study quite interesting. Okay, well, look, we'll come back to questions at the end. One of the things which I think one of the audience touched on is governing for value and AI risk, trust and accountability. So responsible AI governance is sometimes framed as a constraint, but is it a value? And how do you really flip that narrative in terms of governance as a source of trust and competitive advantage, especially in financial services? So I don't know whether, Sarah, do you want to start and maybe give us a view around AI governance and how you're maybe approaching it from a use case standpoint?
I mean, sure, yeah. I mean, I think Eleanor's right. I mean, we started doing AI governance back in the old days of AI, so about 2019 with the AI Public-Private Forum with the FCA. And when we were looking at it there in terms of how should regulators think about measuring governance, it was really do we, don't we, right? So what are the aspects, what are the dimensions you need to cover? And it was very much, I would say, theme-based. So what types of things like credit models, broadly, these types of things. As you start putting it into reality, as a regulated industry, you realize that you have a ton of your risks, which are related to AI, already covered by existing governance. So whether it's around data, whether it's around third-party risk management, you've already got those in existing policies. So why create a whole new approach to something that's already quite embedded? So we just looked at what are the very specific AI risks, and then where did that align in terms of risk ownership. We started off, as I think Eleanor referenced as well in her organization, use case by use case. So we would look at a use case, and then we would say, does that violate the European AI Act in our case? Or is it high risk on the European AI Act? Okay, don't even start it. So don't do a POC, don't even waste any time in this whatsoever, because we're not willing to take that level of risk yet. Then we looked at it in terms of, right, what's the business impact? ROI, business value, yada, yada. Now we've moved to a different model. So now we're thinking about it more in terms of business accountability and ownership. So we have a central platform. We've created the capability so that people can now leverage it in a more federated model. We have the teams who are a combination of data science experts, business people sitting together, looking at what the biggest impact for them are. And then we're building the governance in by design. We haven't got it perfect yet. And getting controls digitized is, and being able to update them at any time is its own challenge. But there's a lot of progress there being made, and I can see a world in the not too distant future where all controls are fully embedded and digitized within the models themselves.
Very good. Banu, do you want to add anything to that?
Sure. I'd say, I agree with what Sarah mentioned. So governance isn't a constraint on a value, but more of a price of an admission to value. Coming back to my use cases, I do not own the data that I work with, right? So clients trust us with their data, they give us the portfolio, claims, all that data, and that trust is the foundation for our brokers, right? So they can come up with the questions like, oh, you're using my data, how are you using it? Are you training any models with that? And is that data being used by any competitors' analysis? So, I mean, you can answer them only if you're confident on your internal governance processes.
Sure.
If you have a challenge in answering them, that means you're not comfortable with your governance, right? And clients might not trust you, they'll not give you data, then it makes all your AI projects more like expensive science projects. And as I mentioned, we have our internal governance frameworks. Mm-hmm. So these frameworks, obviously it will slow you down, but it will give you that confidence. I mean, you can go ahead, deploy with, oh, this is something I can trust, our governance framework approved it. Yeah, I can go ahead with the deployment.
Very good. So look, I'm going to move us on a little bit into what I call innovation levers. So I know a lot of time these days is spent on generative AI, but those of us who have been in financial services for a long time know that there are set of innovation levers which move the needle. So that is from big data and data solutions into automation, into machine learning, and then into obviously generative AI. So there are those innovation levers. How do we how do we really go about selecting? Because I know that the boards are now focused on generative AI and making sure everything is there, but it'd be quite interesting for everybody to give a really clear view of how do you really select the right innovation lever, whether that's ML, whether that's automation, or indeed data solutions and or Gen AI, or to solve a specific problem. So Sarah, I don't know whether you want to maybe talk about your view from customer journey automation or something very close to customer.
Yeah, I mean, I think if you think about the front to back processes that we need to tackle down, there's some natural big ones, right? Like the client lifecycle management, for example. So from onboarding a client into offboarding a client. And there are certain steps on that journey, like documentation, where you may be able to or want to take more of a machine learning or generative AI approach, down to basic, now something's come in, does it go left, does it go right? That's not a machine learning problem. That's a pure automation problem. Now, you know, I would always years ago say that RPA was just a sticky plaster on a broken process. So I'd like to think that we're actually doing everything through API enablement now. But those are simpler tasks that you need to take. Now, when your task gets kind of to the cusps where it's not black and white, you may have 30 different possible paths, 300 possible different paths, 3,000 possible different paths. Then you're moving more into the agentic space, where you want to be able to leverage the power of the technology to make smart decisions, and with that, risk does go up. So you do want to make sure that you've got the people at the right point. But a process in itself, a journey, whether it's client onboarding or anything else, should be a combination of the tools that best fit the specific actions that need to happen, and not done as little bits and pieces as part of a process. And we do make that mistake in financial services. We do just do bits and pieces of a process, and we don't look at the whole process. And if we do that with agentic, that's really an opportunity massively lost. It won't scale, for a start.
Thank you, Sarah. Eleanor, do you have a view on any such use cases that you could share?
Yes, and I mean, I think it's a really important question, and I do probably spend equivalent time deciding which use cases to build and which ones not to build. And so, as Sarah was saying, I think where we have something which is simple, deterministic decision points, AI adds unnecessary complexity and unnecessary governance. Mm-hmm. And where it does add value is where that decision space really explodes. So where something is complex, it requires reasoning logic, there are many edge cases that it is difficult to code and maintain in a deterministic manner. That's where AI starts to add value. And the important point I wanted to highlight, which I always challenge every business stakeholder on for whichever use case we do decide to build, is what is the cost of failure. So if we're using an AI approach, we know it will get it wrong a certain proportion of the time. We can obviously determine what that proportion is during testing. But the question is, even if we can see that, AI is going to get something wrong 1 in every 100 times, how are they risk managing that particular time that happens? And sometimes, as a result of that conversation, the result is that actually it's not an AI use case because the cost of failure is simply too high, or there is no clear way in which we risk manage that.
Thank you. Banu, is there anything in automation, perhaps, that we kind of undersell?
So, actually, to add on both of the panelists here, I want to give this example, which I mentioned earlier. Our wording analytics tool, it's not completely AI. So there are some parts of it, for example, the storage. So it's more engineering and automation. And the entity extraction, which is more of NLP, and the slip comparison, which is more ML, and there's a lot of rule-based.
Sure.
And the Gen AI part comes in when you're trying to generate the wording. So it's only a minor part. But if I had developed the entire tool using the Gen AI part, it would have made the system more complex and less reliable. Also, it would have been expensive, right? My principle is simple. Start with a problem, try to see like if it's repetitive, go with an automation. Do not try to use AI if it's not really needed.
Sure.
If you are doing a pattern recognition problem, go with standard ML algorithms, which are really good. Like they're good. I mean, you can readily use their existing algorithms, and I mean, go with GenAI only when you're working with the unstructured data.
Sounds good. Look, we're going to come to an end in the next few minutes, but before we do, so I'd like my panelists to think about kind of one closing component of advice. But before we do that, can we go to Slido, please? I think there is I'd really like to talk about, get your view on what will most accelerate return on investment from data and AI in your organization over the next 12 months. So perhaps we could do that. And whilst we're doing that, perhaps Sarah, would you like to give us a closing view on what's your key advice point for everybody here?
I would say you've got to make smart decisions today on what models you're going to use. So what are you going to use for commodity capabilities, external stuff, and what do you actually want to train on your data? Because I think the power going forward is not so much the model, it's what data it's been trained on, which goes back to data quality and the skills of your people. Don't replace graduates with agents. Think about how you're going to grow the skills of tomorrow and leverage the SME expertise to really teach critical thinking so that those graduates can actually grow up to actually ask the right questions.
Very good. Sarah, I'm sure my son, who's 16, is very heartened to hear that as he goes into university. But Banu, perhaps you can go next with what's your key takeaway for the audience?
Yeah. I'd say map your top human workflows, not your technology stack, your actual processes, and find where people are processing versus people are thinking. Automate the processes, like use the AI there, but protect the thinking, and talk to the people who are doing the work before you build anything. Yeah.
Amazing, thank you, Helena.
So I want to advise any organizations that feel like they are stuck in this POC purgatory that we talked about. I think organizations get stuck there when success is defined as a demo. Mm-hmm. And I think the way to escape that is to make sure that every proof of concept you do has clear success criteria, that it has a very clear keep or kill decision, and that we know who is making that decision, and that it has a very detailed plan to production, which is clear and funded.
Amazing. I like the keep or kill decision. Very, very important. So look, I think we have 1 minute and 44 seconds to go, but I think interestingly, investing in data quality and foundation has come top, followed by scaling successful pilots into production, and, we've had a slight change, scaling successful pilots into production. So whoever 2 or 3 of you who made that distinction, thank you. So that's quite insightful in terms of where everybody's at, and what's kind of even more key is developing internal AI talent and literacy at 11%. I would have probably expected that to be higher. We have probably time for one killer question from the audience. Anybody? Amazing. I think, there is one.
Firstly, just, Sarah, lovely to hear your South African accent over the screen. Just a thought about bringing people up through the ranks. For many years, people said, go and study computer science. So you had a lot of kids running off to study that. And now you've got people like the CEO of NVIDIA saying, no, AI is going to be able to do all of that. But
Yes.
Critical thinking is now the thing that is so important. And I'd just like to get the thoughts from the panelists on that statement.
Okay, very good. 10 seconds, critical thinking. And what is your key advice on that?
Shall I go first?
Yeah, go Sarah.
Okay. I was going to say, my 19-year-old studying history and politics in Exeter, so that tells you there. So, history, politics, the things that actually teach people to think critically, I think, is the way to go.
Thank you, Sarah. Hello.
I guess I wanted to also share a sort of thought where I do wonder whether, there's obviously a lot of debate around how, what a graduate career path now looks like. And obviously, I don't know, but I wonder whether it will turn into more of an almost kind of MBA or apprenticeship type model, where an organization, takes on a cohort, trains them, and then, they're sort of contracted to that organization for a certain amount of time afterwards. I wonder if it will turn, more into that model of hiring graduates.
Thank you. Very good. And Banu, last but not least.
In businesses that work based on relationships, I'd say upskilling is the only sustainable way that I see. So you need the business knowledge, you need the relationships, and that's how, and you upskill your workforce.
Amazing. Thank you very much, panel, and thank you, everybody.
Thank you.
Thank you.
Active discussion there, Naresh. That was super moderation, and interesting to hear the sorry, not the mentorship model, but the apprenticeship model being mentioned again as a way of training the talent for the future. So there's clearly something in there. We have one more panel discussion before we break for our afternoon tea. So could I please invite Tim Hickman and his group up to the table here. Tim, if you don't know Tim, is the head of data privacy and cybersecurity at White & Case here in the UK. And he has a depth of knowledge across all of those areas, so much so that he co-authored White & Case's GDPR handbook and also the GDPR National Implementation Guide. So that isn't just the law, that's also the implementation practice. So Tim, I'm going to hand over to you with your panel. Thank you very much.
Thanks very much. Okay, well, first of all, thank you everyone for being here and for to the people online as well. What we're going to do in this panel is we're going to run through a discussion with our distinguished guests here today, essentially looking at AI regulation in financial services and how that's affecting issues like governance, risk, and digital identity. As was already explained, my name is Tim. I lead the global data privacy and cybersecurity practice at White & Case. Many of you may be wondering why I'm speaking about AI regulation if AI regulatory is not in my title. The answer is my title already contains too many words and I'm trying to cut it down, not add to it. So what we're going to do is I'll do a handover to each of our panelists in order to do a brief introduction of who they are and what they cover. And then, as with, I'm sure, many of the other panels that you've seen today, including the last one, we'll pose questions to each of our panelists in terms of their expertise and subject area, and we'll all benefit from the insights in their answers. We will have time for Q&A from the audience either as we go or I'll try and reserve some time at the end. Conscious that we want to leave enough time for the next panel as well, mostly because that's also being hosted by another partner from White & Case, so I have a vested interest in not upsetting him too much by running over. So I will try and keep us to time. So if you have questions as we go, please feel free to raise your hand. If I don't spot you, harumph loudly until I do spot you. And then, of course, we will introduce you. Otherwise, as I say, I'll try and hold a couple of minutes at the end for questions. So why don't we start at this end, and we'll do introductions as we go down.
Hi, so lovely to be here. So I'm Rachel Lum. I'm an AI consulting partner for IBM, and I work alongside our financial services clients, specifically in financial capital markets, on implementing AI.
Hello, my name's Daud Hark from Deutsche Bank. I run a function called Market Initiatives. I advise all our businesses globally on new business, new transactions. I'm chair of the Bank of England's Data Standards Committee. I'm on the advisory board, the Bank of England, FCA, PRA, on future banking data. I'm co-chair of the DSB ANA Product Committee, IST12, ISO Financial Services Committee for the UK, ISO TC68, the Global Financial Services Committee, on their Standards Advisory Group. I'm on the DTCC Steering Committee and the LSEG Advisory Board, amongst other things.
not at all busy then, really. No. Hi, I'm Julie Dawson. I lead on regulatory and policy for Yoti, which is a digital identity platform that's set up basically to help us prove who we are or how old we are face-to-face and online. We've set up over 20 million reusable digital identity apps or wallets for citizens. We've done over 1 billion age checks for people getting onto all sorts of different age-restricted goods and services. And you might ask, well, what the hell's that got to do with what we're talking about this afternoon? Well, knowing who you're paying, who is being dealt with in an agentic flow, all of those are key elements in the jigsaw. So we've been one of the few organisations now accredited to the Trust Framework in the UK. It's now called the Digital Verification Service. And that, alongside the Data Act and some other regs that we'll fill you in with along the way, hopefully creates a really solid building block for the FS sector.
Thank you, everyone. I'm Tina Maisonneuve. I lead the Privacy and Data Trust function at Aon, which is a large insurance broking organization. My team is responsible for advising on cyber legal, privacy, data-related, AI-related issues across the globe as a second-line function. My team's also responsible for compliance assurance in respect of those domains, privacy rights management, privacy operations, of course, reporting on these issues consistently across the globe to our various country committees or our PLC board as well. So I'm delighted to be here today as well. Thank you.
Thanks very much. So a fantastic range of people in terms of both experience and expertise. Rachel, if I can turn to you first. How do you think that things like on-device personalized AI agents are going to reshape customer behavior and influence financial decisions, and how is that going to affect regulatory requirements?
Yeah, great question. So I think what we're going to see with, the move to sort of the agentic consumer on our devices, AI assistant advice that we already see today, and edge AI as well, where we're already seeing this shift from sort of the locus of the decision making being from the regulated websites and that all the financial services providers to the unregulated, open AI tools that are out there. So you're already sort of seeing this shift in terms of where people are looking for that advice. Now, the challenge with that is that portion is not regulated. So we're already beginning to see people will be taking advice from what not necessarily regulated sources, but not necessarily knowing that at the same time, and that's already happening. So then when we consider regulation, we've obviously got, fantastic, and years have gone into the regulation that sits around, the financial services websites and, apps and everything that's available via those channels. But where those channels are used less and less and less, and it becomes about what's on your device and the, open AI tools out there, the regulation isn't there for that. So it's how we potentially move that sort of regulation barrier, boundary, to ensure that we capsulate that, but it's probably more on an activity basis rather than obviously regulating all of, open AI tools out there, because that isn't possible. But how do we start to sort of expand, I guess, the perimeter of that regulation, recognising where people are looking for that advice? And probably the other piece to be really mindful is, again, for those who are very financially literate, it's probably less of a concern. But for individuals who are less financially literate, who go that path, it is likely that their financial literacy will go down even further. So I think that's the other part to think about in terms of when it's the regulation that protects the quality of advice that's given, but also the implications that lack of regulations has on individuals and their own financial literacy.
So I get the impression that the regulation we have in the AI space right now might not be perfectly fit for purpose.
I mean that's. I think there's a real positive signal. So the FCA, the outcome-based AI, outcome-based regulation. Yep. We think as an organisation is absolutely the step in the right direction. It's just the speed and the pace that is going to have to move at to keep up with how quickly individuals are changing their behaviour. Using less, independent financial advisors using more the device. It's the pace rather than how the regulation is probably being conducted.
Good to know. So, Daud, if I can turn to you then, obviously, as Deutsche being one of the most heavily regulated institutions, certainly on this panel, are you finding that financial institutions are building their AI systems on good quality data or not? And what risks does using poor quality data create?
It's okay, it's a mixed bag. It's hard to tell if it's good quality data or bad quality data until you see the outcomes and then see how they act in the real world. Obviously, you assume that you've got good quality data because you wouldn't have it otherwise, and you think you've cleansed it. But actually, in an outcomes-based world, which is AI, you can only see if it's good quality data or not from what you're using it for. So where we're using AI in our front office and using it in trading, it's actually very high quality data because the input is very high quality. It's market-based data. It's very highly tuned because it's being used to make trading decisions. But when you start to look at other parts of the business, like in, for example, client data, you're starting to look into how we manage some of our operations processes and some of the data we've captured in those spaces, suddenly that's where you start to see the gaps. You start to see that it's unharmonized, it comes from multiple different sources that have been captured different ways, different times, different architectures. It's being transposed in different ways, so that when you bring it in to use it in AI, it doesn't make sense as a coherent single data set. And so one of the problems you get with data is how often it's transformed. So from front to back, how often will it change? How often is it changing before you put it into the AI? And how controlled is that? How well is that managed? I think it was Sarah said on the last panel, it was a very good last panel, by the way. She was saying governance by design. Well, we're looking at compliance and control by design. So you have to build all of these type of aspects into your AI model and how you manage the data in order to get the right output. And I think we have to go back a step and look at, before we put the shiny tool on top of the data, we have to look at the data itself and say what outcome do we want and have we got the right data to do that.
Perfect, thanks. So it sounds like there's a, not to make it a chicken and egg situation, but certainly an iterative situation where you have a data set, you think it's good data, you build AI, you'll only know whether it was a good data set once you see the output of the AI, and then you have to either improve your data set or improve your model.
Yeah.
Well, fair enough.
Yeah. It's iterative, right? And it's that's that you see a lot of managers, a lot of senior managers, especially after coming back from Sibos, had this whole thing in that they wanted to build AI models now and have them going into production and coming out with, you know, things that either save us money or make us money. But it's a journey, and we have to go through that, and it's going to be an expensive journey as we do it. I mean, I know I chaired a financial services AI roundtable of all the banks working in operations and compliance space, and a lot of them had spent a great deal of money, and very few of them came out with any more positive outcomes than they could have if they'd done it themselves. Right? So if they'd thrown people at it, they would have come out with the same outcomes quicker and at less cost. But you have to do these proof of concepts and have to go through this iterative approach of the AI learning and then you learning off the AI and learning what works and what doesn't before you can get to something that's better and quicker than you could do it yourself.
Thanks for the context, useful. Right, Julie, if I can move to you. Obviously, a lot of the work you're involved in is in relation to UK money laundering regulations. And we've got changes to identity laws, like in relation to alcohol and mandatory licensing conditions. What are you seeing as genuine game changers in this space for digital identity?
Yes, good question. So there's quite a few changing elements, really. So historically, there hadn't been trust in digital identity as an infrastructure because it wasn't really referred to in law. So the Data Act came in last year. That was one big step forward. And there is now a trust framework called the DVS that's been set up, and over 40 organisations accredited to that. And just in the last month, there have been 2 more pieces of the jigsaw that have fallen into place. So the money laundering regs now refer to this DVS register and organisations accredited to it. And the lovely Good Practice Guide 45, for those of you that are acquainted with it, now also refers to the trust framework. So you're starting to have legal clarity and confidence for financial services organisations to finally rely on digital identity. And then there's other sort of societal areas which might seem a bit random and tangential, but last year the Online Safety Act, about 10 million citizens set up a digital identity to prove their age, to access adult content. You've upcoming, a favourite pastime of the British citizen, about half people every week, buy alcohol. So age-restricted goods in supermarkets will also soon, you'll be able to use digital identity for that. So add those together, you've probably got over 60% of the public that actually in the next year or so will be starting to see convenience through a reusable digital identity. And that then is something alongside this legal clarity for digital identity that becomes of interest to financial services compliance officers and those looking at all the different touch points in a user journey. Not just know your customer, but flipping it round, know your business. Am I really dealing with HSBC or Deutsche Bank or whoever when I get on the line? Know my member of staff, know my volunteer in lots of walks of life. So that, I think, is the game changer. It's not just one of these events, it's the sort of the domino effect of these coming together. And hopefully there'll be even more clarity because there's a lot of other sectors that rely on the money laundering regs, not just financial services, but gambling, home buying and selling, lawyers, accountants, even art dealers. So there will be updates in, for instance, the LCCP Codes of Practice of the Gambling Commission that needs to refer to this. So some of that might take a bit of time, but we're already starting to see fintechs that classically are the most agile looking, how can we avail of this? So if you look at a timeline over the next period, more organisations are thinking, well, how can this help me in my AI journey as well? Where can this fit in with payments? And when you start to be able to join the dots, it's part of the structure that can assist with the events we've been talking about today with AI and agentic flows.
And to follow up on that point about adoption, I mean, how is confidence in not just the technology, but confidence in digital identity being affected right now? Because I would imagine that, you know, any number of motivated, malicious third parties might be trying to use the various AI tools that exist to impersonate people's identity.
Absolutely. So some of these building blocks have been around for a long time. So biometric verification, the authenticity and checking of documents, digital credentials, the sort of digital credential formats and wallets. But there wasn't a lot of trust in each of these different ones. There's now more and more specific regs looking at, for instance, just liveness detection, IBETA 3, for instance. There's now specific regulation with the trust framework that looks at all the cybersecurity and data confidence elements within the trust framework. So it's putting those different things together, I think, that is important, and then enabling the interoperability across trust frameworks. You're starting to see governments talking about how can different digital identity trust frameworks in Canada, Australia, EU, UK, Singapore, how can they interact as well? So not just within one country, but wider. And then you start to have the parity of acceptance of a physical document with a digital one. Absolutely, you've got to then have minimum standards in place. Is this really my face with liveness? Is this an authentic document? Looking at lost and stolen, fraudulently obtained genuines, lots of sort of nuts and bolts under the hood. But absolutely now there are minimum standards for that, and through the trust framework we have a mechanism which is being referred to in law.
Interesting. I mean, I personally I was applying for a service recently and I had to stand in front of a white wall and do a video that was about 30 seconds long of me holding my passport up. My hand had to not obstruct the passport, but also had to have like both pages open. And they wanted me to say certain phrases that were sort of prompted on the screen, and you had to then... So you needed a laptop and a passport and some kind of camera. I mean, it was all of this seemingly driven because AI is making it easier and easier to, you know, sort of impersonate someone's identity.
Synthetic frauds are another really, you know, tricky area. What you wouldn't want is you know, good cousin, bad cousin, or, you know, twins, etc., where people look at a merged synthetic identity. So there are even countries now to get your passport, you have to go to a physical location, so they really know that is Fred Smith. So some of the digital things we thought we'd be able to do just digitally are also now being, you know, put into question.
Thanks very much. Tina, coming to you. How are you seeing firms use frameworks like NIST, cybersecurity standards, and ISO frameworks to build AI risk and control their libraries?
Oh, great question. obviously there's so much guidance and regulation in the AI space now, and it can become really confused or difficult to know in a global organization what kind of framework to apply, whether you choose the jurisdiction where you have a significant presence or you apply a global framework. So I think NIST and ISO are well-respected frameworks that can help an organization develop an approach that puts trust, fairness, transparency first for the organization. And we use it as a risk management framework. We use it firstly to establish standards in the organization. We think about what are the control processes or standards that we want to have applied across the organization. And we also choose specific elements to help us identify AI risks and mitigate those risks, whether those relate to privacy issues or bias, and other ethical concerns. And then we also apply those frameworks and best practices outlined in those frameworks to think about transparency, accountability, security, all of those other risk mitigations. And then we use them as well for continuous monitoring, so compliance checking, assurance, to make sure that the framework that we put in place really does stand up to scrutiny. And then also it's a really good reference point we find for training and development needs as well. So that's how we're applying it in practice.
Interesting. Okay. So turning from then frameworks that sound like they're working pretty well to a framework that I think we can probably all agree is not working as well, the EU AI Act. For anyone who's not followed this super closely, the short story is that some bits of it are already in force. Lots of bits of it will apply to businesses operating in the UK as well as in the EU. And right now there is a lot of uncertainty as to what's going to happen with Chapter 3, which is the bit that probably affects most of your businesses, which is the rules around what are called high-risk AI systems. I'm not going to dive into all of it, but if anyone's not following the details, on Wednesday there's going to be a vote in the European Parliament to maybe push back some of the enforcement deadlines from 2nd of August this year, which is when they're currently scheduled to kick in, to December next year. So that would buy us an extra 15 months, I guess, to get compliance. And a lot of my clients are sort of assuming that's just going to happen. Obviously, if it doesn't happen, we're all going to have to suddenly increase our compliance budgets, which is no fun for anyone. But looking specifically at one of the big problems in that legislation, Dowd, I want to bring you in. The current definition of AI systems in that law is something that a lot of businesses have found challenging. I mean, personally, I think I can make a cogent case that autocorrect in Microsoft Word satisfies every element of the definition of an AI system. I don't think that's what they're trying to regulate, but I think in an effort to make a law that is so broad and so flexible, they've captured a lot of things that you wouldn't actually think of as AI. And so, Dowd, my question for you is that current definition of AI systems going to be too broad to apply for financial services companies?
No. We are a very conservative organisation ourselves, and we will probably bring into scope many of the things which we already use, machine learning, for example, a lot of stuff on our algos that we already do. Now, if you're looking at it with a UK lens, which is all conduct-based, we've already got those implemented already. So we already do many of the things that the AI Act already commands and demands. So I'm not overly concerned about the gap and us meeting that gap for some of these things that I would argue aren't AI. But on the other hand, I mean, I've heard from a lot of sources that they will push it back, and it's pretty certain that they will. There's lots of, not because it's just problematic, it's not because the actual rules are problematic, it's that it makes Europe less competitive against the US at the moment. And the EU is very much focused on competitive markets right now, which is not necessarily a bad lens. So I expect very much it will be pushed back to at least December, and then probably again.
Never ending.
So, but I think the principle of itself of we need something to manage implementation of AI and protect consumers and reduce the risk. I think it's good, actually. I think it's good that we have that there. it could probably be tweaked and it could be probably tuned better. But as AI evolves, I mean, it's hard to pin the tail on a donkey of what is AI anymore. So I'm not sure, you know, how, I'm sure there are brighter minds out there who could give a more distinct definition, but I think it's a very good first stab.
Indeed. So on the point about whether or not they will push the enforcement deadline back, I think that's a really good point to make. There are two things to this. First of all, the European Commission has various statutory deadlines by which it's supposed to provide guidance that would help us all to understand this law in theory. And the Commission has missed a bunch of its own deadlines, and as a result has become more susceptible to pressure from businesses and, you know, chambers of commerce and so on to persuade them to push back enforcement. But the problem is that as soon as they reopen any regulation in the European Parliament, immediately various committees, the Libe Committee, Justice and Civil Liberties and so on, in the European Parliament will start adding stuff, and this is what's happened in the current rounds of negotiation. So what I suspect is going to happen there is they'll do the same as what they did in financial services whenever it was 18 months ago, and bifurcate and say the substantive changes to the law we're going to push back, and we're just going to make a change sometime before enforcement starts to just push that date back. So if I was a betting man, that's probably where I would go, is to say they'll push back the enforcement date, but substantial changes to the actual legislation are going to take longer. All right. And then, Tina, if I can bring you in next, how, in your view, should companies that are outside the direct scope of AI regulation prepare for their indirect obligations? And I think the thing most people are probably really interested in is where I don't have obligations under the AI Act, but I'm buying a service from somebody who does have obligations. What do I need to think about there?
I think it's still really important to understand, as part of your supplier onboarding process, how your data is going to be used. So I think third-party risk assessments and really asking those AI compliance questions of your vendors are really critical. And then just in general, you know, I don't think even within a services firm like ours, I don't think anyone should overlook the role of data governance in general. So understanding how your data is used in the products that you're building, whether you're subject to AI Act or not, is also hugely important, because we know the regulation is vastly evolving, it's changing. You know, I can see that clients are asking more and more questions. So just even being able to answer those questions in respect of the services that you provide your clients are also really, really important as well.
Thanks very much. So one of the interesting things we're seeing from a lot of financial services businesses at the moment is how we negotiate contracts with service providers where either there will be a future obligation under some AI regulatory law, or you've got a vendor that is subject to these laws and you as the buyer aren't necessarily subject to them. What do you do? And one of the oddities of the AI Act, the EU AI Act, is that the thing that decides whether or not what you're buying is high risk and therefore attracts regulatory compliance obligations is what the intended purpose of that AI system is. And so, of course, the first question that will go off in every lawyer's mind is, well, whose intent matters? To which the answer seems to be it's the provider. So in Article 3, Paragraph 12, there's this definition that talks about what is the provider. So the software vendor, what do they intend? And for a lot of people who are very familiar with SaaS contracts, this is going to be a massive problem, because you buy a service today, you're obviously intending that, as with all software as a service arrangements these days, your vendor is going to make improvements and upgrades and so on over the life of the product. That's now going to become a massive issue under the AI Act, because now when your vendor changes what the AI does, there's the risk that your vendor inadvertently introduces new capabilities that will drag you into that high-risk AI category, even if you as the buyer didn't mean that to happen. So there's a lot of concern at the moment about how do you draft an effective clause that says to the vendor, yes, we still want you to improve the product and keep it secure and so on, but at the same time, don't give me AI that's going to drag me into high-risk scenarios under the AI Act where I didn't need that to happen. So with the sort of emerging systemic risks in mind, Rachel, I wanted to turn back to you to ask about how you're seeing that work, and specifically where you're seeing potential for accelerated deposit flows and agent-to-agent interactions.
Yeah, I mean, I think, again, sort of building on a lot of what the panel have covered today, and especially sort of Julie's point as well, the more that we see agent-to-agent interactions, probably a few things. So with the agent-to-agent interactions, obviously there are new systemic risks, you know, the potential for accelerated deposit flows and new risks that we aren't currently having to manage today. So building on the kind of competition point, we need to ensure that that's regulated in a way that doesn't stifle competition and allows firms to remain competitive as, you know, I guess as those new opportunities emerge, and being able to, you know, build their business, their offerings based on those so that they do remain competitive with almost sort of the sort of general purpose AI, you know, advice and interfaces that are out there. So you almost sort of want to level the playing field in terms of, again, the advice that you're used to procuring that comes from the regulated firms versus the advice that you can now get using the sort of general purpose AI model. So it's how you manage the risk that comes with that. But then if we then just focus on, again, the advice that comes from the general purpose AI, but then also the agent-to-agent interactions, it's, again, how do you manage that risk when you're not quite sure of what the consequence is going to be and how far that's going to go. You know, things that we've sort of have recommended, I guess the key thing is kind of, Julie, building on what you're doing, is like the role of the ability to use digital identity and the role that plays, and then taking that one step further where you've now got, you know, lots of large digital intermediaries involved in this, so whether it's the wallets, the app stores, the device OS's cloud, ensuring that you strengthen that cross-market accountability. To your point, it can't, you know, it's on like the third and the fourth and the fifth party supplier, but that, you know, everybody within that ecosystem, you're really clear on what everybody's individual accountability is and how that affects customers' financial journeys, the data separation, the conflicts of interest and the controls, and mapping, you know, that view. So it's, you know, those journey flows and all the roles the different parties are going to play is very different to ensuring you've got the accountability across, you know, that cross-market accountability. The second is ensuring that as these systemic risks occur and increase, again, this is another role like for the FCA and others, is they will have the ability now with AI to ingest and model a huge amount of data. So the ability to identify sort of the build-up of these risks and then potentially identify remediation actions, and again, it's another new strength that we can play upon. And then where we sort of, again, building on Julie's points with the trust store, is how you bring all of those together and have common patterns and permissioning, so that we're sort of following, you know, the trust framework. More and more people are following that, so we're all sort of behaving in a consistent way.
Thanks very much. So with the references to the things that Julie was talking about, Julie, I was wondering, what does parity of acceptance mean for digital wallets and credentials across different countries and different sectors where you maybe have different requirements?
I think it's worth just sort of stepping back, because probably everybody here has got a physical passport or driving licence, but how many people have actually set up a reusable ID wallet? One, there we go. Two, 3, 4, maybe. So this process means that you're adding an identity document, which previously was literally putting on your phone with an NFC chip the document. It would read inside the chip, separate all the identity attributes, give you the private key on the secure module of your device, and after that you could just share your over 18 with a dating site, or you could share your know your customer details with the financial services site. So these wallets are gaining traction in different parts of the world, sometimes mandated by the state, and we've recently had a U-turn in the UK, so it will no longer be mandated by the state, it will be voluntary. However, the government will be issuing, for instance, a mobile driving licence to your one login for government, and you will have a choice then of hopefully where you put that digital token or credential from your driving licence. And then you could use that, or your, you know, teen could use that getting into Glastonbury to show they're an over 18. Maybe if they make it from 15 plus, the 15 plus might be using it at the Odeon Cinema to get in. And then one or other of us doing a home buying or selling check could be using it to say, I am the buyer, or I am the surveyor, I am the, you know, all the different members in the chain. So what you're looking at is you have individuals that are verified, Companies House, you can then verify at a company's house, and then through work that's being done by CFIT in the UK, we're looking at business identities, so non-person entities as well as person entities, and then obviously also that is moving on to agentic entities. So what you're starting to look at is, whereas previously we would walk around in our back pocket with a document going from A to B to C, 1 million driving licenses lost every year in the UK, 400,000 passports, loads of those sweeping up in the nightclub floors, nighttime economy, and also, you know, creating large amounts of identity theft and fraud for citizens, which has, you know, different risks elements. So wind forward to a new world. In the EU, every EU citizen will be given a UD wallet in the next year or so, and that's mandated. And the EU have flipped the narrative and said there will be about 7 sectors where digital identity will be accepted, which pretty much align with your smart data sectors, so telcos, health, financial services, government, etc. We've done it a little bit differently in the UK, and we've set up a trust framework. We're going to make it voluntary. You might be able to have a private sector or a public sector wallet, and in time, different sectors will be accepting those. So we might have a slightly different time frame. But within a few years, pretty much the same setup, that an individual isn't having to physically carrying something around or upload a PDF of their driving license to some site, that this will be done digitally. So that requires face matching, document authenticity checks, liveness detection, injection detection, all sorts of things under the hood. But then after that, a system that needs a credential can ask for that verified credential. That verified credential can be checked instantly, and you can set in your risk rules. So onboarding can be done in a different way. Re-authentication can be done in a different way. So your AI compliance agent is then starting to have a different tool in its toolbox, as will all of us. So I think that's where the parity of acceptance is leading us to. It's not just moving from literally going into Tesco's and showing your 18 plus. Yes, that will be step 1. But in the next year or so, in lots of different transactions, enabling you or your business to present itself digitally.
Fascinating. 1 million driver's licenses are lost. I mean, I suppose I've lost
Every
mine
year, yeah.
every now and again. So, wow, I'd never thought of that. I'm conscious we are coming up to sort of the last portion, and I haven't had a single question or person raise their hand in the audience, or if I have, you didn't harumph loud enough. So if you have questions, please do feel free to raise your hand, or you're going to lose your shot. I see the chap. There's one over there. Okay. Just wait for the mic to make its way down.
Hi. So, given the advancements in, say, quantum computing, does this not increase the vulnerability of a digital identity? And what safeguards are you anticipating to put in place? And maybe that's sort of a nice cross-reference to a lot of the discussion around insurance. Maybe you just up your premium to counteract that.
Thank you. So across the sector, absolutely, in all sectors, it's really important to look at the multiple layers of cryptography, hardware security modules, and also your business model. So we've built our business model from the ground up, that we do not know what any one individual is actually doing. So we have a non-relational database at the core. So we've built it to make it the least appealing for someone to want to get into. So everybody in this room might have done 20 different things in a month, but we don't list those all in one column. Everything is fragmented, and only one individual can take out their data and share. If law enforcement comes to us, we can only corroborate that a receipt is valid. We can't daisy chain back. So we've, through our architecture, tried to make that as unattractive as possible. However, we do have to look at things such as, you know, malign nation states that might try through insider attacks to use quantum and, you know, see what they can do. So it is an ongoing battle on all the different cybersecurity levels to look at how your system is architected, to make it hopefully as least attractive as possible, and also all your ongoing controls, because absolutely it is something that we all have to be aware of.
Okay, seeing no further hands raised, I'll take one. I'll do one more. Oh, sorry. Now we have. Okay, go ahead, please. The mic's coming down now.
it appears currently AI is embedded part of our decision making. The question is, should we treat AI systems as regulated financial infrastructure, just the way we do payment systems?
Should we treat AI systems as regulated financial infrastructure?
Thank you.
So I'm not a financial services lawyer. My colleague Jonathan, who will be leading the next session, is probably the best person to answer that. I'm not even sure if we should treat AI systems as AI systems. One of the biggest challenges on the AI, I'll answer the AI regulatory side of that, and then I'll defer to Jonathan in the next panel to pick up the financial services regulation point, unless anyone here wants to take that point.
Well, I mean, absolutely, we should treat it as market infrastructure. There's already rules in place. I mean, if you look at what the FCA are saying, they're saying exactly that. We already have the rules in place. If you look at operational resilience in the UK, AI absolutely falls into scope for operational resilience, so which is why they're not bringing out their own AI Act. But it doesn't cover it all, does it? Really. And just because we can doesn't mean we should employ and use AI in every single part of our services. And there should be ethical guidelines that go beyond market infrastructure, which we have today, which have not been explored for multiple reasons, I guess. Partly because it's difficult, partly because people don't want to curb the opportunity of AI. And, I mean, superintelligence in and of itself, it's supposed to take over us, and we have ethical concerns and ethical guidelines and barriers around how we act. And we should employ something for AI as well, but they haven't tried to tackle that yet. But so it's more than just infrastructure, but we do currently, the FCA certainly look at it as infrastructure. That's my best answer.
Okay, so thanks very much. I think we are at time, so thank you all for your attention and your questions, and thanks obviously to our panel, Rachel, Dowd, Julie and Tina, and it just remains for me to hand back to Vivian.
Thank you very much. The panel. And I love that phrase, just because you can doesn't mean you should. I use that one often, so that was super to hear it. We're now breaking for our networking and afternoon tea. Just a quick reminder, if you get a chance to fill in the feedback form, that would be great. And if you hand it in with your name on, you even go into the draw for a bottle of champagne. We will reconvene here at 4:05. So for our virtual audience, we'll see you in about 15 minutes. Everyone else, 15 minutes. After which we have two really exciting panels to finish up the day today. So I shall see you very soon. Thank you. Back. Hello again to our online audience. We have 2 panel sessions to go before I do my wrap-up of the day. It's been terrific actually having the conversations outside and hearing the feedback on just the level of discussion inside the room, the insights and the expertise. I have to say I've thoroughly enjoyed hearing all the different perspectives as well. So to take us into our penultimate panel discussion, I'm delighted to introduce Jonathan Rogers. Jonathan is a partner at White & Case in the financial services regulatory team. I think you were name-checked by the moderator for the previous session. You're based in London, but you lead the global financial services regulatory practice. And I just think it's great that we've got people on the data side, as well as the privacy side, the AI side, and then pure financial services people as well. Jonathan, I'm going to leave you to introduce your panel. But your topic is opportunities for innovation in payments and open banking in the UK. As we know, the UK led in open banking. It's been adopted by many other jurisdictions subsequently. And now we're talking sort of in terms of open finance and where that goes. But let's think about, first of all, how AI is transforming payments in that space, and who better to lead us but Jonathan and his panel. So Jonathan, over to you. Thank you.
Thank you. Good afternoon, everybody. It's great to be with you here. Got us for just over half an hour. We're looking to talk about innovation, but also looking at the kind of, as it were, the maybe risks emerging and how do you manage that process, particularly with a view on to consumers. But just to get everything rolling, we've got Richard, Sam and Nick here. Do you want to briefly introduce yourselves? Richard.
Sure. Richard Fenner. I'm a senior director responsible for corporate affairs and public policy at Euroclear UK and International. That's the central securities depository in the UK.
I'm Sam Hinton-Smith. I work at Stripe, where I look after public policy across Europe, the Middle East and Africa, and Asia.
Hi, I'm Nick Davey. I'm from Open Banking Limited, a small company that does open banking for the UK. Where I've been there for 2 years. Before that, I was at the Payment Systems Regulator, PSR, which is an almost defunct regulator in the UK, but not quite. Before that, I was at the Bank of England for many years.
Thank you all. So really interesting blend of perspectives. We're going to leap into kind of what innovation using AI means for our different businesses. So Sam, I'm going to come to you first and use that phrase agentic commerce right from the offset. It's a red hot topic, agentic commerce. What does it mean for Stripe in terms of your role in the payments chain and opportunities that you're seeing?
Got it. Well, I think that taking a step back, at Stripe, we think about artificial intelligence as being a force multiplier. So it is now being applied throughout the payments chain from, for example, fraud identification and mitigation right through to optimizing checkout. So I think AI is now fully integrated, certainly in payments, and I'm sure across many other parts of the financial services sector. I think an important part of that is that AI is no longer just about knowing things, it's actually about doing things. And agentic commerce is a really good example of that in practice. So what do we mean by agentic commerce, to your question, Jonathan? So agentic commerce can range from using an agent to help you as a consumer to search and identify a particular product that you want, right through to truly agentic commerce in areas like booking travel or in the supply chain. I think one really important point to make is that we're very early in this ecosystem. However, we expect that ecosystem to evolve very quickly indeed. And I think we're seeing that in e-commerce, a shift from merchants from search engine optimization to how can I make sure that my inventory can be discoverable by an LLM, which is quite a significant shift. And this is no longer theoretical. So we get lots of merchants ranging from large established retailers through to digital platforms who are looking at how they can adopt agentic and indeed AI in general in their e-commerce suite, but also in other aspects of their financial management. So, for example, in Treasury. I think the final thing I would say, Jonathan, is that if you take agentic along with the way that, as I said at the start, that AI is being deployed in payments, and then also actually the way that payments is enabling many of these new AI companies, I think there's a really interesting mix when we think about what does that mean for infrastructure, what does that mean for businesses and consumers, and certainly in my day job, what does that mean for policy and regulation as well? So a lot to get into in the next 35 minutes.
Yeah. No, thank you. Nick, over to you in terms of how you're, as an organisation, thinking about AI. I mean, the OBL's issued its own green paper in recent history. It'd be lovely to hear what are the high notes of that that you'd like to talk about.
Sure. The green paper, our first green paper, was on AI in open banking. We started from some principles about, so less about agentic commerce at that point in time. This was just before the end of last year that we issued this. And it was more about what we could do in open banking to facilitate things, because we are a facilitator, we're a convener. The first thing is, can AI be used in order to get better data sets together effectively? So we're talking about open finance going forward. When we did open banking, it was quite expensive for the banks in the UK to get all the data they needed to get into the same place to be able to expose them to APIs and build the APIs. So that was the first kind of theory, which is, in a world of doing something like open banking, open data, now with AI, is it a lot cheaper, is it a lot quicker to get the data out there? Which is going to be incredibly important, I think, for agentic AI going forward, because AI only works if the data is good quality. There's no point having an agent going around trying to get you the best deal in, I don't know, what do you say, travel, flights or holidays?
Nick, I have my own anecdote around trying to buy a very large tent with very, very particular stipulations, which I won't share on stage, but we can compare notes on afterwards. But yeah,
I would like to hear this one. Yeah, so exactly. But if you haven't got that, agent can't go and get the data in order to actually get you that thing. So good quality data. We're in the market for good quality data, which is validated and available from source. The other thing that was coming back from a lot of the stuff we're talking about is consent. And in a world of, in open banking, you consent to giving access to your data or making a payment. So there are different models for agentic AI, but one of those is the agent's acting on your behalf but goes and takes the decision for you. It makes the payment. It buys the product and service. And there are different models out there. I know Google and MasterCard have got different models. But how does the merchant know, firstly, that it's an agent and not you that's purchasing? And I was at an event and someone was talking about 10,000 bananas. And if an agent goes and buys 10,000 bananas because you wanted 10 bananas, is someone going to ship you 10,000 bananas? And what are you going to do if you want to ship back 9,990 bananas? Because it's clearly an error. But how do you trace that back? Where's the consent journey that says the person has said this is what they wanted to do, and therefore I trust the agent before I ship those goods and services? And that's part of what we do at the moment, because consent is embedded into open banking. You consent to payments. You consent to your data, which makes perfect sense. In a world of agentic AI, you're going to consent to your AI and give your AI the ability to go and do things. But at the end of that journey, you need to have some form of traceability to say, if that AI has gone and done something, 10,000 bananas, say, or something incredibly bizarre, that's not the merchant's problem. Or the merchant can take a view on whether that's a likely transaction to happen or not. And then that transaction can transpire. So one of the things we're looking at is what the consent journey needs to be in a consent model when you get to agentic AI. And not to labour the point too much, but one of the things we think you'd want to do when you do agentic AI and purchases is check how much money you've got in your balance before you go and make that purchase. And the best way of doing that is to use an API that already tells you what your balance is. So we think the agentic journey, even on e-commerce, is also linked to open banking, because it might be an open banking payment, but if nothing else, it's finding that data. What are the parameters? Can I afford that purchase? Can I, effectively, have I got the money to make it?
Nick, thank you. We'll come back to some of those points. So, Richard, to bring you in here, no pressure. We've had an order for 10,000 bananas, I think it was, a large tent. I'm interested to know what you're going to bring to the table. But, I mean, you're representing a wholesale sort of market infrastructure, but clearly what happens there has a direct impact to the consumer experience through intermediaries. I mean, what are you seeing by way of innovation at the capital market level, and how that feeds into or could feed into the consumer experience?
Yeah, thanks. And I'll start by following on from Nick's point about data quality being so important. And one of the things that we think about as an infrastructure is how do we bring the different silos of data that are out there together so that they can be best leveraged. So I think unlocking the value of data, not just through structuring that data, but also bringing different pools together is very important, especially in the wholesale capital markets. You know, another point is reimagining the customer experience and some of the client journeys that are out there. So I think, you know, there's real potential in advice and guidance for investors for their retirement and financial well-being, to leverage data and AI to make it more inclusive and accessible. It costs an advisor about £1,500 just to gather all the information about someone's financial position as it stands. If we can find those ways to blend AI and the human experience and the human touch, if you like, I think that is what is going to really deliver value for end investors. And my other point around what use cases are we seeing? So, you know, there's ever more automation of manual processes in the financial sector. There's obviously pressure on cost effectiveness, and there's, you know, pressure as well on, is it a trusted infrastructure that is providing the pipes for this data? So I'm sure folks will have all read about the recent news in respect of Companies House. You know, I was reading some of the comments below the line, and you know, that really reinforced to me that we're still on a journey to win the trust and confidence, which is a hard one from consumers. I think to the extent that AI can be used, as Sam said, to combat fraud, to the extent that we can, you know, bring the conversation around digital identity into one that is, you know, empowering actually for consumers' well-being, that's going to be crucial to maximize the value in the long term.
Thank you, Richard. We'll come back to that question of trust. Sam, coming back to you, you mentioned, you know, in a way we're still early on in the development of the ecosystem, but I sense you think it may all happen sooner than people think. What are the consequences of AI innovation that we need to think about in terms of perhaps customer ownership, the cost of energy consumption, different types of payment transaction? What do you see changing? Not a problems, but consequences that we need to be thinking about.
Yeah. No, look, there are a few interesting themes. So one is around AI companies themselves. And so at Stripe, we have something of a front row seat because every one of the Forbes AI 50 companies that accepts payments online does so with Stripe. And so from that, we see a lot of data. And I think one notable thing is the way that this cohort of AI companies is scaling relative to previous waves of software innovation. So they're scaling faster, so getting to around about $1 million in revenue within 11 months. So that's faster than previous waves of software-based innovation. And they are also global by default. So typically, an AI startup will be doing business in 56 global markets, compared with around about 26 for previous waves of SaaS-based innovation. So that's a marked shift. I think the other big shift is just thinking about the way that these companies monetize. Again, in previous software-based waves of innovation, companies would typically use a flat subscription-based model. That's really hard to do if the cost of delivery is based on input costs like GPU usage and ultimately on energy as well. And so things like usage-based billing are absolutely critical to enabling those companies to scale. I think the other important point to me, and I think it probably comes back to the points that you were making, Nick, about open banking and by extension account-to-account payments, is that many of the existing payment rails, and thinking here particularly of cards, aren't well suited to a world of micropayments. I think actually, if you look at the way that those AI companies are evolving and the kinds of products that we're increasingly using that are based on usage rather than on flat fees, things like the ability to make micropayments and for those payments to be programmable, so whether that's through technology like stablecoins or whether that's through making better use of instant account-to-account rails, I think we're going to see more and more of that. And actually, it's one of the reasons it's so important to get for the UK to get the framework right for stablecoins, because if you like, the Googles of tomorrow will increasingly be building on stablecoins. So we see some of the AI companies are accepting up to 20% of their payments volume using stablecoins already today. And in fact, I would say that many of the lessons that we would apply to stablecoins would also apply in the A2A real-time payment space as well. So yeah, a lot there to unpack. Just very quickly on a point that Nick was making a few minutes ago around 10,000 bananas. One of the areas that we're seeing industry innovate in is around what we would call scoped authority. Mm-hmm. So we have something called shared payment tokens. I guess the way to think about this is that you don't want to hand the agent your card and say, go and buy bananas. Yeah. And instead think about handing the agent a token that says, I am stipulating all of these things in terms of product, item, price, and many other facets as well. And obviously getting that piece right is going to be critical.
And the token is shared end-to-end?
Yeah.
Which is the way of working back, assuming that you can... Yeah, okay. Yeah. So the token's end-to-end, which gives you the reliability on the person actually had ordered X amount of bananas at the end of the chain, which is pretty nifty.
It can be done. And Nick, coming to you, I mean, you're in the market for good data and a solution around consent, but just, I suppose, a little bit more around how you can see AI potentially kind of turbocharging the use of open banking. What do you see there in terms of how AI could be used to, I suppose, increase usage into open finance, but also maybe even solve the data conundrum as well?
Yeah, absolutely. Very, very good questions. I would love anything to turbocharge the use of open banking data. And to be fair, and payments, but the data side of it is clear with AI. So we've already seen a lot of what we call third-party providers, TPPs, in the open banking ecosystem. They already use AI on the APIs in order to do better data insights for individuals. The issue you have there is it's only current account data. Right, so there's only a certain amount of insights you can get from current account data if you don't have the whole financial life of a person. So you've got savings, mortgages, all that kind of stuff, and then you add it into other sectors as well. So one of the things we think has sort of held back open banking, and it's still used a lot, don't get me wrong, but from like all the use cases, it only being a narrow part of someone's financial life. But it is still pretty good, and AI has also given lots and lots of insights to individuals about their financial life. So we think it can supercharge that. As I mentioned, if it can bring lots of data sets together in order to provide data externally. So if you're a bank and you were going to have to do mortgages, for example, and your mortgages are on a number of legacy platforms, if you could just plug an AI into that and say, we want mortgages, and it could go and get the data, clean it all up, and then provide it and expose it via an API, that would be very quick and probably less costly than the normal way of doing things, rule-based delivery. Even though AI does provide the ability to have software developed very quickly, so you don't need a whole room full of programmers. But if you can do that, and we've talked to people who do this, they do it in the NHS and places like that, in small pilots, that is going to get a lot of data to market a lot quicker and a lot less costly than previously. If you then build that up with open finance, current account data, off you go. You've got a much richer data set to then have your open banking and open finance APIs and AI tools. But as I said, I think one of the biggest use cases is when you are doing things like in agentic going to make purchases or make different choices, wanting to know how much money you have, not just in your current account, but in your savings accounts and things like that. Maybe how much you need to save if you've got like lifestyle choices going on. If, like me, at some point you've got kids who are going to go to university and bankrupt you. Things like that. You know, how much should I save per month? I don't know, and I haven't got a view of how much university is going to cost me in the future. But those sorts of things are the ones that are, you know, you could get that kind of insight given all your different facets of your financial history. But yeah, I mean that's basically where we think it's going to make a real difference. And AI can just do things a lot quicker. It can give you the insights. It's not rules based. It can see deep patterns. It can compare you across large data sets to say, you know, how do you benchmark against other people, that kind of thing, which is great.
Thank you. And I'm sure university will be fine, but bananas are a great brain food. It'll be fine.
They'll all have rotted by the time my kids get to university.
Richard, just digging in a little bit more into what innovation might look like in your world. I mean, what sort of limitations are there in the current infrastructure that supports the wholesale markets that you think AI could really help deliver solutions on, so that we're beginning to see different, you know, scales or types of performance?
Yeah, so I think I would build upon my comment earlier around manual processes that are being automated at the moment. So in the wholesale capital markets, we're undergoing a transformation from so-called T+2 settlement to T+1 settlement. And without getting into the detail of that, you know, in essence, it's going to reduce by about 90% the time that financial institutions have to achieve atomic delivery versus payment, and make sure that their cash and securities are all in the right place. Now, it used to be that banks were able to use that day to throw humans at the problem and use manual processes in order to intervene. That's not going to be the case any longer. So there's entire workflows that are going to have to be digitized and reimagined, and that's something that at Euroclear we have applied AI to. So one of the tools that our customers use, EasyFocus Plus, is now going to deploy AI to predict settlement fails and help mitigate that, those predicted settlement fails, by instructing customers how they are able to achieve delivery versus payment and get their securities in the right place at the right time. So really, as we go on this journey, one of the fundamental limitations is the workflows that we have today are just going to need to change, and that takes investment.
Thank you. Yeah, well, we'd love to talk about cost of capital as well, but we probably won't get onto it. I mean, moving now maybe to the more sort of, as it were, how does one manage risks, compliance, sort of related questions. Sam, you talked about it, as Nick has, about authentication, capturing the original sort of authentication of consumers. There's also the really interesting question of redress in payment processes, and that level of trust in that. I mean, what do you see as the key issues that regulators need to be thinking about if they're to preserve trust and be able to deliver a form of redress in the sort of payment systems processes?
Yeah, and there's a lot for regulators to think about, and if we think about we're talking about the deployment of AI in financial services, but guess what? The bad actors are also deploying AI, and so we have a lot of data on fraud in the payments ecosystem, and round about 25% of card testing attacks that we see involve 1 million or more transactions directed against a single business. So that's what AI-powered fraud looks like in practice. And so I think a couple of things there. So one is, obviously, from the industry standpoint, it's important to make use of the full suite of tools at our disposal, and often that means using AI models that are based on millions, if not billions, of data points to root out bad actors and to identify things like suspicious transactions. I think it's partly about the mindset that we approach policy in areas like KYC, where I think if we continue to rely on a kind of digitized analog version of the world, so where you take a scan of your passport and then you upload it onto a system, I think if we rely solely on that, then we are potentially making the ecosystem less safe rather than safer. So I think we need a much richer understanding of how we can use all of the technological signals, whether it's device telemetry or whether it's network analysis, so we can use all of those data points when we are onboarding a customer or when we're undertaking transaction monitoring. I think to your point on authorization, I suspect that today the industry will rely on existing concepts and updating those. So we have the concept today of the merchant-initiated transaction under PSD2 and under the PSRs in the UK, and so I suspect that will get the industry so far. But in the future, you can imagine that we'll probably need the concept of an agent-initiated transaction, and what does authorization look like in that particular flow? And I guess that the final thing is that regulators needs to be both kind of that they obviously need to be acutely aware of the risks that they see in the ecosystem or the risks that they're concerned about, but they also need to be forward-thinking and open-minded. So, for example, it's welcome that the UK authorities are updating secure customer authentication, because agentic is one of those areas where actually taking more of an outcomes-focused approach to SCA is going to be useful. And then just a macro level, things like Sheldon Mills' review into AI in financial services for the FCA, I think is an example of looking to cast the net very wide in looking at how AI is being applied and could be applied in payments and other parts of the retail financial services sector. Taking a step back and then saying, okay, what are the implications both in terms of the emerging risks that we need to be aware of, but also how does the existing rulebook apply when we're seeing a multitude of new technologies being applied across many, many parts of the economy.
And Sam, if I could just tag on to that, obviously you're a global business. It's a question of how does the rulebook apply? At a high level, how do you view the state of play in terms of a coordinated regulatory response or set of expectations globally, where your products are different markets? Do you feel that framework of understanding is there, or there's not enough sort of cross-jurisdictional understanding between regulators around standard setting and expectations? Is there a bit of a void there?
Yeah, so as far as standard setting is concerned, I do think that there's going to be a certain obligation on the industry itself. So you see that in the development of protocols, various protocols for agentic commerce, and of course that matters to a merchant because it's like the merchant wants the USB-C version so that they can use one framework to plug into multiple LLMs. They don't want to have to rebuild that system so that their inventory is discoverable by 4, 5, 6, 7 different systems. So there is going to be an important industry piece, which is partly around innovation, but also partly, if we look at previous waves of innovation in payments, it's probably going to be about to use the traditional parlance, what do the scheme rules look like for agentic commerce? I think looking at global regulators, I would say that there are definitely efforts to coordinate the information flow. I think inevitably because in areas like payments, national and regional regulators will be starting from a different place. And actually, authentication is a really good example of that, where we have one system broadly across the European Union and the UK. That looks very different in the US, and it looks quite different in Asian jurisdictions. So I wouldn't say that we're there yet, but I would also reflect that in retail financial services, it's quite common for us to be moving. It's slightly different speeds in different directions, and actually for there to be a good amount of cross-fertilization as well. So I don't think that's necessarily a bad thing.
Yeah, no, thank you. And Richard, coming to you on that idea of risk, wholesale markets, obviously there's lots of really important questions, settlement finality, predictability of markets. Where do you see, how do you think about AI in terms of market risk, market correlation? Are those areas that you think are well understood, or a lot more work needs to be done to understand what could happen?
Yeah, I think certainly more work needs to be done. Whilst we're early in the ecosystem development from an agentic AI perspective, thinking in terms of data and data mobilization, actually, there are some themes that we've been working towards for a while, and in particular as financial market infrastructures. So, I think one of those, you mentioned settlement finality. Our participants in this CREST settlement system rely on being able to understand legal title has transferred once they send what is known as a properly authenticated, dematerialized instruction. So this goes to the consent point. Once you have sent that message, the infrastructure affects legal finality, and it has happened, and that is auditable, it is explainable, and the financial market infrastructure has an indemnity. If there was fraud or a crystallized cyber risk that came with that, if we receive that instruction, legal finality has changed, and then it is incumbent on the legal system or the authorities to see what problem occurred down the chain. And I think there's going to be more necessity for those sort of legal setups as we have data infrastructures that are going to be needed to handle all this AI flow. But of course, that is an ecosystem where our participants are regulated entities. We know that they have robust controls in place. There may be all sorts of different players in a new model. And when it comes to financial services, it'll be very interesting to see how the policymakers and authorities cope with a very different sort of ecosystem.
No, indeed, we come back to a question that was raised at the last session: should AI systems be regulated? And we've just run out of time to answer that question. But we do have a couple of minutes if anyone would like. I've got a last question for Nick, but any questions from the floor for our panelists? I think we're okay. You raise your hand. Well, to close then, we've just got a minute. Nick, I was going to ask you, coming back to the consumer, open banking, that question around sort of fairness, and how do we make sure that all consumers get a fair go and access to the technology?
Yeah, I mean, that is $1 million question. How does everyone get... I mean, one of the things about open banking is about fairness and the fact that it's liberalization of data, everyone's data, and there are different swathes of individuals within that, from low-income individuals who want their data in order to get much more budgeting, etc., all the way through to high-net-worth individuals who are looking at more, should they move their money between different investment funds and things like that. So in that sense, baked it in. I mean, that's a really good question for AI, because where is AI aimed at? Is it maximizing profits? Are we talking about high-net-worth individuals? And actually, the first deployments I saw, which might not be the only ones out there, but the ones I saw were aimed at high-net-worth individuals, booking different restaurants, hotels, etc. But yeah, and it's there to get better deals for everybody, right? So if as long as you've got access to the data, if you want a better energy deal, if you want a better broadband deal, it's there for. That's the whole point of it, right? So that's the fairness aspect. Yeah. But I mean, in terms of what AI is looking at, what are they prioritizing? Because the one thing I would say about open banking is there's never been a financial model associated with it. So everything is free. So the banks effectively give the data via API, which is your data. but there's no commercial model. We commercialized it with something called CVRP. Someone asked me about it previously, which is the first payments product which has got a commercial model associated with it in the UK. It's launching. There's a company set up to do it, an industry company. We went through a year of designing all the rules and everything. And that's the first real sustainable model that we're trying to build in. But for AI, where is the financial model? Because the thing about fairness is, where are people going to get value for this? Mm-hmm. What you see with data is it's difficult to build a financial model unless you're selling something to somebody somewhere.
Well, there's certainly going to be a lot of change. But thank you very much, Nick, Sam and Richard. I think fairness is a lovely place to end on. Lots of questions raised, but thank you very much, and back to you. Thank you.
I really enjoyed that, actually. We incorporated tents and bananas, but then also quite a lot in there around agentic AI payment systems, how we need to reimagine what that looks like. Going back to the session before, the importance of authenticating identity. How do we do that with an AI agent in the context of payments as well? So there's still an awful lot to noodle through before that one is a big go live, as the case may be. We are at our final panel. So I'd like to invite our panelists to come up to the front. Please leave that space for me on the end. And what we're going to be looking at is the future of financial services in 2030. So at the end of the day, we're going to look forward and imagine what will be the new data requirements and how will AI reshape the financial services sector and other industries going forward. And for that discussion, I'm joined by some excellent panelists. That's my seat, Mohit. You have to move along. Lovely. And super. I better go there. I better go over and sort it out. Excuse me. Terrific. Thank you very much, everyone. Now, I think everyone's heard quite a bit from me, so I'm going to ask each of you to introduce yourselves. I'm going to start at the other end of the table, please.
Wonderful, thank you. So my name's Angela Isom. I'm the Global Chief Privacy and Responsible AI Officer at Arthur J. Gallagher & Co. We're a global insurance, reinsurance broker, employee benefits provider, and claims administrator. I've been working in privacy for 30 years, which is an awful thing to say, but I've really enjoyed it. And delving deep into AIO probably really over the last 3 years.
Super. Thanks, Angela. Walter.
Cool. I'm Walter McCann. I'm a principal working at UK Finance, which is a trade association for financial services companies. I see a few of our dear members in the audience, so I'll try to make sure I do a good job. So I cover privacy policy, but also these days more and more AI policy, which maybe ought to be in my title, but per comments by someone earlier, titles can get too long, so it just stays as it is for now.
Thank you. Stefan.
Hello, Stefan Gehring. I'm the Global Privacy Officer, Trustworthy AF Officer, and Compliance Officer, talking about long titles, and responsible for responsible AI, privacy, and compliance more generally at Blackboard. Blackboard is a US-based education technology company providing kind of a learning management system and similar tools to universities. And before joining Blackboard, I actually was in financial services working for Citigroup with Vivian and Barclays as well.
Thank you very much. Mohit.
So Mohit Savaya, 30 years in banking, 5 large Wall Street banks. I'm between roles currently. I think I come from a very geeky, technical perspective, so I'm not sure how helpful that's going to be with the audience, but let's see. I also have done SMF roles for the last 7 or 8 years, so have a reasonable kind of a regulatory perspective on this topic.
That is super. Thank you very much. I think one of the reasons the titles are getting so much longer is that we all started doing one thing and it all grew. It started being something to do with technology and data, and it just gets bigger and bigger all the time. And we're doing more and more. So well done, everyone, for having super duper jobs that expand across the whole of the organization. I think that horizontal view is absolutely super. I wonder if we could start the discussion with you, Walter. When we were having our prep call, we were talking about what's going on in the space, particularly retail and consumers, AI assistance, transacting on behalf of consumers and so on. And I know that you've been doing some work with your members at UK Finance on this. Would you mind to just spend a little bit of time telling us what the thinking is there in terms of members and what you think is important in that space that you'd like to share?
Sure. Thanks, Vivian. And it's always the danger with being on the panel at the end of the day. You've got these people before you that are going to sort of take bits and pieces of what you were going to talk about. So I'm going to cast around a little bit and see if I can add something a little bit new. So I think Vivian's referring to the Mills Review, which has been mentioned, 4 weeks to answer 20 big questions about the long-term impact of AI on financial services, retail financial services. And those 20 questions each had 2 or 3 questions in them, so let's call it more like 50 questions. So it was a very wide-ranging piece, and a lot of sort of the key points have sort of been touched on already. But I think there are kind of maybe sort of 3 sort of boxes or camps of sort of policy questions that are going on at the moment. So one where I think with sort of everything's broadly under control, but sort of work to do still is on sort of financial institutions wanting to use AI to provide services better, how to manage the risks in that space. We've got lots of regulation in place. People have sort of talked about this already. Principles-based approach, outcomes focus, etc. in the UK. So sort of the question is, over time, are there going to be particular gaps that are going to appear? Are there going to be particular areas where we might need guidance? So there's a little bit of debate there with some sort of actors saying it would be quite good to get some more guidance from the FCA in relation to AI, and other parties being a bit cautious of that, not wanting to get something which might go rapidly out of date, might not work for certain business models, etc., and sort of preferring sort of an ongoing sort of iterative engagement between sort of industry and the regulator, wherever there might be pieces of uncertainty. Maybe that will give rise to guidance eventually, but that we're not quite there yet. So that's sort of one place. So that seems to be, I think, going in a sort of a sensible kind of direction. There are a few questions to work through. And then a couple of sort of trickier buckets. So one being so the fact that our members have a lot of really exciting data about their customers. So there is sort of potential for government and others to start expecting financial services institutions to use that data to do things that are sort of in the public interest, so to speak. So the thing which springs to mind in particular is sort of detecting and supporting vulnerable customers. There's been discussion about should firms be using their data to detect and intervene where customers are gambling too much? There's even been sort of suggestions that something should be done to try and identify signs of suicide in advance. So I think there's a tricky debate there around sort of what sort of the right expectations are for financial services firms. So as the AI technology becomes more developed, we can do more exciting things with it, but how many of those things ought to be sort of expected of the sector? And then the third bucket around, which is also a bit tricky, is around customers and customers having access to AI assistants and the exciting things that they will be able to do with those. And the previous panel talked quite a lot about that. So I probably won't go too much into it, except to say that we probably are going to have to see some regulatory adjustments over time to make sure that some of those pieces still work when you've got AI actors sort of taking decisions and transacting on behalf of customers. And I'm sure that'll come back around again as we talk.
And is there something specific in there, or have you responded specifically around the amount of advice that consumers appear to be taking from AI? I mean, I personally think it's really quite worrying that people would want to make decisions based on their financial future on questions that they put into AI, given that its purpose is to please and often will hallucinate to do so. But was there anything specific on that?
Well, I think that is so.
I mean, given the disclaimers we have to have about financial advice in the financial services sector.
Well, I was playing with an LLM the other day, and it told me that it definitely could not provide me with financial advice, and pointed me to some parts of the handbook which explained why. But with 3 questions, I nonetheless got it to recommend me 2 specific products. So wasn't that hard. So yes, that certainly did come up. So the question of sort of the regulatory perimeter certainly seems pretty important. So, you know, how should we expect, clearly if a firm is giving financial advice using AI, if it is in fact financial advice, then that we would think should be subject to the old same risk, same regulation sort of approach. So even if it's being delivered in a different way using an LLM as opposed to a human financial advisor, you would expect there's still to be sort of regulation in place, or the regulation to cover that, such that the customer outcomes are the same. I guess there's an open question around, if you try quite hard to make your LLM not do that, but it is possible to get it to do it anyway, how to address that? And I guess that's a question for the FCA.
Is it an LLM issue or is it a customer issue?
So I guess you could say from a policy perspective that the answer is to tell customers, please don't do this.
Yeah.
But I did it, and I...
Walter, honestly, thank you very much. That's great. Stefan, can I come to you next? So, I mean, obviously you've worked at a regulator, you've worked in financial services, and now you're working at Blackboard, so very much in the educational space. But I think in the educational space, we often have a lot of similarities, perhaps, with financial services. Can you talk a little bit about what we're seeing with agentic AI or AI generally in the education space? We hear all the interesting stories about it, but how is it working in practice, and what are you doing to mitigate potential risks?
Yeah, thank you. I think it's obviously a very different sector, but I think there are some things that are in common. I mean, AI has been hugely disruptive, again, I guess like in every sector. And I think we have kind of two main things we have been grappling with in education and education technology. One was, and many of you will be aware if you have children in kind of higher education, is plagiarism. So obviously everyone very soon recognized that these LLMs are very good at writing essays. So our customers obviously wanted something to identify if students use it. And we actually had a project with a startup to kind of try to come up with a solution that would actually reliably detect AI plagiarism. And what we come to the conclusion is that one is it's actually not too bad at detecting AI. Secondly, it has, however, a lot of kind of false positives, particularly for non-native speakers. So it would flag a lot of people outside of kind of English-speaking countries that where English is second language. So big issue with bias discrimination, of course. And then I think the third thing that we kind of, when we looked at this, that we realized is that it will be a cat and mouse game that we will not be able to win, because these LLMs will get better. These LLMs are built by companies that are much better financially supported than we are. So this is just not something that we can win. And I think the lesson here is that sometimes the control that you try to implement is creating more harm than it actually benefits. So we completely switched over and kind of tried to help a customer with what's called authentic assessment, where basically you send your student away to do a project, be that, do some video interviews on something and then write it up, because that's much harder for an AI to kind of crack and try to imitate. But obviously that's a matter of time, and that will be there as well. So that's kind of what we learned from this. And then the second piece more recently is the agentic browsers, so kind of the whole agentic AI piece. And again, I think that's not education technology specific. So we've had, we know that some students use agentic browsers like Comet to log into their learning management system. And what happens is if I do that and use my agentic browser, then from our perspective as the service provider, the website host, it looks like Stefan is logging in because it's the browser with Stefan's credential. And it looks like Stefan is doing all this work. And there's no way really to technically identify, is this actually me behind it, or is this kind of the agentic browser doing all the wonderful work there? So this is something that we have started working on, but obviously this is something that's needs kind of an industry-wide effort to come to a determination what are the right standards and protocols. Google actually has done some really interesting work. They call it agent observability, but they kind of want to make sure that every agent has their own specific ID. It's not a shared ID with the user, so you can kind of clearly determine what is actually a human individual kind of taking some action, and what is actually an agentic browser that has taken any action. So that's kind of the two big issues that we have been grappling with.
Crikey. I mean, I've heard some stories about kids seemingly doing really well at school, and it comes to exam time, and then they absolutely flop. And then they realize that it's because everything that's been submitted in the coursework to date's been via one of these, well, it's been via AI, really. But when it actually comes to them explaining themselves in exam conditions, it's not possible. The other sort of anecdotal I have on that really is, interestingly, in universities, I'm aware that a number of universities are accepting that students are using AI and then actually encouraging them to use it, but in an augmentation manner as opposed to a replacement. And I mean, that's ideally how we should be using it in business as well.
Yeah, so we actually, kind of, our colleagues have kind of written white papers on this, and we actually have built in specific kind of AI functionalities where we encourage instructors to give students tasks where they interact with models and kind of in a creative way, reflective way, where they need to write up their experience to kind of try to build that AI literacy.
Okay, super. Thank you so much. Angela, you come from the insurance sector, and AI in the insurance, oh gosh, I can just think of fraud and all sorts of fascinating things. Could you share with us some practical examples, which need not be at AJ Gallagher, they might be industry examples that you have come across, about how AI is being used in that space, some of the risks, some of the opportunities, and how you're managing that?
Sure. So I think I'd probably bucket use cases into three things. So efficiencies, and I think you've heard a lot about efficiencies from everyone earlier on. But those efficiencies can be really, really simple. Like we're a multinational organisation in over 60 countries. We have to translate things into different languages just to communicate with our own colleagues. So that automated translation. Coming up with ideas for marketing, for sales campaigns, so that ideation use case. We receive and we work with our clients and with our insurance carriers, our markets, huge amounts of unstructured documentation. And we have to extract certain information out of that and put that into structured databases. So that document ingestion, extraction of data out, transformation of it, ready for ingestion into other systems. Things like policy checking. So if a company has an insurance policy and it's going out to tender, and we're as a broker, we're looking for at least the same coverage that they have in the year before, then we might have 4 new insurance quotes to check, and you can do document comparison to make sure that coverage is there. Or your client has themselves their own clients that are demanding that they have certain insurance coverage and they want evidence of that coverage. So we'll ingest contracts, extract out those client-specific insurance requirements, validate that coverage is there, and then create the certificates of insurance. So efficiency is really in how we do stuff. I would say actually improving the accuracy, because I mean, one of the big concerns everyone has about AI is it inaccurate? But the reality is humans do processes today, and we're not all perfect. So it's for us in our risk appetite, we're looking at, is it actually improving the accuracy of the work that is currently undertaken by humans today? And then I think you're seeing things like insights. So what insights can we give internally to our brokers and our producers about their clients? And then what insights can we give to their clients about themselves and about the marketplace? So that ability to kind of put chat over data, I think, is really powerful. And then on things like claims administration, summarizing a claim. Claims can have hundreds of different documents attached to them, but where is the claim in the process? What are the key features of that claim? Again, providing a client with chat capability over a claim. And then I think in employee benefits, so benefits, automated benefit summaries and plan highlights. So, and I think the last bit would be things like customer experience and outcomes. So that if you're calling into a call handling center, that might be to buy insurance or to make a claim on insurance, like knowledge surfacing, that the right information to like automatically know what the customer is actually asking and pulling the right information out for them, or using AI to do complex call routing based upon this is the type of question this person has, let's route it to the right agents that we know are going to be able to answer those questions, or going to be able to, this customer appears to be quite unsettled in where they are. Let's route them to an agent that is actually faster at actually closing out queries and getting to things there. So lots of different examples. And then my final comment would be around getting that AI adoption within your own business, because you can come up with these fantastic use cases, but ultimately we're asking people to use it. So things like as simple as automated expenses. We all hate doing expenses, but being able to just photograph your receipt and it automatically then expenses that for you. Just getting people that trust in the technology and going, actually, yeah, I can see that this has got something in there for me. So that's really where we're kind of focusing and what I'm seeing in the market at the moment.
Yeah, so I think we often forget that so many of our human processes that we now seem to be so keen on were actually deeply inefficient. And, I remember from just when I was back in banking, that moving from manual to automated processing reduced error rates, improved accuracy, sped up the time the process took, all those sorts of things. I think the challenge now, of course, is how do we make sure that automation, particularly with generative AI, is in a way that is still beneficial. I'm an absolute nightmare on the phone when I encounter one of those chatbot things. But maybe we won't go down that road. But one of I think you mentioned two things. One was around the back office efficiencies, which I think we're quite familiar with. But also the bit that struck a chord with me was, how do we encourage our people to use AI in a way that they actually feel and understand the benefit? Because often, we just tell them it's good for them, and they don't necessarily experience that at all. So I'm going to come back to you on some questions on that. But Mohit, as a CIO and a CTO, you're at the coalface of innovative technologies, particularly AI. What has resonated with you so far in terms of this panel? And given that what we're supposed to be looking at here is sort of how are we using agentic AI and new versions of AI, where do we go moving forward in this space? Can we move beyond efficiency to innovation in a scalable way that actually makes financial sense and delivers real outcomes? There's those three magic things, isn't it?
Yeah, so thanks, Vivian. I think I'll probably try and be brief and cover it in two aspects. Firstly, what I heard from the panel here as well as the previous panel around the 10,000 bananas. I'll probably kind of put it in promise and peril, if that makes sense. I do think this is sort of a crystal ball gazing 2030, and I do think that in the next couple of years, even just knowing from my own last firm, we have 100 live agents running within the bank. And I do see a vast amount of, I'd say hundreds, if not thousands of digital employees. And the fundamental rhythm, and that's the key change of the working place having changed. The rhythm of actually how work gets done changes, where the manual nature is reduced. Agents are doing a lot more just to sort of bring it alive. Today, you'd go to an AI agent, you want to buy a house, you'd say what mortgage options you have. 2030, again, crystal ball gazing, you'd be asking, I want to buy a house. It goes and selects the house for you. You select it. Agent goes and runs away, looks at the best mortgage options, selects it for you, does the full deed, the approval, the KYC, comes back, gives you the digital signature, and does it all for you. Purely done by an agent. Talk about software coding. Even as of today, there's Copilot, but there's a billion other tools for software developers. We had realized around 14% efficiency around software developer. The software developer starts to write some piece of code, and the agent comes up and says, is that what you're trying to do? Yes. So we were sort of trying to measure acceptance rates. Even at a very rudimentary level, it doesn't do entirely what Satya says with Copilot. It's sort of 80, 85%. But the fact is, in 4 or 5 years, those horribly annoying chatbots are actually getting better. Actually, in some places, if you go, the thing actually looks like a human talking to you. And that's just the amount of time it's taking to learn. So the amount of time the LLM takes to learn is quite significant in terms of, that's quite important in terms of its own maturity. I do think that there is a huge amount of opportunity in the manual process space and efficiency. I'd say probably just a couple of points on perils, and then I'll probably cover just some 4 foundational things in terms of enablers, if that makes sense. On the peril side, the ROI for agentic is, at least in my mind, isn't really firm. There is very clear evidence that it's quoted 30% CAGR in the next 5 years in terms of value it adds. Roughly 15% decisions made by AI agents within any financial services firm. But I think the full life of the ROI, I don't think is fully established. I think we talked about GPU and power costs. I'll give you just one quote. To run one rack of compute, one rack is, just think about a cupboard full of computers in any financial services firm. It's about roughly, on average, £5,000 a year. With a simple agent, AI agent, that's £100,000 if you just want to use AI agents. And now if you want that AI agent to reason, I do logical if-then analysis, but maybe I'll pick that and I'll do some more work, that goes to £500,000 for a single agent. And if you stretch that against the amount of efficiency in terms of people efficiency you're going to look to net out and take out, I think is the ROI in the very long term is the question in my mind. I do think that is not going to prevent firms from not doing it, because this has now become a competitive reality, and this train has left the station, so it's not like that's going to have to prevent. But I do think that the overall ROI for enabling AI agents is still up in the air. I think on the peril side, I would say, yes, I think we talked about hallucination. Whatever your SME knowledge is, I've tried this many, many times. At the 5th or 10th question, when you're interrogating any of the LLMs, take your pick, ChatGPT, Gemini, Anthropic, you will see it'll start to hallucinate, which is quite scary. So if your specialism is regulation or insurance or education, between the 5th and 10th question, because you're the SME and you're asking, no, but why this and why aren't you looking at that? It'll always seem like it's giving you the right answer, but at the 10th question, and it's just a random number I picked because I found out, like, why is it that it's getting to the 10th question? When I've dug deeper and deeper, and I've done it for technology questions, it starts to hallucinate. It starts to give me answers which are just complete porcupines. And it actually, even if it doesn't have proper memory management, it forgets kind of where it was first giving me some context, right? This is quite scary. So this point of peril where you were just saying that they used to rely a lot on Google answering things. They're going to rely a lot more on AI because it sounds like it's really well-structured, neat. It really sounds like the answer, right? So there's a real risk. I'll just say one or two other things. The emails that we get suddenly for your 25 million, your ancestors have died and you owe 20, the emails are getting much more better, right? The English is fantastic. It really looks real, right? So the AI and the fraud aspects around AI are quite significant. I'm not sure 2030 is when AI will be effective in the quantum realm. Quantum is not in the 10, 15 years. It's here. It's in the 5, 7 years. Now, luckily, I don't think fraudsters are going to have access to that kind of compute capacity. But quantum is going to become real. Cloud providers will extend that as a probable capability. That is catastrophic, having that combination of power with AI and quantum, right? And then if I may, I just had some 4 foundational things a firm needs to really enable AI, at least from a technology context. I'll try and cover them really quickly. First is, and I'll sort of try and rate them. So most financial services firm have some kind of data quality program, right? Call it Lake, Mesh, some kind of thing which is bringing data together, standardizing it, putting definitions, making it structured, and trying to extract all the messiness that we have on all the unstructured data. That's a necessity. Without that, AI is going to hallucinate even more. So firms really need to do that. I'd say probably currently it's a 5 or a 6, rapidly moving to a 7, 8 in terms of getting better. Responsible AI is not an afterthought. I think this has probably been talked about all day. And the fact is, I just gave the example on hallucination. The thing does hallucinate. And so it shouldn't be an afterthought. Before the first model ever comes live, you need to have the full suite of responsible AI instantiated. You need to have people trained to be able to question the models and model drift and all those processes that you need in place. The operating model needs to fundamentally shift. So traditionally, firms have CEO, exec committee, organization. Shifting that to a more horizontal, multidisciplinary teams
as well as kind of shortening and taking out all the noise between client voice to product and prioritization. If that moves to daily, that's competitively really advantage. Today, it's a disaster. I mean, you ask any of the financial services firms, client voice getting to product and prioritization is weeks, months, in many cases it's lost in some CRM system because it never really made it to the person that's actually going to affect the change. I think with an AI scaled up model, that's a necessity in my view. Reskilling your staff is another necessity. So software developers do they write, for years and years they've been writing code which says, build me a screen, build me a button, bring this data, extract it, load it, etc. That's moving to really coding intent. That's very different, right? And I don't mean just prompt engineering, it's actually coding intent and managing intent. And building a data culture where it's not just the board's job to really question model outputs, but every individual in the organization to be data skeptics. Where did this data come from? To be curious. We put curiosity, I'd say skepticism, healthy skepticism being the foundation of the data culture. Where did you get this output from? Why did it bring this output? Why isn't it that? All the normal human questions that we would ask if we have one of our team members come in and say, here's what we want to do. And lastly, I'll just make a quick point, because I'm a techie, that we talk about this issue with legacy in financials. It now does really come to roost. And I don't just mean old hardware. I mean the two main derailers to legacy being monolithic platforms. If I did a show of hand, I won't do a show of hand. Most core banking platforms are monolithic platform. Monolithic being line 1 to line 500,000, and there's about 10,000-ish functions, capabilities stored within that one single piece of code. In order to change that, in order to change your core banking platform, people are moving to microservices, and those microservices will transform into agents at some point. But transforming a monolithic bank or a monolithic financial institution into an agentic organization in 4 years is not possible. So firms aren't really moving along that way, right? And doing the hard work to try and move to microservices to make it an agent-enabled is going to be difficult. And lastly, having an agile operating model. Most firms sort of have agile on the edges, and agile is a techie thing. Those tech guys do all this Scrum and all this Jira and daily stand-ups. It's not a business thing. That won't work either. So I put those 4 kind of foundational tenets in order to really be able to exploit the full capability of AI.
Super. So you are the disruptor on the panel. Now, I had some questions for the panel, but I'm also conscious of the time, and it is coming to the end of our day. So I wanted to open it up to everyone in the audience, actually. I think we've heard so much that is super interesting in terms of where we're going with the Mills Review, in terms of financial services and the opportunities. Well, I suppose, what is it that financial services should be doing with AI, particularly, for example, with vulnerable customers, in order to help them? Where do our responsibilities start and where do they end? So it's that big question about, even if I could, should I? Then we've heard also about, in the insurance sector, there's a huge amount of opportunity in terms of the back office, fraud detection, making things simpler, more effective, more efficient. But there's possibly also a big challenge in terms of fraud coming through. So on one hand, we can detect fraud better because we can see where there are multiple claims, but on the other hand, actually they get very good at actually doing it to us, so to speak. And on the educational side, I mean, that's a fast evolving space. Do we educate differently? Do we test differently in order to move around this? I think, Mohit, one of the things that struck me most about what you were talking about was around the cost efficiencies, because we know the energy cost, but actually the way you visualize that and articulated it almost calls into question whether AI does give or deliver efficiency gains if the use of AI is so expensive. Because, you know, if it's a cost of 50,000 for an employee or 500,000 for an AI agent, you've got to have that AI agent operating at an exponentially increased level of efficiency to justify that cost, as the case may be. So anyway, so that was my sort of quick 3-second summary. I'm going to look at my long distance eyes now. Questions for our incredibly informed panel? Yes, please, the lady in green. In fact, I'll take a couple of questions, so go ahead.
Thank you. Just a quick question about the efficiency of the AI, especially to Mohit. You mentioned about, and I experienced that exactly the same, the deeper you go into your prompting, it starts hallucinating. And and then it does not remember what you have said in the beginning. And that's an issue, even with trained systems. And my question is there any new development or something that is coming to prevent that? Or how do we deal with this? Because this is a serious risk, especially in legal services where I am.
Thank you. I'll tell you what, we haven't had any questions from this side of the room. Who's going to ask a question on this side of the room? Excellent. Off you go, Sonia.
What do you see as the biggest regulatory challenge by 2020? Would you say it's ensuring fair access to data, governing the use of AI models, maintaining financial stability, or something else?
Super. Well, I think that's two questions to get us going. Over to the panel.
So I think the problem of having memory saved as context, that capability exists today. But it's likely you're using an off-the-shelf LLM model. Within companies, there are ways and means. Technology exists today within your AI environment to be able to save something called context memory. So that exists today, and it'll save your context memory. It will remember what you first asked to what you ended at the end. I think the point about compute is if you have this running in a sprawl mode, it will clock up pretty fast in terms of your compute capability, and hence the cost spirals up. And especially when you're simply asking, there's a Q&A going on between your AI and your compute, that's one cost. But when you have an agent that's doing real reasoning and decisioning for you, like a human. So I'd say, actually, I pulled this data, this doesn't look right, let me go and find is this the right thing, what humans would do? That's, if you're expecting an agent to do that, then the cost spirals up even more, if that makes sense. So firms do have the ability to have something called maintain context memory today, which most firms that have AI enabled in their companies, they will have context memory stored. But they are limited because there's a cost of storage associated to your point, right? I don't know if that answers your question, sorry.
Thank you.
Just a clarification. I understand that the intelligence of the current AI system is based on statistics.
Could you just use the microphone? Thank you for the online audience.
Yeah. I understand that the current intelligence of the systems of AI is based mainly on statistics rather than on reasoning. You mentioned just now agents which are based on reasoning. Does this exist?
The foundation of reasoning is statistics and probability. So reasoning is just a human term we use. But AI, underneath AI, the real secret sauce of AI is statistics and probability. AI doesn't understand, in the way the models are, they don't understand reasoning as a human concept. I don't know if that makes sense.
Yes.
So you have 1 billion data points. It actually uses very foundational, the bits that we learned in arithmetic in our school, it understands statistics. And we don't have the time, I could explain eigenvalues and eigenvectors to actually draw out how does it make a decision on something, right? It sort of takes data points, puts it in a little thing, and it draws out where the clusters are, and then it draws a line and says, oh, that's the maximum amount of clusters. The decision has to be around there. So you translate reasoning, statistics and probability is translated into reasoning, right? And interestingly, there's a lot of, we can talk about this offline, there's a lot of human books that are written on how the human brain works. And underneath our human brains, also we use statistics and probability as a way and mean to sort of assess, decide as to what we are going to do. So reasoning also forms the foundation of human minds, believe it or not.
And some of us think more with our logical mind, and some of us think more with our emotional mind.
That's true.
So to Sonia's question, would anyone like to respond?
I don't like to pick one because I think that's a really hard question. So I'm going to talk about something that I don't know that we've talked about yet, which is the senior manager regime. So if you think about, we're talking about potentially daily stand-ups for use cases to get things approved into development and then into production and ongoing monitoring. But the senior managers are responsible for the AI output, and so are they now part of this process? And I think about being a multinational organisation. I've been talking to some of my colleagues who are here from the UK and having to kind of reinvent all this governance, corporate governance that we have, to accommodate for those particular requirements. So I actually think the time and Mohit talks so eloquently about how the AI works. I don't think your average executive right now has the level of understanding to be able to really identify what those risks are and whether or not what you're producing and showing as your evidence that it's working well. Are they really in that right position? So I think that training and education at that executive team level is your number one priority, because they ultimately are accountable for this in the roles that they hold under the SMCR regime.
If I may add just quickly to that, I would say I think you're spot on with that. And I think just to the specific question, I would put a huge weight on consent, explainability, and disclosure. Disclosure being the first thing. And it was something Walter and I were on a mutual committee in a couple of years ago, working with Bank of England on this, and disclosure being sort of the start of everything. It's like I don't know, smoking cigarette is harmful for your health kind of thing. Mm-hmm. Here's an output that you've got that, by the way, is an AI output. To start with that is important. And explainability, not just in terms of blurby terms, but exactly what have you done, what reason have you used in human language, in human reasoning language. And I think consent was covered quite a lot. I do think in financial services especially, consent-related law cases are going to rise quite a lot. And I see regulation coming hard down on data and consent as being of value derived through that consent or not, given consent. Like art's a great industry. We're seeing so many lawsuits against the Wall Street Journal about, art being whatever. But I see financial services really not having the processes in place for having consent being a major issue.
Not everything is consent-based, though. Walter, I'm sorry, Stefan, you were wanting to say something?
Yeah, I think one of the big regulatory challenges, across sectors will be, I think, as agentic AI becomes more powerful, and we're going to have hundreds and thousands of agents working together. So I think what's going to be really important is the kind of, the ecosystem protocol level. So we need to start building privacy, responsible AI, and security into those protocols. Like the internet, where, if you interact with a website, it's now secure. This HTTPS, that was like 2000, you probably know better, 2014, 15, where the big push was. Before, many of these connections were not encrypted. And then kind of as an industry, we moved into place. And I think the same needs to happen with agentic AI.
Super. I'm really sorry, but we're at the end. Oh, Walter, did you want to say something quickly?
Well, I was just going to say quickly, I think that ecosystem point, I think, is a good one. With as consumers are using more AI agents sort of to intermediate between themselves and financial services firms, it's a sort of a slightly different kind of puzzle to I'm a financial services firm and I want to implement AI. Trying to figure out how you're going to be impacted by customers using them is going to be challenging as well. And there may be some sort of analog to that in the wholesale space. But just in the retail area, if I fall for a fraud online, I can often get my money back thanks to Section 75 of the Consumer Credit Act. I think that's what it's called, the CCA. We have authorized push payment, reimbursement fraud if I get tricked into executing a push payment to a fraudster. If my AI agent is getting tricked into fraud, how should that interact with the model? And there are probably other sorts of examples which we haven't thought of yet, where they're having somebody sitting between the consumer and the financial institution may impact how sort of that ecosystem ought to be operated in a safe way.
Basically, it's re-architecting everything that we know today. So, on that basis, you've got, in one sentence, is my challenge to you, what is the conversation that we will be having in 2030? I'm going to start with you, Angela, first. One sentence.
It's been really hard. I actually think it would be, this has been like an amazingly fast, hectic, mad, crazy, governance-rich 4 years.
where everyone who's trying to govern the use cases of AI will have to be massively upskilled in their understanding of how AI works and what risks they're going to present back.
Okay, governance focus. Walter, what's the conversation we'll be having in 2030?
What does my job now require and look like? It's probably something like that.
Okay.
When I did my last year of high school in Argentina, and I was the only person there who couldn't work out square roots by hand because I'd always had a calculator back in New Zealand at school. There's going to be, over the next 4 years, we're probably going to be using these things in unpredictable kinds of ways. I'm not sure quite what my job's going to look like.
Stefan?
Well, a bit provocative. Digital Omnibus Part 2.
Fair enough. Mohit?
I was trying to think about a disastrous movie, but I'm not going to do that. I would say excitement, and particularly around talent, and given we were leaders in open banking, this should be the place where the UK should really lead the charter, and I think we've got the right heads and the capability to really get that balance right between promise and responsible AI.
Super. Thank you very much. Please join me in thanking our amazing panel. I'm just going to move over here to do a quick wrap-up. So it is the end of our day, and my goodness, we've had an amazing journey on data, AI, and the financial services sector. Before I say a thank you to everyone who's been involved in putting today together, I just wanted to run through some of the thoughts that I have picked up today, which may not align with yours, but it's always good to have a little compare. So we started the day with some of my opening remarks around where the UK leads and where we are perhaps following and what we need to do to make sure that we lead in AI and financial services going forward, building on our regulatory sophistication, our ecosystem depth, and honestly, our expertise in relation to financial services. So we started off the discussion about scaling AI and quantum, and hearing about how quantum can really help with LLM compression to actually achieve some of the efficiencies that we actually need to see. We also learned that AI isn't an add-on. AI is now very much part of the financial services ecosystem. It is embedded into our existing workflows. So if you think that it's not already in place, you're sadly mistaken. It's very much a part of what we're doing at the moment, particularly if we're working with third-party vendors or SaaS systems, because it's already part of what they do. We then had a little update on litigation. I love the Air Canada chatbot case. I'm waiting to have a discussion with the chatbot where I too can get some compensation for something horrible it said to me. But there's an emerging body of litigation in relation to AI. It's something that we all have to keep our eyes on, because that is shaping our legislation and how we behave going forward. It was interesting, I'm aware of the ISO standard, which was published in December 2023, and it was interesting to hear that we finally have one organization that has achieved an AI accreditation. Watch this space and see who else comes next. We also had an interesting discussion around the importance of managing risk and governance. It came through as a recurring theme throughout the day. And then there was a really great question there, actually, about legal privilege. And the answer to that question on legal privilege wasn't actually a legal answer. It was very much a practical answer. And it was about actually how do you ensure practically security and confidentiality controls in order to then realize that legal privilege. So it was actually, I thought it was one of the best answers I've heard in that space, and something to think about very, very carefully when we're looking to still cover something with legal privilege in the AI context. When we moved on to implementation and culture, we heard about experimentation and regulatory discipline not being mutually exclusive. And I think often we think they are. So that was actually a really great bringing together of those two concepts. The importance of mitigating risk in order to support experimentation as well. So moving away from experimentation is no guardrails to actually, it's all about risk mitigation. what was really interesting is when we had a following discussion, it was about the difference of approaches to risk. In certain jurisdictions, we manage the risk before we even start to experiment, whereas in other jurisdictions, part of the experiment is about managing the risk. And we're seeing AI advance and grow and evolve so much more quickly in those jurisdictions than in the other jurisdictions where actually we're managing it before we've even started it. I can't say which is right and which is wrong, but we're certainly seeing a difference in terms of the pace of change. We also heard that the continuous AI transformation is something that we should be using to empower our employees rather than something that is being done to them. And in that way, we will develop ways of leveraging AI that are enhancing rather than replacing, as the case may be. It was lovely to hear that governance is not preventing innovation. Certainly, as financial services organizations, we're highly, highly regulated, and it was super to hear so much about this is the governance, these are the controls, this is how we address risk, this is what we're thinking of, these are the practical steps we're taking, and this is how much we're innovating. In fact, we're reviewing, so many different concepts and proposals each day, so it's not squishing, it's actually enabling things to come to the fore in a way that's manageable and that is much more likely to be successful. Fascinating data point, only 4% of generative AI concepts that arise within firms actually go into production, basically because they don't meet the relevant standards. So you can see that in two ways, one of which is, my goodness, the ROI is not great, is it? But the other part of it is, oh, well, gosh, the governance is actually working. So we're not letting through the net all the things that are probably going to cause a disaster. We really are being selective to be effective. And then, of course, we heard that bad actors are not constrained by governance and that we're very much in an innovations arms race at this stage. A great presentation, actually some perspectives on insurance. So insurance for assurance, and really interesting to hear that concept around insurance as not just being the payout, which enables me to go ahead and do whatever I'm wanting, but actually supports preventative behavior in those organizations that take out the insurance. So in order to be insured, there are expectations around behavior which promote preventative measures that actually enhance better governance. But basically, the insurance sector in this space is still very nascent. It's growing, it's evolving, the practices are still very, very new, but it's certainly an area that is receiving a lot of attention. We then cast our eyes toward the US and learned about cyber as part of not just attacks on companies, but it's very much a geopolitical issue. It's a nation-state issue. Cyber is actually being used in offensive as well as defensive approaches in a geopolitical way. The quantum and AI race was again reiterated as something that is incredibly real. And part of that is driving the step back from a highly regulated approach in the US. But if you think that the US is unregulated, we heard quite clearly today that that is not the case. There is a lot of regulation, legislation, proposals for controls, governments, laws, etc. But the approach in the US at the moment is very much in flux, so that it isn't coordinated, but what we are seeing is a lot of coordinated thinking coming to the fore. In any event, we very much know what the direction of travel is, which is if the US is in a race, then they're going to, some of the guardrails are being removed in order to be successful in that particular area. We did a little survey. I love it when we do those Slido surveys. 53% of companies are productionalizing, I can't remember what the exact word was, AI, but they're having difficulties measuring the outcomes. So we're all starting to use AI in production. It's something real, but how can we effectively measure the benefits? Excellent discussion on thinking about governance by design, so not something you apply afterwards, but very much part of the innovation process. And that the current processes are designed to manage people. And when we're thinking about AI agents, we need to be thinking about our governance and our processes in a very different way. What else did I have written down here? Success, if it's defined as a demo, is not success. I think that speaks to a lot of what many of us have been doing, which is we have these POCs or these demos, and actually, is that success? No, it isn't. We need to be thinking about AI in the context of, what are the criteria for success? Is it clear? Are the objectives properly funded? And is the implementation pathway understandable? We heard about the work from the DRCF, the work that they've been doing in relation to agentic AI. It sounds like there's a lot of resources out there and information for us, and a lot of increased regulatory coherence. And it's an area where the UK is absolutely setting the pace. We also have been invited to consider the new digital library, and they're looking for volunteers to put their hand up to engage in user testing that new digital library, which sounds really, really exciting. In terms of the regulatory environment, we were reminded again about supply chain risk, agent-to-agent interactions, how do we possibly control them, and the unique role that digital ID is going to play, and an increasingly significant role, not only digital ID in the concept of individuals and corporates, but how do we apply that to agentic agents in order to make sure that they have the right access, we're able to identify who we're dealing with. There's benefits as well as risks in that. Then we heard about agentic payments, and I have to say that was a very interesting discussion, apart from tents and bananas. But basically, how do we invest in the change to processes today that will also include AI? That we're updating our online identity authentication to actually include AI agents as well. And then our final session was very much on looking ahead. Where do we think it's going to go? We've recognized and realized lots of ways in which AI can be helpful. We, I think, are very aware of the areas of risk that we need to mitigate and to manage. I think we also understand that we're changing the rules. The entire environment is changing around us as we embrace AI. And we haven't quite managed to get a full grasp on that return on investment. So while we think it might be delivering efficiencies on one side, it's actually costing us a lot on the other. And when I say costing us a lot, it isn't just in terms of the cost of the energy. It might also be in the cost of developing the future talent pipeline as well. And how do we get those future supervisors and overseers of AI if actually many of their jobs and their training playgrounds are now being removed through AI? So lots to think about. I wonder what our discussion will be in 2030. I think it will be a different discussion from today, but the themes will still be the same. It'll still be around risk mitigation, and it'll still be around how do we effectively govern AI, and I think it'll be about the dynamics in that space. So that was my little summary. I couldn't touch on everything, but there we go. There was just so much in today. So the first thing to say is to thank you to all of our delegates, those online and those in the room, for your questions, for your engagement, and I hope you found today as stimulating as me. A huge thank you to our speakers, our sponsors, and our partners. There they all are, up on the screen, so you can see who each of them are. Without them, we wouldn't be able to have today, so thank you very much indeed. Just as a housekeeping matter, after today you will receive a follow-up email, and in that there's an on-demand version of the whole of the day if you missed any of the sessions and you'd like to see them again. And they will also receive copies of the slides, etc., that were shared today, because I know some of them were really informative and interesting. I think the final thing is actually, if you wouldn't mind to fill in those questionnaires, it really helps the team here to make sure that our conferences going forward meet all of your requirements and are totally up to scratch as ever. And then finally, actually to thank the City and Financial team for doing such a superb job in terms of the organization today. It runs as clockwork as ever, which is absolutely super. And I have to say, the thing that always impresses me about the events is the quality of the discussions. When we've got so many amazing experts in the room, it's really super to hear the quality of those discussions. I always learn a lot. Have I forgotten anything, Ekaterina?
May I ask
My absolute pleasure. Have a safe trip home, and I look forward to seeing you at the next event. Good night.